Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Anushi Vakharia, and we'll take you through the next 1 hour of trade. It's a little bit of a muted couple of days of trade that we've seen for the benchmark Nifty 50 and indeed for the rest of the market. And we are nudging just about into green territory, or we were just a few minutes back, and that continues to be the case. It's been chop and churn. And in trade yesterday, you saw a bit of a recovery and a pullback from the low point, but that was sold into towards the end of the session. So the last hour of trade, you saw quite a bit of selling. I wonder if this will hold and whether you can have an elevation beyond that 24,600 level and whether that holds for the benchmark Nifty 50. But let's take a look at the constituents and see what the big contributors are, if at all, because today's been a pretty bland sort of a trading day. And you have ITC, you have Kotak Mahindra Bank, and by the way, there was a note on Kotak Mahindra Bank with a buy. We'll get you details of that in just a bit. ICICI Bank, HDFC Bank. So if in trade yesterday you had the financials that were under pressure, and a raft of stocks, of course, beyond financials as well. You had the defense pack that was under pressure. You had IT as a pack that lost about 1.6%. Today you have consumption. You have a few names in the private banking space that are leading the gainers, but Infi continues to be one of the big losers in trade, and so too will be the IT pack, which is down another 0.4% in trade today. But the Nifty Bank up about 0.4% higher. I wonder what the other sectoral indices are doing, and you have the defense pack that is bouncing back just a tad bit. So the private banks, as you can see, as I pointed out, gaining about 0.8%, but Nifty Defense also gaining about 0.4%. What's not doing well for a second day, at least in a row, is Realty, which was one of the other big losers apart from defense in trade yesterday. And auto as a pack is also losing a little bit of ground, down about 0.6%. Anushi, not too much in the way of individual stock news per se today, right?
Yeah, even in terms of, the stock-specific action, was rather a muted set of day that we are looking at. But, just a couple of names that do still stand out is something like a CG Power now. And this is on the back of its first OSAT facility that we are looking at. That's the semiconductor facility coming in place. Huge capex plan and focus for this one. Alex, as you were just talking about, Kotak Mahindra Bank, that is in focus again. And this is on the back of the UBS note that we have seen, wherein the brokerage had upgraded the stock to a buy rating as well. Other than that, a couple of names in terms of fundraising which were buzzing included the likes of Jain Irrigation as well as Himati Singha.
Himatsinka.
Yeah, that's the pronunciation that we are looking at. Thanks for that. So that is what we are seeing. And GE Power was one of the other stocks in focus, wherein they seeked an injunction, and this is over an invocation of bank guarantees up to 78 crores that we are looking at. So overall, not much in terms of stock-specific action also that we are looking at currently. But, defense, a couple of names that do stand out includes the names of Apollo Micro and Idea Forge. Now we are seeing strong gains continuing for the last few sessions in these two counters. So that's something interesting that was there.
Yeah, certainly. And I think Ola was also buzzing earlier on in the session. I wonder if it is still. We'll speak about a lot of these stocks. By the way, if you want to get in touch with us and you're tuning in for the first time, a couple of ways for you to do that. One, the number on the top of the screen, that's where you can message us, or you can call us, and we'd love to hear your voice this Friday. We've got Sameer Dalal of Natwar Lal and Sons Stockbrokers joining us as always on Friday. And we've also got Gaurav Sharma, who's Associate Vice President and Head of Research at Globe Capital, joining us this Friday. Gentlemen, thanks so much for joining in. Good morning and happy Friday to you. Let me take the first question. It is on NCC. And we've got Ekambaraya, who's writing in from Hyderabad, and he's asking about this company, National Construction Company. He's holding 250 shares at a price of 224. He's not really told me whether it is for the long term, but knowing Ekambaraya, the fact that he's written in many times, I assume that he is planning to hold for the long term. So therefore, Sameer, on the fundamentals, would you suggest getting in at these prices to average his price?
Yeah, I think one can average NCC. It's a good counter, decent order book. Their operations continue to do well. The big issue going forward will be if they can continue to get the orders. I don't see that as a major concern. So given the fact that the stock has seen a decent correction, if you look at it maybe a year plus ago, it was, I think, around 260 odd levels, and it's been consolidating in this range for quite some time. I think the next run-up could very well come in anytime soon. So yes, definitely you can add some average sum at this point. The fundamentals are fine.
Okay, you can add at this point. It's a good company according to Samir. Manav is calling us from Gurugram. Manav, very good morning to you. How can we help you today?
Yeah, hi, good morning. Good morning to everyone. So my today query is on Suzlon.
Yeah.
So I'm holding 100 odd shares at an average price of somewhere around 60.25. So like the stock is, I think somewhere trading around like 56 or somewhere around that trademark right now. So I have a view of about 2 to 3 years.
Okay.
So what should I do at this current juncture? I want to add, would it be a good idea to add more at the current price so the average price can come down? I have a tenure of like 2 to 3 years.
You have a tenure of 2 to 3 years. I got it. I got it. So therefore, since it's a slightly longer term question, forgive me, Gaurav, I'll come back to you in just a bit. But on Suzlon, Samir, would you suggest holding? Would you suggest adding?
Yeah, so I like Suzlon as a company, and I'll tell you as a disclaimer that we own it and we are buying it. We think the long term for renewable energy is very bright, and that for Suzlon especially will keep doing well as their operations, keep scaling up. So they're working at about 42% operational utilization at this point of time. This year they're expected to end at about 65 odd levels, and by next year hopefully they'll be able to take it up to 85% utilization. As they scale that up, what you will see is the operating leverage play through, because that will lead to increase in margins and profitability. Plus, their OEM business will keep scaling up as they set up more and more capacities. So that side of the business, which operates at almost 80% operating margins, will keep growing, and that will lead to an increase in profitability. So at that point, the valuations will start looking a little more reasonable. So from that perspective, I would say you can add on. Only thing is, I mean, you're adding on at 56 and 60, there's not much of a difference. But definitely buy some. But if it falls more, I would advise you to add a bigger chunk at that price. We are very positive on Suzlon. We feel the next 2 years, the stock will probably rally all the way up to 100 plus.
Okay, so that's the view that we're seeing in terms of fundamentals. But Gaurav, let me come to you also. What's your view on Suzlon?
Yeah, morning, Arushi.
Morning.
Morning to the panelists and to the viewers. So I do have a very much of a positive view. As a house, we are also positive on renewable energy and specifically on Suzlon. I do believe that these are good attractive levels to actually look for a medium to long term perspective. Yes, in the immediate near term, some kind of a further slide towards say levels close to 50 is pretty much possible, but that shouldn't be a worry if we are having a time frame anywhere higher than 6 months. I think it is a good time to add into this stock.
The view that we are seeing for Suzlon in terms of both the fundamentals and technicals. Now, the next question is from Vineet Datta. He's writing to us from New Delhi. He wants to understand the outlook for Coal India for the next year end is what we are seeing. He holds about 195 shares, and this is at a price of around 398 that we are looking at. Currently facing a loss on this counter. Samir, let me come to you. What's your view on the stock?
So if you're looking for a good dividend yield stock and, stability, not really looking for multiplication of your money, I think Coal India is a good investment to be in. But it again depends on what you're looking for. So for me, when I invest in stocks, I want to see my capital grow, not only earn a dividend from it, right? And with Coal India, even though they have a monopoly not monopoly, but they are the largest player, and very few other people can compete with them in India when it comes to that size, scale, or anything. And coal is constantly going to be required for thermal plants and all of those. So, but the growth is going to be very muted. I'm not expecting the top line or the bottom line to grow by more than 5 to 7% a year. So if we assume that you get a 5% stock appreciation, you get a 6% or 5% dividend yield, you're talking of 10, 11% return in a year. If you're happy with that, yes, you can hold on. But like I said, that's not my investment philosophy. So it depends on what the person's investment philosophy is, right? If he wants stability and decent returns, which far out to bank FDs, this is a great investment. But if you're looking for capital appreciation, not the right one to be.
Okay. All right. We've got our next caller on ICICI Bank, I believe. Interesting. Ravi is calling us from Hyderabad. Ravi, hi. Thanks so much for calling us. How can we help you today? Ravi, I can't hear you. Maybe. Yeah. Please go ahead.
Well, yeah, my query is on ICICI Bank.
Okay.
So is it a good time to buy, or shall I wait for further few more days to get more correct? And just want to know, is there any possibility to the stock to go down.
Okay,
And I
possibility
can
of the
hold
stock.
for 1 to 2 years.
Got it. Okay, so therefore, Gaurav, since he's looking for an attractive buy price, I don't think we need to spend too much time thinking about the fundamentals of ICICI Bank. Would you suggest that he should wait, or can he buy at these levels?
Well, absolutely. It is among the largest private sector banks and has posted stellar set of numbers, rather the best set of numbers in this quarter as far as the private players are concerned. And as far as levels we go about, I think he can buy some quantity here and a further dip if he gets somewhere close to 13.50, 13.60, he can add up there. No point missing the stock and looking for a larger dip, because I don't really think any kind of a 5, 7 or 10% dip is coming anytime soon.
Okay, so that's the view that we are seeing for ICICI Bank. Next question is from Arjun. He's writing to us from Kolkata. Wants to understand a 7 to 8 month time frame view of Paradigm Phosphate, whether it's the right time to invest in the stock. Gaurav, let me come to you on this one again.
Paradigm has done well in the past couple of sessions against the market. It is holding on to its part, has appreciated also. I think this is time to add up to the position. A breakout above 235 is more likely and can be expected in the next week itself. So one can consider adding around those levels.
Consider adding Paradeep Phosphates. If I remember correctly, post its results, it went up quite substantially. So keep that on your radar and watch out for the results as well. We've got our next question all the way from Dallas, Texas, where it's just past midnight. And Sai Karthik says that he's a regular viewer of Ask Profit. He doesn't miss the show. I'm glad for your dedication, Sai Karthik. But he's asking, he's got 30,000. Oh, no, apologies, I missed a zero. He's got 3 lakhs of rupees to invest, and he's wondering whether he can put money into Samman Capital at this point, and he's only got a 6 to 12 month time frame. So therefore, since it's a relatively short-term question, I'm going to circle back to you, Gaurav, on whether you have an opinion on this on the charts.
We have not started tracking Samman Capital as a company, but as far as NBFCs are concerned, we are bullish on the pack. We are eyeing good numbers coming in for Aadhar, Aptus, and Shriram Finance for that matter, so he can consider any of those.
Let me go across to Samir to see if he's got a specific view on Samman Capital. Samir?
Yeah, I do have a view on it, and we track it quite closely, and I'm quite positive on Samman Capital, trading at a price to book of 0.5, housing finance company. Their entire older book is being run down. Their new book is growing at a very aggressive pace. They're going to be working on co-lending business model, which means that they will take up 20% or 25% of the loan, 75% will be sold down to the banks or co-lend with the banks, where they will earn an extra percentage or 0.5%, anywhere between 0.5% to 1% based on the agreement that they have, which will allow them to increase their ROEs. And if news has it right, you're getting Himanshu Jain joining very soon. You'll probably hear the announcement soon. He's just stepped down from Suzlon. What we hear from the market sources that he's going to take over the management of Samman Capital. If that happens, I think that will be the first positive trigger. Fundamentally, all good. We think it's a good long-term story, 8 to 12 months. I don't have a call. I mean, I'm sure it'll do well. But if you have a 2-year horizon, I see this being a multi-bagger, at least 3x.
Very interesting view from Samir is what we are saying for Samman Capital. But with that, let's move on to our next caller. Asim is calling us from Ahmedabad. Hi Asim, how can we help you on the show today?
Yeah, hi. I'm holding Action Construction Equipment around 190 to 200 shares, I guess.
Okay.
And average at around 1149. So I want a view, should I hold it for a short term, or is it a good pick for a long term at this price?
Asim, how long have you been holding the stock?
It's approximately a month.
Okay. Let me go across to Gaurav for his view on this counter. Gaurav, what's your view for Action Construction?
Firstly, yes, from a trading perspective, it has reversed well enough from decent support levels. And I think levels close to 1150 to 1200 can be expected in the immediate near term, something like a month or so. I think he can consider this stock.
We've got our next question from Mumbai, and Jigar is writing in. He's asking about Indegene. And by the way, Jigar says that my Hindi is good. I'm going to take that as a compliment. So, but he says he's got Indegene at a price of 550 rupees per share. 100 shares is what he's got. And he's wondering whether to add more at the current price. He says he's a long-term investor. So it's very close to the current market price. Samir, I wonder if you have a view on the fundamentals.
Yeah, so we do track it. I mean, it's a decent company. It's in a very niche space when it comes to assisting hospitals and the medical space when it's doing the thing. Where we find difficulty with Indegene is purely on the valuations, right? It's trading at about 60 times trailing. Based on our projections, also it's trading at about 48 times 1 year forward. I mean, not 1 year now, 6 months forward, you could say. We need to see how the growth eventually pans out if they're able to achieve these numbers. I don't want to say what growth we have typed in for FY27 because at the moment we also don't have that much clarity on FY27. But valuations are a bit rich. If the stock corrects closer to maybe 450, 480, that might be a better price to get into Indegene at this point. And that's my view at least.
But hold is the view, right? If you're currently invested, hold is a view.
Yeah, you can hold. It's a good company. You can hold on to it, yes.
Okay. So we've got Snigdha calling us from Hyderabad next. Snigdha, very good morning and welcome back to the show. How can we help you?
Hi, good morning. So my query is regarding Tech Bazaar.
Okay.
So I'm holding 66 shares at 1502 rupees.
Okay.
So I just want to know at what levels can I add more?
Okay. And what is the time frame that you have in mind, Snigdha?
Short term and long term both. I mean, I just want both views.
But should I get your view on the technicals or should I get your view on the fundamentals of the stock?
Technical.
Okay. So then, Gaurav, what's the view on Vatek Wabag? She's holding with losses of about 2,200. Buy price is 1502. Should she hold? Should she add more?
Firstly, our share hasn't fallen much from her buying price. It is trading at 1468, considering that it is a good company into the business of water cleansing. I don't expect very much of a downfall coming in this stock. A level close to 1425 can be looked upon for averaging a position.
Okay, so that's the view that we are seeing for Tech Wabag. That's stock in focus. Now, the next question is from Chandra. She's writing to us about ABB, holds about 200 shares over here and is looking for a short-term outlook on this particular counter with the time frame being around 3 months. So, Gaurav, let me come to you on this. What's your view for ABB India?
See, from a short-term perspective, the only positive I can see on the chart is that the stock is trading near their support levels. And yes, a bounce can be expected towards 54, 53, 54, 5500 levels. But I'll suggest him to have a little longer time frame because it is a good company. So hold it for at least 3 to 4 quarters more, and the stock can garner good returns.
Right, so that's a view on ABB. We've got our next caller, Shailaja from Hyderabad. Shailaja, very good morning to you. How can we help you?
Yeah, good morning, Alex.
Good morning.
I want a view on Reliance Power as I hold 300 shares at price of 62.
Okay.
So if I hold for 6 to 1 year, can I able to recover my loss? And is it good to average it out because it's trading around 45? So I want view from Samir, sir.
Okay, but can you tell me when you bought this stock, Shailaja?
Maybe 1 or 2 months back.
Okay, so when you saw the price start to drop precipitously, that's when you decided to try and get in. Is that right?
Yeah, actually, when it is high around 68, I purchased and averaging out till 62.
Got it. Okay.
Later that it when the news came out.
Yes. Okay, so it was when the news came out, you already held it and then you averaged the price.
Yes.
Got it. Okay, Samir, then, so therefore, sorry, you were saying something?
Order book. They have a good order book and they are good at Reliance Power and Reliance Infra are good at their sorry, I could not get it.
No, don't worry about it. So you've studied the fundamentals. Basically, you've tried to look at the company and you've looked at the company and you decided that it's
regarding the case, the price is coming down.
Sure, I understand. All right.
I hear you.
All right. Let me ask Samir what he thinks about what to do with this, right? So her average price, Samir, is 62 rupees in Reliance Power, and I don't know if you're covering the stock. What is the advice that you would give?
So I don't actively cover it, but I do study the company. I do know the company and I've looked at it. But the only reason we don't cover it is the issues that it has with its management, right? So the stock was on an absolute tear, and then the news came out that Anil Ambani had been summoned by the ED and there were raids. And, ever since that news has broken, I think the stock has been tumbling, both the Anil Ambani group, Reliance Infra and Reliance Power. These corporate governance issues will probably persist. Everyone loves a great turnaround story. I mean, Suzlon was one of them, which we discussed earlier. We hope that Anil Ambani can turn his two companies around. I'm sure he's got the bandwidth probably to do it. But the corporate governance issues that keep creeping up, it becomes very difficult as a fundamental analyst to say it's a buy. Had it not been for all of those issues, given where the company stands, valuations are a little rich, but the growth opportunity is very strong. So you got to take a call on whether you can bear the volatility in a stock like Reliance Power and deal with some of the corporate governance issues that can keep creeping up. If you're able to bear with that, I think over the longer term, Reliance Power can deliver results, but you're going to have a lot of ups and downs and, moments of panic along the way.
Okay, so that's Reliance Power, the view for that one. Thanks for that, Samir. Gaurav, coming to you for the next query. It's from Kanti by writing to us, and she wants to invest about 50,000 in a positional trade and wants to understand which stocks should she specifically invest in. What's your view regarding this?
I think it is better to stick around with with those areas that will remain ineffective from the current tariff-related issues that the entire globe is suffering with. So I guess something like a cement stock which has performed well, Ultratech Cement can be one option. They are holding up at their higher levels, doing good. And I also suggest her to look at L&T, Larsen and Toubro. The order book is really strong. The company has been doing really good. We have been tracking it very closely, and we firmly believe that in the short to medium term and even in the long term, this company has all the potential to perform really well.
Seeing a spike in trade today, I wonder what's happening. Not tremendous gains, 1%, but the last couple of minutes have been good for the stock. We've got a next question. We've got a call, I believe. Yeah, we've got Anchal calling us from Bengaluru. Anchal, very good morning to you. How can we help you today?
Hello. Good morning, everyone.
Good morning. I love your energy. Especially, is it because it's Friday?
Yes, definitely. Long weekend approaching.
Okay. How can we help you today?
Yeah. So I have about 51 stocks of Route Mobile.
Okay.
And the average is 1475.
Okay.
So I'm a long-term investor. So I was wondering, should I hold? Should I buy more? Or how should I go about with Route Mobile? Because if you see the trend, it's downward only.
It is.
So I'm not able to gauge how to go about it.
Am I right in assuming that you've tried to average as the stock has fallen?
Yes, I did try to do that initially, but now I'm in a soup what to do next.
I understand, yes. Let me go across to Samir on this because the buy price is quite elevated and the losses are accumulating at this point. Unfortunately, 1475 is the buy price, Samir. So 800 plus is where it is. What would you do?
This is one of the companies that we've not studied at all. So ask Gaurav if he can give a view on this, please.
We go across to him on the technical side. And Gaurav, not just the technicals, what would you advise in this kind of a situation where you've seen a 40+% decline in the stock? What should a long-term investor do? From a technical standpoint, ultimately, you have to place a stop somewhere. And as painful as it is, you have to book it. And unfortunately, when you don't do that, the losses tend to accumulate. History has told us this repeatedly.
Well, absolutely. I mean, not much has to be said as far as charts are concerned. It is completely every now and then hitting lower lows. I think today itself also the stock is trading near the lowest point, and from a technical point, it is a clear avoid. Now, if we look at its financials, no meaningful growth as far as sales is concerned is there. The margins are, quarter on quarter basis, they are coming down, and so are their profits, and that's actually hampering the stock price. So I'll advise her to take a hard call. It is better to exit. At least no further losses would be seen.
Anshul, I'm so sorry that I'm the bearer of bad news, but unfortunately, sometimes that decision has to be taken. And I wish you luck on the next investment, and maybe we can take that up on the other side of the break. Maybe we'll ask Samir what you can do if you are to sell this at a loss. What would you buy? Do stay tuned for that, though. We'll be back on the other side to take more of your questions.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
Welcome back. You're watching Ask Profit. I do want to tell you that the Prime Minister Narendra Modi, is overseas. He has gone to Japan first, from where he will be going to China, and a lot of top-level meetings taking place over the weekend. So this is something that we're tracking very, very closely, and we're anticipating that he's going to speak in just a short while. Those visuals that you see on the side of the screen are live, where he is addressing the India-Japan Joint Economic Forum. There he's at the stage. Let's listen in to what he has to say.
Business leaders, देवी और सज्जनों, नमस्कार, कोनिचिवा। मैं आज सुबह ही टोक्यो पहुंचा हूं। मुझे बहुत खुशी है कि मेरी यात्रा की शुरुआत बिजनेस जगत के दिग्गजों के साथ हो रही है, और उसमें से आपसे बहुत लोग हैं जिनसे मेरा व्यक्तिगत परिचय रहा है। जब मैं गुजरात में था तब भी, और गुजरात से दिल्ली आया तो तब भी, आप में से कई लोगों से बहुत ही निकट परिचय मेरा रहा है, और मुझे खुशी है कि आज सबसे मुझे मिलने का अवसर मिला है। मैं प्रधानमंत्री इशिबा का विशेष रूप से आभार व्यक्त करता हूं कि वे इस फोरम से जुड़े हैं। उनके बहुमूल्य वक्तव्य के लिए मैं उनका अभिनंदन करता हूं। साथियों, भारत की विकास यात्रा में जापान हमेशा एक अहम पार्टनर रहा है। मेट्रो से लेकर मैन्युफैक्चरिंग तक, सेमीकंडक्टर से लेकर स्टार्टअप्स तक, हर क्षेत्र में हमारी साझेदारी आपसी विश्वास का प्रतीक बनी है। जापानी कंपनियों ने भारत में $40 बिलियन से ज्यादा का निवेश किया है। मात्र पिछले 2 वर्षों में $13 बिलियन का प्राइवेट इन्वेस्टमेंट हुआ है। JBIC कहता है कि भारत सबसे प्रॉमिसिंग डेस्टिनेशन है। जेट्रो बताता है कि 80% कंपनियां भारत में एक्सपांड करना चाहती है और 75% ऑलरेडी मुनाफे में है। यानी इन इंडिया कैपिटल डज नॉट जस्ट ग्रो, इट मल्टीप्लाइज। साथियों, पिछले 11 वर्षों में भारत के अभूतपूर्व ट्रांसफॉर्मेशन से आप सब भली भांति परिचित है। आज भारत में पॉलिटिकल स्टेबिलिटी है, इकोनॉमिक स्टेबिलिटी है, पॉलिसी में पारदर्शिता है, प्रेडिक्टेबिलिटी है। आज भारत विश्व की सबसे तेज ग्रो करने वाली मेजर इकोनॉमी है और बहुत जल्द विश्व की तीसरी सबसे बड़ी इकोनॉमी बनने जा रहा है। वैश्विक ग्रोथ में भारत 18% योगदान दे रहा है। भारत की कैपिटल मार्केट्स में अच्छे रिटर्न्स मिल रहे हैं। एक मजबूत बैंकिंग सेक्टर भी है। लो इन्फ्लेशन और लो इंटरेस्ट रेट्स, करीब $700 बिलियन के फॉरेक्स रिजर्व है। साथियों, इस बदलाव के पीछे हमारी रिफॉर्म, परफॉर्म और ट्रांसफॉर्म की अप्रोच है। 2017 में हमने वन नेशन वन टैक्स की शुरुआत की थी। अब इसमें नए और बड़े रिफॉर्म लाने पर काम चल रहा है। कुछ हफ्ते पहले हमारी संसद ने नए और सिंप्लीफाइड इनकम टैक्स कोड को भी मंजूरी दी है। हमारे रिफॉर्म्स केवल टैक्स प्रणाली तक सीमित नहीं है। हमने ईज ऑफ डूइंग बिजनेस पर बल दिया है। बिजनेस के लिए सिंगल डिजिटल विंडो अप्रूवल की व्यवस्था की है। हमने 45,000 कंप्लायंसेस रेशनलाइज किए हैं। इस प्रक्रिया को गति देने के लिए डीरेगुलेशन पर एक उच्च स्तरीय कमेटी बनाई गई है। डिफेंस और स्पेस जैसे सेंसिटिव क्षेत्रों को प्राइवेट सेक्टर के लिए खोल दिया गया है। अब हम न्यूक्लियर एनर्जी सेक्टर को भी खोल रहे हैं। साथियों, इन रिफॉर्म्स के पीछे हमारा विकसित भारत बनाने का संकल्प है, हमारा कमिटमेंट है, कन्विक्शन है और स्ट्रेटेजी है, और विश्व ने इसे रिकॉग्नाइज ही नहीं, एप्रिशिएट भी किया है। S&P ग्लोबल ने 2 दशक बाद भारत के क्रेडिट रेटिंग अपग्रेड किए हैं। द वर्ल्ड इज नॉट जस्ट वॉचिंग इंडिया, इट इज काउंटिंग ऑन इंडिया। साथियों, अभी भारत जापान बिजनेस फोरम की रिपोर्ट प्रस्तुत की गई। कंपनियों के बीच हुई बिजनेस डील्स, इसका बड़ा विस्तार से वर्णन दिया गया। इस प्रगति के लिए मैं आप सभी का बहुत बहुत अभिनंदन करता हूं। हमारी साझेदारी के लिए मैं भी कुछ सुझाव बड़ी नम्रतापूर्वक आपके समक्ष रखना चाहूंगा। पहला है मैन्युफैक्चरिंग। ऑटो सेक्टर में हमारी भागीदारी बेहद सफल रही है और अभी प्रधानमंत्री जी ने इसका विस्तार से वर्णन किया। हम साथ मिलकर वही मैजिक बैटरीज, रोबोटिक्स, सेमीकंडक्टर, शिप बिल्डिंग और न्यूक्लियर एनर्जी में भी दोहरा सकते हैं। साथ मिलकर हम ग्लोबल साउथ, विशेषकर अफ्रीका के विकास में अहम योगदान दे सकते हैं। मैं आप सबसे आग्रह करता हूं, कम मेक इन इंडिया, मेक फॉर द वर्ल्ड। सुजुकी और डाइकिन की सक्सेस स्टोरीज आपकी भी सक्सेस स्टोरीज बन सकती है। दूसरा है टेक्नोलॉजी और इनोवेशन। जापान टेक पावर हाउस है और भारत एक टैलेंट पावर हाउस है। भारत ने एआई, सेमीकंडक्टर, क्वांटम कंप्यूटिंग, बायोटेक और स्पेस में बोल्ड और एम्बिशियस इनिशिएटिव लिए हैं। जापान की टेक्नोलॉजी और भारत का टैलेंट मिलकर इस सदी के टेक रिवॉल्यूशन का नेतृत्व कर सकते हैं। तीसरा क्षेत्र है ग्रीन एनर्जी ट्रांजिशन। भारत तेजी से 2030 तक 500 गीगावाट रिन्यूएबल एनर्जी के लक्ष्य की ओर अग्रसर है। हमने 2047 तक 100 गीगावाट न्यूक्लियर पावर का भी लक्ष्य रखा है। सोलर सेल्स हो या फिर ग्रीन हाइड्रोजन, साझेदारी की अपार संभावनाएं हैं। भारत और जापान के बीच जॉइंट क्रेडिट मैकेनिज्म पर समझौता हुआ है। इसका लाभ उठाकर क्लीन और ग्रीन फ्यूचर के निर्माण में सहयोग किया जा सकता है। चौथा है नेक्स्ट जेन इंफ्रास्ट्रक्चर। पिछले एक दशक में भारत ने नेक्स्ट जनरेशन मोबिलिटी और लॉजिस्टिक इंफ्रास्ट्रक्चर में अभूतपूर्व प्रगति की है। हमारे पोर्ट्स की क्षमता दोगुनी हो गई है। 160 से ऊपर एयरपोर्ट्स हैं। 1000 किलोमीटर लंबी मेट्रो लाइन बनी है। जापान के सहयोग से मुंबई और अहमदाबाद हाई स्पीड रेल पर काम चल रहा है। लेकिन हमारी यात्रा यही नहीं रुकती। Japan's excellence and India's scale can create a perfect partnership. पांचवा है स्किल डेवलपमेंट और पीपल टू पीपल टाइज। भारत का स्किल्ड युवा टैलेंट वैश्विक जरूरतें पूरी करने की क्षमता रखता है। इसका लाभ जापान भी उठा सकता है। आप भारतीय टैलेंट को जापानी भाषा और सॉफ्ट स्किल्स में ट्रेनिंग दें और मिलकर एक जापान रेडी वर्कफोर्स तैयार करिए। A shared workforce will lead to shared prosperity. साथियों, अंत में मैं यही कहना चाहूंगा, इंडिया एंड जापान पार्टनरशिप इज स्ट्रेटेजिक एंड स्मार्ट, पावर्ड बाय इकोनॉमिक लॉजिक. We have turned shared interest into shared prosperity. India is the springboard for Japanese businesses to the global south. Together, we will shape the ASEAN century, Asian century for stability, growth and prosperity. इन्हीं शब्दों के साथ मैं प्रधानमंत्री इशिबाजी और आप सभी का आभार प्रकट करता हूं. अरिगातो गोजाइमास. बहुत बहुत धन्यवाद.
All right, a few words in Japanese, but the more important statement from Prime Minister Modi in the context of what is happening around the globe, and particularly between India and the US, is exhorting Japanese companies and investors to come to India, to make in India for the world. And I think this is a message that he's going to take to various countries around the world. He's also, as I pointed out before he started speaking, going to China. But we've got a lot of questions that have stockpiled in the meanwhile, and let me go back to some of them. We were speaking before the break about Route Mobile, and the advice, of course, was to sell. And unfortunately, there was a loss of over 30,000. And by the way, Rajesh Bhosle joining us on this side of the break of Angel One. Rajesh, thanks so much for taking the time. Hard advice, but Samir, there are advantages to booking a loss, especially with long-term capital gains. You can set it off against future gains. Short-term capital losses can be set off against both short-term and long-term capital gains going forward, right? So what would you suggest investing in if Anshul has to make that choice? I think you're on mute.
Sorry about that, Alex. I hope you can hear me now.
Yeah.
So I was saying, yeah, the loss unfortunately is quite a large one, and to recoup that is going to take quite a bit of time, right? So given the loss, I would suggest get into something in the banking space, something that has probably not performed as well over the last maybe 6 months to a year. So avoid ICICI and HDFC. Although they're great investments to make, you're not going to get like something doubling in maybe 2 years. If you want to recover your money within 2 years, where I feel stocks could probably see great returns, one is Axis Bank, where they've had a bit of a problem in the last quarter results where they took a technical write-off. Uh, I mean, I had the opportunity to discuss with the management what exactly went down, and I've understood it quite well. Trading, I think the recovery from there is going to be quite okay. It's going to come back quite well. They'll be able to recover some of those NPAs over the next 2 quarters, and then you're going to see write-backs as well. So I think the worst for Axis Bank is in the price. It's 1.4 times book value compared to 2.8 for ICICI and 3 for maybe in HDFC. Closer to 3, I would say 3, but closer to 3. So that is one stock that can do really well. I think IndusInd Bank is another stock, which has gone through a lot of pain. You have the new management that's come in. He's got a clean slate to work from. I think he's going to be able to turn it around quite well. The franchise is quite good. So these are two stocks which could probably re-rate themselves on valuation along with growth. So I would say these would be good places to put some of the money and probably recoup the losses you made over a quicker period rather than investing in something that would maybe take 3.5 to 4 years to recoup the losses.
Okay, thanks for that view, Samir. But next we have a caller joining us, and this is Gaurav calling to us from Hyderabad. Hi, Gaurav. How can we help you today?
Hi. How are you?
I'm good. How are you?
I'm all good, thank you. So I wanted to know how the fundamentals are for Signity Technologies. I have been holding these from the last 4 years.
Okay. Quite a gain that you've made there. Just want to understand, do you want to continue to hold it for the longer horizon? What's your view?
Yes, I want to hold longer. I had another 100 shares which I booked a profit on, and when it doubled, I booked it.
Okay, let me take this across to Samir then. Samir, so, as we can see, he's made gains over this counter. It's been a substantial longer period of horizon also that we are looking at. What's your view on this?
We don't have coverage on this one, unfortunately, again.
Okay, let me go across to Rajesh. Then, Rajesh, your view for this counter?
So as of now, can hold on to it. The short term, we are seeing a higher bottom on the 200 DMA. So expecting a bounce back towards 1880 to 1900 levels. On the downside, 1550 is a very crucial support level. As long that holds, the stock is likely to continue its upside moment.
Okay, so that's the view on Signity Tech. We've got a pretty broad-based question, actually. This one is from Sidhu, who's writing in from Germany. He's been waiting by patiently. He's got a 10-year horizon. He's asking Tata Power, Indigo, Bajaj Finance. I know you listed quite a few stocks, Samir, when you spoke about what you could invest in as opposed to Route Mobile. But then he's specifically asking about any of these large-cap names. Would you buy any of them? And he's got 4 lakh rupees to deploy.
So, from the 3 that he's mentioned, Tata Power is something that I would look at from the simple reason that I think the opportunity in the power space is quite long, especially the renewable side, which we discussed. Tata Power also has the solar arm where they set up solar power plants, solar parks, and also they have their in-house solar power generation. So I think that part of the business will continue to grow and do well. As much as I like the business of Indigo over the last, how they've been performing, airline industry is something I think it's, there's a saying, it makes billionaires into millionaires. So from that perspective, I would choose to avoid it. And which was the third counter that was he asked on?
We're talking about Tata Power, we're talking about Interglobe Aviation and Bajaj Finance.
Bajaj Finance will now be a market performer in the sense that, the high growth period for them, I think, is behind. What they're going to have is competition increasing with Jio Finance coming in. So Jio Finance is going to be targeting the similar kind of customer base. There's, of course, Jio Finance in the early days is right now working on more of home loans, loan against properties, loan against shares. But they will also be entering the consumer space. And, given the kind of reach that they have because of the telecom business, for them to be able to capture market share will not be difficult. And so in the 2 businesses that Jio has started, they're already giving better pricing than what Bajaj Finance is. So I think competition for Bajaj Finance is heating up. Their growth is not going to be the same levels as before because now the base has become a lot larger. So it's a great company, great franchise, will continue to grow, but at a slower pace. So valuation re-rating on the downside is probably higher risk. So I would say of the three, Tata Power makes the most sense to me. In the list, if you ask me, Tata Power, Bajaj Finance, and Interglobe would be the last option that I have.
Okay, Sidhu, I hope that answers your question. So that was quite a detailed explanation to all these counters that we are looking at. But the next question is from Shiv Prasad, and he's holding shares of Tata Tech currently about 68 or odd so, and this is at an average price of 918 that we are seeing. So currently facing a loss of almost 17,000 on this counter. Let me go across to Rajesh for this one. Rajesh, what's your view on Tata Tech?
So this has been an underperforming stock, but somewhere around 630 to 620, we are seeing base formation since last couple of months. So we are expecting a trading bounce considering the oversold conditions and the base formation. Possibly the stock can move towards the levels of 750 to 760. So that would be a key highlight where 200 DMA is placed. So somewhere around 750, 760 charge needs to be rechecked. But on the downside, 630 to 620 is a very strong base for Tata Tech.
So Paytm has made a pretty sharp comeback from low point, but for those people that invested in the IPO, it's been a pretty painful period. Shrikant from Hyderabad got in at that price. 1376 is where he got in, and well, it's made a strong comeback. He's asking when he can, or whether he can average his price at this point, or should he exit? Samir, he's been patient, I think, and he's recovered quite a bit of his ground. Should he continue to hold?
Yeah, I think one can continue to hold. Look, the averaging should have probably been done at lower levels. I will not recommend him to average at this point because, again, it's trading at a high price. I mean, if you look at it over the last 6 months, it's at the highest price it has. So where they've done well is, their network of giving out their devices where they're able to charge a certain amount of revenue. All of those parts of the business are doing well. Their buy now, pay later business is also growing. So they have good distribution reach, and that's allowing them to scale up. But again, profitability has just about come, but for the valuations that they're trading at, it's going to be a while before we can justify a buy on it. So hold on. I think you could probably see 1,500 in the next maybe year, but I would not be looking to buy because you could probably get a correction towards 1,000 before it goes up. So maybe around those levels, it would make more sense to buy.
It is now time, gentlemen, for the rapid fire round, and we'll throw as many questions at you over the course of 2 minutes as we possibly can. The first question is from Priyanka, who's writing from Jaipur, ACC. She's bought at levels of 2,600 and she's wondering whether she can hold to reach her purchase price. So there's quite a bit of ground to recover. Rajesh, what's a view?
Expecting a bounce towards 1900, so can hold on to it.
Okay. We've got United Spirits, which is the next counter, and Mukul from New Delhi is bought at levels of 1,488, seeing losses. Should he hold or exit? Samir?
Hold on to it. It's good company.
Lucky from Ahmedabad wants to know about Genus Power. Are the fundamentals good, and would you hold for a period of 3 years? Samir?
No coverage, sorry.
VRL Logistics, can it be bought for a period of 2 years? Gul wants to know. Samir?
Yeah, I think I wouldn't buy it. If it corrects a little bit, maybe closer to 220 or levels would be a buy, not at the right price, not at the current price.
Okay. PC Jeweler is the name of the counter. Dheeraj Sharma from Chennai wants to know whether to buy this at this point. Rajesh, what's the view?
Can avoid it. It's a very volatile counter.
Okay. Bajaj Consumer is what Sarthak wants to know. About 1 to 2 months is the time frame. He's already bought at a price of 235, which is the current market price. Should he hold? What's the view on the charts, Rajesh?
Also, the chart structure are positive. Can hold. We are expecting 260 targets.
Okay, Mautika wants to know about Shriram Finance, which has been on a falling trend in the recent past. Should she buy it? Samir?
Yeah, one can buy it. I think it's come off a bit, but expect it to remain, a little volatile in the near.
Amara Raja Battery bought at a price of 1,250 rupees. Shinoj from Abu Dhabi wants to know whether to buy more at this price or hold. Rajesh?
Just hold on to it. Exit on bounce towards 1100.
Morpin Labs is the name of the counter. 92 rupees is the buy price. We've got Bhuvaneshwari, who's writing in from Andhra Pradesh, wants to know whether to hold for 1 to 2 years. What's the view, Samir?
No coverage on Morpin Labs, sorry.
Rajesh, quick view?
Avoid.
Okay. All right. Well, we've covered quite a bit of ground. Samir as well as Rajesh, thanks so much for joining in. A happy Friday to both of you. And, viewers, we've tried to take as many questions as possible. Of course, you also had the Prime Minister speak to you, so you got that as a bonus. That brings us to the end of this edition of Ask Profit. From Anushi and myself and the team that put the show together, thank you so much for watching, and do stay tuned. This is NDTV Profit.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
The biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business.
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit.
Hello and welcome. You're watching Know Your Company on NDTV Profit with me, Somit Sarkar, and my colleague Varsha. Well, today's company in focus is Supriya Life Science, a company which is primarily focused into the API business. But before we get into the fundamentals of the company, let's take a look at why we have chosen Supriya Life Science as a company at this moment. Firstly, we would want to understand from the management what is the position when it comes to the pricing pressure in the API market, because API market is quite competitive, right, Varsha?
Yep.
Yeah. The second thing that we need to focus in today is the competitive landscape and the scale up that the company plans to do in the CDMO segment, which is the new segment that the company plans to enter going forward. The third question and the key question, the 20% growth commitment that the management has given, is that conservative given the fact that they're also entering the CDMO market? Will the company aim to grow much better than this 20% growth, that is something that we would want to know from the management. And when it comes to margin expansion, the company is largely backward integrated, and that has aided the company to have a margin which is much better compared to peers. But is there scope for further margin expansion going forward is the key thing that we would want to know. And lastly, the expansion plans. How does the company plan to grow further over FY27 is also something that we would want to know from the management that will be joining it. But before we go to the management, let's firstly understand what the company is all about. Now, if you look at Supriya Life Science, the company was founded back in 1987. It's a generic pharmaceutical company which specializes in manufacturing and exporting active pharmaceutical ingredients, that is API. The company has two main manufacturing facilities, one in Chiploon and the other one in Ambernath. And after commissioning additional plant in the Chiploon capacity, the total reactor capacity for the company will be nearly 932 kiloliter per day. Now, if you look at the Chiploon facility, it has the company has around 40 APIs with presence over 120 countries. It also serves nearly 1,700 customers so far across regions like Asia, Europe, Latin America, North America, and beyond. Now, apart from that, if you look at the company focuses mostly, obviously, the company has 18 products that are backward integrated, and mostly 3 of them are also coming into backward integration going forward. Apart from that, the company is largely into API business. So firstly, let's understand from you, Varsha, what does this API mean, and in API segment, which are the main subcategories that it focuses on?
Yeah, so onto API, what does this mean? Whenever any drug is made, the active ingredient, the main salt is an API. For example, if you're eating and if you're consuming a pain medication drug, so the main ingredient that will reduce your pain will be an API, that is active pharma ingredient. So basically, Supriya makes this API. Now, talking about the therapeutic areas wherein they make these APIs, you have antihistamine, you have anti-allergic and anti-asthmatic, and of course analgesic. So these are the therapeutic areas wherein a company makes this product. So API is in a very simple language is nothing but the main salt, main ingredient in any drug that you eat. Over to you, Soman.
Well, yes, that's what API is, and a very good way to actually explain, Varsha, what API is. Now, moving on, if you look at the next part, the company's export market, as I was mentioning, the company largely exports. It has around 85% exposure to the export market, and nearly 50% of this export revenue comes from regulated market, while the remaining of it comes from semi-regulated or the unregulated market. Apart from that, if you look at the main regions it focuses, Asia contributes nearly 32% to the top line, Europe 41%, Latin America 17%, North America, which is largely US, just 4%, so not much of a worry when it comes to tariff, and the other markets contribute around 6% to the company's top line. But apart from that, the CDMO segment, which is one of the key segment for the company, in fact, they are looking to go big on this. So what does the CDMO segment contribute to them here, and what will it contribute actually?
Yeah, so onto CDMO, the next leg of growth for this company is CDMO business, wherein they are going into new contracts. For example, they have whey protein CDMO, wherein they are finalizing contract with the distributor, and also the validation batches are being supplied. And the other contract that they are bullish on is DSM vitamin D contract, wherein small trial revenues in Q1 has been done, and of course the full year FY26 revenue is expected at around 30 to 35 crore. And the next segment, wherein the contrast media. Now, what is contrast media? Is nothing but whenever you go for an MRI, a dye has been injected so that a radiologist could see the images properly. That dye is nothing but a contrast media, wherein DVs, Blue Jet Healthcare is also into contrast media, and Supriya is also going into it, wherein the commercial launch is planned in Q2 FY26, and they're targeting 20 to 25% of market share in next 3 to 4 years. So, Soumit, the contrast media is the next, so every company has a next leg of growth, For Supriya, we know that almost API has been the cash cow for this company, although they are planning to add new products as well. But this is the next leg of growth when it comes to Supriya.
And that is what we want to know what from the company,
Yes.
how much this will contribute for the top line. But before we get to that, let's look at the rating parameters based on which we will rate the company's performance so far. Firstly, it's income statement, how the company has performed in the past and the recent financials. Balance sheet, again, whether the balance sheet is strong or not. Cash flow, how much of its cash that the company has invested is coming back to the company. How the return ratios have performed. Apart from that, we'll also be looking at shareholding, how the share prices have performed so far. What is the outlook and how does the valuation stand at this moment for Supriya Life Science compared to its peers. So firstly, starting off with income statement. Now, if you look at the company's financials over FY22 to FY25, the 3-year CAGR has been around 10 odd percent. This is not a very strong growth rate, but it's not bad. It's 10 odd percent. EBITDA 7% growth. Margins have come down a bit, but it's just a decline of 200 basis points over FY22 to FY25. And this could be largely because of the changing product mix for the company. On the net profit front, we are seeing a CAGR growth of around 7 odd percent. But again, if you look at the first quarter performance and compare it with the last year, the numbers don't look that good. On a Q-on-Q basis, in fact, it has come down 21%, and this is largely because of an subdued growth in the vitamin and the antihistamine segments overall. But the one segment of the company that reported a strong set of numbers, but the other two segments had overpowered the growth, and hence we are seeing a Q-on-Q decline of around 21%. However, on a YY basis, again a 10% growth. But on the EBITDA front, we have seen a 17% decline coming in for Supriya Life Science in the first quarter of FY26, and this is largely because of negative operating leverage Now, if you look at the margins, it stood at around 35.6%. It contracted by 330 basis points in the first quarter, and this is largely because of higher operational expenses because of upfront investment that the company had done in research and development. However, on the positive side, there was one thing that was positive, that was the gross margin expansion. That expanded by nearly 835 basis points on a YY basis, and this was primarily driven by higher backward integration, improvement in market share, favorable export mix and improved operational efficiency. But how does the balance sheet look like here?
Yeah, so on to also one more thing that I would want to add when it comes to quarterly dip that we have seen is also because of the delay in the production facility campaign due to repair and maintenance done in their one of the facility called Lotte facility. One of the reasons why you're seeing some dip in the quarterly revenues. Now moving on to the balance sheet. So overall, if you see we have given thumbs up over here, because if you see the main thing, the borrowings, company has nil borrowing as of FY25. They have reduced their borrowings from 16 crore to nil. So one of the best thing that any company can do for itself, zero borrowings. And onto the cash and bank, also a pretty good decent numbers, though it has reduced from 158 crore to 79 crore. But overall, if you see a good balance sheet, a healthy balance sheet is what we are seeing when it comes to Supriya Life Sciences, and that's one of the reasons why we have given thumbs up. Onto the cash flow statement, if I were to talk about, okay, so operating cash flow, if you see, has increased, though on the PAT level, that is net cash flow, if you see, has decreased. Now, one of the reasons, because company is doing a lot of investments. So just to give you a breakup onto the cash flow from investing. In FY23, company invested almost 124 crore, and one of the reasons why you're seeing negative cash flow of 70 crore. In FY24, if you see, company invested almost 174 crore, and in FY25 almost 152 crore. So because of lot of investments that the company is doing, lot of capacity expansion and lot of investment is being gone into fixed assets, is one of the reason why you're seeing a stretch in net cash flow. But overall, a positive, rather a thumbs up, because of the good operating cash flow, increase in operating cash flow that company has seen year on year.
Well, yes, the net operating cash flow has increased from 64 to 165 crore. Also, the net cash flow, as you were mentioning, it's negative for FY23 to FY24, but in FY25, they have still managed to report a positive net cash flow despite the investment that they have done, as you were mentioning. Moving on to the return ratios. So hence a thumbs up here coming in for cash flow. For return ratios,
from FY21 to FY25, if you look at, the return ratios have come down. But again, the company has expanded its operation, has expanded its business. So obviously, due to change in product mix, this was supposed to happen. But from FY23 to FY25, the return ratio of the company has consistently improved from 12.9 to 15% and to 18.9%. And this is largely because of the backward integration that the company has been doing, which has resulted into lower cost and more profitability for the company, because of which we are seeing this return ratios improving for Supriya Life Science from 12.9 to 18.9 in FY25, and hence we are giving it a thumbs up at this moment.
Yeah, so moving on, let's see what shareholding pattern looks like. So over here, if you see, we have given thumbs up because 68% of stake lies with promoter, a kind of skin in the game that everyone likes it, and that has remained constant, which is a good thing. Even FII's holding has increased from 5.6% to 6.7%, which is again a positive thing. Though there has been decrease in the DII holdings, but overall, looking at the shareholding pattern, you have skin in the game, you have good. Rather non-decreasing FII stake in the company. So overall, yes, a thumbs up when it comes to shareholding pattern. Onto the street cred, in the last 1 month, if I were to talk about, the stock has given a negative return of almost 2%, but on a 6-month basis, it has given a 10% return to a shareholder, and on a 1 year, if you see, a 18%. So overall, a neutral rating, when it comes to street cred.
Well, yes, given the market performance is still not bad. If you look at 1 year, 18% is still not bad. Coming on to, this is the analyst coverage ratio that we have, and largely it's just 3 analysts covering this stock, so hence not much of a coverage coming in here. But on the valuation front, if you look at, the valuations stand at 29 times as the trailing 12-month price to earnings we are looking at. FY26, based on the growth in earnings, the valuations come down to 26, and FY27 we're expecting much more growth given the fact that the company has given strong outlook as well. Hence the valuations come in much more cheaper at 22 times. Now 22 times on a thumb rule basis, it's not expensive, but when you compare it with the Aarti Drugs, which is trading at just 14.5 times forward valuation, it's kind of expensive. But its nearest peer, Newland Lab, is trading at a much expensive valuation of 35 times on FY27 basis. So largely valuations are in line, but again it is cheaper than its historical average and cheaper when compared to its larger peer, that is Newland Lab. So we are just giving a neutral rating so far when it comes to valuation. But what is the outlook here? Because that is the key to Supriya Life Science here.
Yes, absolutely, Soman. Starting with margin guidance, as you were speaking about, we need to know from the management, because if your revenue from regulated market is growing, we want to know whether, there is a scope of improvement in margin, although the guidance has been given at 33 to 35% for FY27. But let's see what management says. Onto the revenue growth, they are maintaining a guidance of around 20% plus CAGR for next few years. This is considering FY26 also. And they are also confident of achieving 1,000 crores of revenue by FY27. Now, if you calculate on a CAGR basis, it comes to around 20% odd level. And H2 FY26 is expected to compensate for the Q1 disruption that we have seen, because of the repair and maintenance done in the Lote facility. But overall, if you, on the outlook side, considering the CDMO business, considering the growth in CDMO business, and we have seen how premium valuation Newland Labs has, given by investors because of the CDMO business that they have. So outlook for Supriya Life Sciences looks pretty much good, comparing the next 2 to 3 years taken into consideration. Also
given the fact that they have given a revenue guidance of 1,000 odd crore, and if they're able to do the margin of 33-35%, I believe that bottom line could be around 400 crore, which is not bad for Supriya Life Science, given the fact that in FY25 their bottom line was just 188 crore. So in the next couple of years, the company can literally double their net profit from 188 crore to 400 crore. Well, that's all the parameters that have come in. Now let's stack up all the parameters and see how Supriya Life Science has done. For income statement, it's a neutral. For balance sheet, it's +1. For cash flow, it's +1. For return ratio, again, it's a +1. So at least 3.5 on first page. The second page, shareholding +1. Street cred, neutral. Outlook, +1 again. And valuations, neutral, given the fact that it is expensive compared to Aarti Drugs, but cheaper. So overall rating that we have got is around 6.5 out of 8.
Not bad.
And that's the same rating that the company had 8 months back when we had get. So it's actually not a bad performance. 6.5 consistently twice on KYC out of 8. So that's actually not a bad performance. Well, with that, let's also welcome in the management of Supriya Life, Satish Vaman Wag, the chairman of Supriya Life Science. So firstly, to start off with, the revenue growth guidance that you have given of 20%, and given the fact that you're expanding into CDMO, you're launching more products, is it quite conservative?
Good morning. Thank you very much for the time. See, we will be launching 3 to 4 new products every year. That's our going to be the strategy. This year in Q1, we launched our anesthetic product, which is 300 million USD as a market. In the second thing, 3-4 quarter, we will be launching new APIs on contrast media, ADAD, and cardiovasculars. We are also launching our CMO formulation in Ambernath factory, which will give a small revenue in the Q4, and CDMO formulations will give peak revenue in financial year 28 and 29.
Hi, Mr. Wag, Varsha this side, and welcome to NDTV Profit. Mr. Wag, considering the margin guidance that you have given of 33 to 35%, I just wanted to understand, because of, increase of revenue contribution from regulated market, and we all know that, regulated market has a higher margin. Are you being conservative, giving 33 to 35% range when it comes to margin? Can you see more upwards in that range?
Of course, madam. Basically, if you see Supriya's revenue out of 100%, 62% we sell the product in the regulated market. And regulated market will give you the revenues only, because I always tell my team that we should have a business margins between this particular range. Otherwise, it's no use to do the business. And I'm confident my team will definitely achieve more than this, but we are a little conservative to say that we will try to keep this between 33 to 35%.
The 3 to 4 product launches that you're expecting, which means at least 1 product launch every quarter. When the products mature, what is the kind of top line addition that you're expecting that to come in?
See, the products which we normally are going to manufacture, we normally select the product where China is very strong. And we try to enter and penetrate these products in the Chinese area only, where China supplies throughout the world. Now, if you go to the products, we go fully backward integrated process with new technology, market size of 4 to 500 million USP launch in the Q3 for this financial year.
And the CDMO products that you're launching, how much, say, 3 years down the line, CDMO as a segment will contribute to their top line?
See, CDMO, whatever products we are going to launch, they will definitely add. The company will grow in 20% year to year. We will try to maintain our EBITDA between 30 to 35%. By financial year 27, we will definitely touch 1,000 crores. And in financial year 25, we did 700 crores revenue with 35% plus margin.
Also, sir, so when it comes to US market, I know that you do not have much exposure to US market as of now, but do you plan to aggressively expand to US market, considering the tariffs are now being exempted? So any thoughts on expansion into US market that you've given?
Currently, madam, we are strong in Europe and Latin America. We are definitely going to grow in US market. We are talking with some few multinationals for one of the product, which has got a $7 billion market. And the full dependability is on China. So we are going to crack the Chinese business through our US FDA plant, and we are sure we will take a bigger lead in US markets.
Also, just wanted to have your view when it comes to pricing pressure in the API segment, that we have seen over the years. What's the ground reality when it comes to, are you still seeing that pressure continuing on the API side? And also talk to us about the competitive scenario as well, because you just mentioned that we go into the products wherein China, is aggressive on that. So the 2 questions, one is pricing pressure on the API side and also competitive landscape in your products.
Not at all, madam. As far as Supriya is concerned, there is no pressure on price, because when we enter into the business which China is catering throughout the world, which are non-GMP plants. And today, Supriya entering with this product is a USFDA EU GMP plant. So people are always welcoming us because they would like to have a regulatory manufacturing site to give these products to them.
Also, so agreed that the 20% guidance that you have given, but considering the new products that are in pipeline, say contrast media, even the cardiovascular product that you are going into wherein you don't have any competition in India, wanted to have an update. Do you have enough capacity, to handle 30 to 35% growth rate, if any you do, in 27 and 28? So just wanted to have an update on the capacity that you have.
Madam, currently our capacity which we have already expanded, we have spent almost 140 crores in the expansion plan at one site at Lote. The another site is Ambernath, where we have already invested same amount, 140 crores. And I'm quite confident with these large capacities, we will deliver the best to the markets. And I'm confident that when you expand yourself and when you have large capacities, you can always give a challenge to China, not a big issue.
Right, sir. Sir, also we would want to understand, given the fact that you're entering into CDMO segment, how is the competitive landscape here? Could that be one of the hindrance for growth going forward, or you're not at all worried when it comes to competitive landscape here?
Sir, as far as Supriya is concerned, I believe in positiveness. We don't care for this. We are confident that the chemistry which we have already having in our hand, we go to the maximum percentage level. And the chemistry is so nice, we can always create a good site and good products. And we can fight with any Chinese manufacturers.
Sir, you have already given a margin guidance that is 33 to 35%. But I believe that backward integration is an ongoing process. More and more products come under backward integration. So say at least after 2 years, is there scope for further margin expansion from here?
Yes, sir. We are very happy to just communicate to you that we had taken almost 25 acres of land for expansion for the future at Patalganga. And finally, after 3 years, the government of Maharashtra has given clearances from the Environment Ministry, and the possessions will be given to us within the next 30 days. So that is going to be our future, where we are planning ourselves for one API site and 2 formulation sites.
And sir, when that facility will go live, any update that you can give?
As far as me concerned, I'm confident within the next 3 years it will go online.
Understood.
Because our R&D has got almost 89 scientists working round the clock. And these people are already given a target that every year they should come with 3 to 4 products.
Understood. So till FY27, Supriya is all set, having 1,000 crore of target that you have given. What about beyond FY27? Have you given any thought? Are there any products in pipeline that will, cater the growth beyond FY27? If you have set any, target for that.
I will not be able to give you any figure, but I am confident that we will definitely deliver the best, because we always see the products which we manufacture. We have no threat from India. We don't fight with any Indian manufacturers in India. We always try to move with the product where China is very strong.
Just wanted this to understand, what is the capital expenditure that you have planned for FY26, FY27, the amount that I wanted to know?
See, CapEx this year, almost 65 to 70 crores with revamping our old blocks. And the next 3 years, we'll definitely do about 200 crores with our new site. This is going to be at Patalganga.
Understood.
Right.
Understood. Also, sir, so in contrast media, which the segment itself is growing into, double digit. You have said that you want to have a 20 to 25% of market share, when it comes to the contrast media. Just wanted to understand, considering the competitive landscape, because you have 2 or 3 companies in India which is into contrast media, what gives you confidence to have that 20 to 25% of market share? Is it, a cost advantage that you have, a cost efficiencies that you have? Any color if you could give us.
See, now I am confident that our R&D is so strong, they always go to the maximum percentage of the reactions. And they are confident that they will give and deliver to us. See, every product you go, there is a competition, but everybody has his own share. And Supriya, being 40 years in the industry and doing almost 94% production in exports, we are confident that we will take our share without disturbing anybody.
Also, sir, onto the CDMO segment. Now, I understand, and as you rightly pointed out, that we do not have much exposure to US. But, with Trump reducing the prices of prescription drug for innovator companies, will not innovator companies pressurize you as a CDMO player, to reduce the prices? Because if innovator companies going to have impact on their financials, indirectly that will impact you as a CDMO business also. So any impact that you have, that you can see in future when it comes to this eminent policy?
Madam, as far as the policy is concerned for Supriya, we are confident that we will overcome all these problems which are currently we are having. And our more business focused is Europe and Latin America, because Latin America, like the Brazil and Mexico, the Chinese have been given the last attempt to submit their documents to the authorities. And Supriya has already cleared ANVISA. And in future, they have 5 to 6 products which will be added in ANVISA list. And they are very big molecules, like $6 billion, $7 billion. So we are confident that US, we will take some time, but there also on one of the anesthetic product, we will close our discussion with world multinational soon.
Well, thank you, sir. That would be all, sir. Thank you for joining us and giving us your time and explaining your company in detail to our viewers. Well, that's all we have in today's edition of KYC. Stay tuned and keep watching NDTV Profit.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
PM Modi in Japan for a high-stakes visit to bolster trade ties. AI semiconductors make it to the agenda. PM will be heading to China after this visit. Meanwhile, on the markets, then Nifty manages to hold up above 24,500 on a volatile day of trade. Sensex jumps over 200 points. Most sectors in the green. Defense leads gains. And SEBI approves stockbroking and wealth management platform Grow to go public, setting the stage for an IPO that could raise up to $1 billion. The offering is expected to value the Bengaluru-based fintech at $7 to $8 billion. And on the macroeconomic front, then India's economy is projected to grow by 6.7% in Q1 financial year 26. Disinflation and higher indirect tax collection drive growth. This exceeds the RBI's estimate of 6.5%. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. And first things first, let's take a look at what the markets are doing. Nifty holding up above that 24,500 level. At this point in time, as you can see on your screens as well, just a little bit above that level at this point in time. Sensex as well. That's the one that's jumping over 200 points. Let's also try and pull up Sensex. Take a look at what that is doing at this point in time. There you have it. So about 100-point uptick coming in as far as the Sensex is concerned. 100 to 200 point gain is the kind of range that you're seeing at this point in time for the Sensex as well. But quickly taking a look at the sectors that are gaining, and it's largely all of the sectors that are in the green at this point in time, barring a couple of sectors. You have realty, auto, IT, oil and gas that are just about in the red. But on the flip side, there's defense, FMCG, media, rural, as well as energy that are leading the gains. In terms of the sectors from within the Nifty 50 pack as well, you have a Trent, Shriram Finance, BEL, Ultratech Cement, as well as ITC doing quite well for themselves, up anywhere between 1.5% to 2.5%. When you take a look at the list of losers as well, there's an Eternal that makes it to that list, down about 2%, M&M 2% downtick coming in on that one as well. And Infosys as well as Titan Company and JSW Steel also holding on to a tinge of red at this point in time. So that's something that you're seeing as far as some of those sectors then are concerned and some of those stocks to keep an eye on, and we'll get you a roundup of some other stocks that are going to be in focus as well. But first things first, let's take a look at some key commentary coming in as far as the Prime Minister is concerned. He's talking about he's announced the opening defense and space sectors for private players. S&P Global upgraded India's rating after 2 decades, reflecting growing global confidence in India's role and potential. And even that is something that he's talking about. Let's go across and listen into exactly what he then had to say.
S&P ग्लोबल ने 2 दशक बाद भारत के क्रेडिट रेटिंग अपग्रेड किए हैं. द वर्ल्ड इज नॉट जस्ट वॉचिंग इंडिया, इट इज काउंटिंग ऑन इंडिया. पिछले 2 वर्षों में $13 बिलियन का प्राइवेट इन्वेस्टमेंट हुआ है. जेबीआईसी कहता है कि भारत सबसे प्रॉमिसिंग डेस्टिनेशन है. जेट्रो बताता है कि 80% कंपनियां भारत में एक्सपांड करना चाहती है और 75% ऑलरेडी मुनाफे में है. यानी इन इंडिया कैपिटल डज नॉट जस्ट ग्रो, इट multiplies.
All right, and there you go. That's the Prime Minister talking about his outlook as far as the S&P Global upgrade is concerned. A whole host of topics that he's talking about, and the world is not just watching India, it's counting on India, and that's the key commentary coming in as far as the Prime Minister is concerned. This is a very important visit, and it's a balancing act of sorts, Tamanna, because you do have the timing could not have been more perfect, because you do have the tariff backdrop that you have at this point in time. You do have the commentary coming in as far as the elephant dragon tango is concerned. So definitely the timing is key here.
Yeah, you know, what's ironic in all of this is when Trump started the whole tariff idea, one of the targets was to ensure that there was no common currency for BRICS nations, which would be a counter to the dollar. And the BRICS nations, to be fair, were pretty spread out and scattered. What has happened is that there is more unity that we're seeing. In fact, let's get a view from Professor P. Sabdan, who's joining us, former Indian diplomat, on this, and how crucial this visit is, the set of meetings. So over the next 72 hours, Prime Minister Modi will be meeting his counterparts in Japan, China, and in Russia. Why is this crucial, sir?
No, it's crucial because I think there's a focus on economics. There's a focus on investment. As you rightly said, the Prime Minister just heard on your screen about the investment. I believe it's to finalize the $70 billion investment in India by Japan in critical technologies. That would compensate now with investment from United States, and also transfer of technology on clean energy, on semiconductors, batteries, and many other things. So I think the focus is on that. And most importantly, the message that Prime Minister is giving by going to Japan and to China is to reorient. India must reorient with Asia now. With Europe, with the West, we have done. And I mean, the way Trump has behaved, we just can't carry on like this. So the big message is that India is reorienting itself towards Asia. Now, this is coming after so many years. 50 years we have defied Asian unity since the Nehru's days. So I think, nonetheless, I think now about 30, 50, 60 years, we've been going on, partly because of China.
Professor Sabdan, just trying to understand that what are the big takeaways that we're hoping to see from this? For example, any kind of relaxation on rare earth would immediately be a positive. What else is it that you are looking out from these set of meetings?
No, apart from the trade and investment, as I rightly said, it's a big political, symbolically, it's a political message. Now, within the political message, you put everything, economics and whatever that you desire. So with Japan, of course, the technology. With China, it's about rare earth and many other things. So the focus will be on that. I think I'm quite optimistic about the outcome, though it's quite risky with China. But I think this will be a major breakthrough. It's a path-breaking visit. I would say it's not just with China, which is a turning point, which will prove to be a turning point naturally. But for whatever we are doing now, it's going to be a fundamental shift away from the West. That's very critical. That's the message I think Prime Minister is giving, and he's going to come back with a lot of outcomes.
Well, absolutely. That is the key message that you've highlighted. Thank you so much, Professor Shreyansi, as well, joining in the conversation. I also wanted to get a sense about what you think about the timing of this visit at this point in time, because you do have the backdrop that is quite important at this point, because you have the US tariffs, the imposition, in fact. And do you see this as a chance to reassert strategic autonomy when it comes to India? How are you looking at it in terms of the timing that this is falling against? Professor, I wanted to get your understanding of whether or not this is a chance to reassert strategic autonomy against the backdrop in terms of the timing with US tariffs and everything that you've got going on with India.
Exactly. I think the main point is that it appears that it was the United States which was a factor for China. They don't seem to be having too much problem with India, either on transfer of technology or in investment or anything of raw material to India. But essentially, it is the US-oriented India policy toward China that was obstructing everything. Now, you see that statement by Chinese ambassador that we will stand up firmly with India on this tariff. So minus the United States, nobody seemed to be having problem. Now, this United States-oriented India policy goes back to 1950s. China, for example, is not a natural enemy of India. it's a accidental enemy because of the 1960s war and other things. Now that period is over. I think we should shed all those things, historical baggage now. I think that's very important to move ahead. The United States obviously was putting a lot of pressure on us. I am just now speaking from Ladakh. I know the Galwan incident, how the United States was involved in all these things. There's so many policies, whether it was Taiwan, whether it was Tibet. It is all US manufactured problems that we have been carrying on for 50 years. I think for the first time, Prime Minister Nehru is going to bring a change in the thinking, the strategic intent of India. Similarly, I think the Chinese also has to change their strategic intent on Pakistan, on many issues like, the Arunachal Pradesh and all that. So I think eventually this will take place, but my sense is that India is still focusing on management part of the problem, not the solution part of the problem. The Chinese are trying to seek a solution to the problem through some kind of a trust, through some kind of many other efforts, including these kind of meetings. But my sense is that Prime Minister going to Beijing, Tianjin for SCO meeting is to take a collective action against United States. I think SCO is one of the biggest platform where people assert autonomously whatever. The only problem is the terrorism part. Now, if India focuses on terrorism at CO, that's not going to receive too much attention. So therefore, I think attention is now Trump's tariff, not terrorism. But terrorism is nonetheless very important but technically, both the perpetrators of terrorism and the victim of terrorism are at the SCO. Nawaz Sharif is going to be there. Prime Minister is going to be there. So I think the tricky part of the SCO summit in Tianjin is the terrorism part, where I think Prime Minister will try to, cool down on that issue and focus more on the United States.
Well, absolutely. Thank you so much, Professor, for taking time out and joining us. So it's consensus building on terrorism that is just as important, even though you do have Trump's tariffs that are going to be in the spotlight. And this is going to be a key balancing act. That is also something that Professor was alluding to, talking about how this is coming at a very important time. There's a bit of a balancing act that you have. There's consensus building on terrorism on one side. On the other side, you have US tariffs. And that is also going to be something that India has got to be looking at. In fact, India is aiming for a new trade balance with its neighbor China at the SCO summit. Like we've just talked about it, Prime Minister Modi is also set to meet President Xi Jinping as well. This is a meeting that holds symbolic significance amid the ongoing tariff disputes driven by Trump's trade policies. In fact, Sanjana is joining in with that in-depth report there.
Let's look at the numbers because they actually tell a story. Trade has never been bigger. Nearly $128 billion in FY 24-25, making China India's second largest partner. But the imbalance is also glaring. For every dollar India exports, it imports almost 8 back. Electronics, machinery and chemicals dominate what comes in. But here's what goes out. Raw commodities like iron ore and cotton, and the result, a $99 billion gap. Then let's take a look at why things soured before. It wasn't always this high. In 2020 and 2021, trade dropped sharply. COVID played a role, but so did the Galwan issue. Apps were banned, investments screened, imports curbed, and India's exports to China barely moved in the years after. All of that slowed down by non-tariff barriers and regulatory walls. At the same time, we saw China deliberately squeeze supplies of rare earths and fertilizers. Add US tariffs to the mix, and New Delhi was forced to rethink how much it should actually depend on Beijing. Now let's have a look at what the SCO could actually mean, this summit. That rethink is now meeting this new opportunity, which is in the form of the summit. Under China's presidency, both sides could separate border tensions from trade, and resuming direct flights, expanding market access, and even exploring joint energy and manufacturing projects are on the table. With SCO trade at nearly $900 billion, India doesn't want to be left behind. And if security talks succeed, it may also reduce border flare-ups. Let's also look at what has already happened, which China is calling the dragon-elephant tango. This dance is already visible. Border trade has quietly restarted at 3 Himalayan posts. New working groups are in place to manage disputes, and diplomatically, Xi Jinping reached out privately earlier this year, followed by a visit from China's foreign minister. So economically, export curbs are being lifted, flights and visas set to return, and culturally, we're also seeing 2025 as the year where the Kailash pilgrimages expand as both nations mark 75 years of ties.
Well, absolutely. Thanks, Sanjana, for getting us that update. So there you had it. That's crunching the numbers as far as the dragon-elephant tango is concerned. And it's just a couple of days to go before you have that very important visit to China as well that's going to be in the spotlight. But let's get you some more commentary. Commerce and Industry Minister Piyush Goyal, in fact, urged building material manufacturers to identify sectors impacted by the US 50% tariffs on $58 billion of Indian exports that's effective from August 27th, and specify support needed during a webinar. Let's go across and listen in.
But let this be a completely self-sufficient, industry-led initiative. And at every point of time, the important criteria should be an assessment of its outcome and whether the participants go back happy and satisfied at their investment into this conference cum exhibition. Incidentally, I had a meeting in this room last week, or maybe earlier this week, on Monday or Tuesday this week, where the entire mining sector, iron ore mining sector, and the steel industry had collected, and they've given a commitment to export 50 million tons of steel from India. Now that could be another sector where we can become a supplier to many countries of high quality and attractively priced products, which will help us increase our export, also diversify our export basket. Government, of course, is committed to make sure that all of you do not face any stresses or difficulties in managing the current situation emanating from certain unilateral actions. And towards that end, I would urge all of you to highlight which of your sectors has been affected, which of your sectors needs alternate markets, because we in the Commerce Ministry, through the missions, are reaching out to other parts of the world to look at other opportunities which we can capture. We are also looking at giving a boost to domestic consumption, and you'll soon see the GST Council meeting next week, as early as next week, so that the impact of these changes can be felt by all of you very quickly, and that can give a big demand booster to the entire domestic manufacturing sector.
All right, then, so that's the other piece of the picture, US tariffs. That's Piyush Goyal talking about the impact when it comes to these tariffs on sectors. And speaking about sectors, then let's talk about autos, zoom in when it comes to autos, because you do have August sales data that is going to be in focus, expecting a slowdown in sales before the GST cut kicks in. In fact, let's bring in Puneet to get us a sense of what is really being penciled in here.
It does seem to be essentially that a very specific, companies that are going to be in focus this time, and there's one definite surprise in the two-wheeler space, to say the least. So let's start off with that, because let me first just divert your attention to the bottom of your screen now. Eicher Motors is expected to have 109,000 vehicles sold in this particular month. That's a 48% jump just in the month of August. Almost 11% of the company's annual sales in the month of August. And that just seems to be essentially not that the company has done something, but the GST, nomenclature essentially, and people presumed, and that's what I was speaking to a few analysts about, that 350cc will attract 40% GST from the current 28%. What people assume that Eicher would essentially get expensive in this particular time frame, but the model is actually getting cheaper because it's 349cc and not 350cc, and hence there was a pre-buy or a rush essentially for the consumers, and hence this stupendous number for Eicher in this particular month. So that is leading the growth and the major surprise there. The other ones, TVS Motors continuing its momentum with scooters as well as exports, but Eicher was the big surprise this month. When you look at the other four-wheeler makers specifically, we are expecting a subdued month across the board, and M&M is also one of them, because we did break the story this morning that for Mahindra they've asked dealers to pull back on some additional inventory purchase. That has impacted the sales in this month, but largely for the rest, it's been a continuation of what's happening in FY25 for Maruti, Hyundai as well as Tata Motors. Truck makers specifically have done well in this particular month, continuing their momentum. So the likes of Ashok Leyland, Tata Motors, CV Space as well as VECV have done 1 to 6% growth. That's a decent performance at a time in the monsoons where we don't see a lot of purchases by fleet operators. So expecting a decent month there. And for the tractor makers, lastly, specifically, seeing a 4 to 6% growth. Again, for M&M, we've seen the export growth in tractors do well as well. But this month, arguably, will be one of the best months for Eicher Motors. The first time they'll cross 1 lakh units in a particular month, 11% of sales. And probably this GST nomenclature has worked in the company's favor this time.
Well, absolutely. Thanks, Puneet, for joining us with that update there. Even Eicher Motors down about 0.6%. When you take a look at M&M as well, 2.2% downtick coming in on that one. So let's see if the tide really turns for both of those counters. That is what you should be penciling in when it comes to August auto sales data as well. But let's move on. Let's get you a sense of the primary market action, and we've seen loads of that. IPO activity, in fact, has been buzzing this July and August. You have 33 new listings that you're looking at hitting the markets. Some of these stocks have struggled to hold above their issue price. Others have delivered standout gains, and some soaring as much as 85%. In fact, we do have Varsha who's standing by with a lowdown when it comes to IPOs.
Yeah, thank you for that. We have seen a busy month for IPO, wherein, as you rightly said, 33 IPOs have been listed in July and August. Now let's see. So overall, if you see, there are 8 companies which are trading below issue price, and while rest of the companies are trading above. Let's see which other companies trading below issue price. You have Raymond Realty, which is it has given almost negative returns of 38%. Now this is followed by Gem Aromatics. You have IndiCube Spaces and Kalpataru, leading the pack when it comes to trading below issue price. Even you have Brigade Hotel, Mangal Electrical and Indo-Gulf Crop Sciences, which have given negative returns to the investors since their listing. Now, but there are few companies which has given a blockbuster returns to its investors, starting with Aditya Infotech and NSDL, which are leading the pack with 85% and 56%. But there are other few companies which have given good returns to investors in a range of 30 to 50%. You have Sambhav Steel, you have Anthem Biosciences and GNG Electronics, wherein investors are actually happy with these companies. Even there are some stocks which has, Chrysec and Highway Infrastructure and Ellenberg, which has given returns ranging from, 30 to 42%. Also, few companies, which lies in the range band of 10 to 25% when it comes to returns. You have Sri Lotus, you have SmartWorks, RM Drip and Chembot Chemicals, which has given returns ranging from 10% to 25%. Even you have Regal, Shanti and Globe Civil Projects, which has given returns ranging from 10 to 25%. But I am more interested when it comes to the commentary given by top 5 IPO performers. Let's see what their commentaries are, what their outlook is when it comes to FY26 and of course growth beyond FY26. Let's see what their commentary is, starting with Aditya Infotech, wherein they are expecting 25% of revenue growth in FY26 with also improvement in margins that the company will see. They're expecting EBITDA margin of 10 to 11% with PAT margin of 6 to 7%. Moving on, You also have the other company like NSDL, which are expecting to benefit from new revenue stream. That's the outlook that they've given in Q1 FY26 con call. And even Sambhav Steel Tubes are expecting FY26 revenue to grow beyond 32%, and they are expecting revenue to double around 4,500 crore in FY28 over FY26. So good guidance has been given by Sambhav Steel Tube. Even they are expecting margin of around 12 to 13% in next 1 or 2 years. Moving on, you also have the Atham Biosciences, which is expecting to maintain historical 20% CAGR growth that the company has seen. And also you have GNG Electronics, which is expecting a 25% top line growth for FY26, even with an improvement of margin going forward. So they're expecting an improvement of 75 to 100 basis point per annum over next few years. So quite busy, I would say, July and August month have been when it comes to IPO, and they've given good returns to the investors, and even the commentaries of the top IPO performance have been good so far.
Well, absolutely. Thank you so much, Varsha, for joining us with that detailed analysis. That's something to look at, especially when it comes to the primary market space. But with that, we're completely out of time on this edition of this show. Thank you so much for tuning in.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. Negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hi, thanks so much for joining in. You're watching NDTV Profit. This is Profit Buzzers. My name is Alex Matthew, and with me is Puneet Javeri. Morning, Puneet. I mean, good afternoon.
Good afternoon.
Yeah, it's been a few shows. I'm allowed to say. Anyway, it's good afternoon, of course, and this show gets you up to speed with everything that's so far happened, and will set you up for the rest of the trading day. It's been a little bit of a boring day, hasn't it been?
Yeah, very, very subdued. You know, you don't see too many stocks reacting, but on the news flow as well, it's been very, very subdued to say the least.
No, but big macro conversations have been taking place. This whole trade conversation, what is happening with the Prime Minister visiting Japan. He recently, or not too long back, he had a statement that he made. He addressed the diaspora in Japan. But of course, let's talk about the markets because they bounced back from the low points of the day. The Nifty 50 nudging into the green, but very narrow band for the benchmark Nifty 50. Of course, the broader markets have also recovered from the low point. The mid-cap index currently trading with gains of about just about 0.1% or so. The small cap index also nudging into the green, holding on to those gains of about 0.2%. And the sectors that were under a tad bit of pressure, maybe some part of that has rolled back a tad bit, and you see more green on the screen than red. Of course, the realty index, which was a laggard in trade yesterday, continues to lose ground. And on the top, you have a few of the consumption names. FMCG doing particularly well in trade today. Not the biggest gains, but it's still standing out as one of the key gainers. IT has been a conversation point as well, Puneet, over the course of the last couple of sessions. There was a flash in the pan where it gained over 2% on one of those trading days, and then there's been pressure yesterday and today. It's just about hovering in that 1/3% lower kind of band.
Well, it's essentially a question that is to investors, right? Do you want to get in just before the tide turns because valuations are favorable or not? I think that's the question that most investors will be grappling with. And today as well, just seeing some downtake on stocks like Infosys as well as Wipro. While we have seen, HCL Tech, Coforge, as well as Oracle Financial, amongst others, that have been positive as well. But let's look at quickly at the mid cap and the small cap as well, because that's been the other index where we've seen it largely remained under pressure along with the benchmarks today as well. Off the day's high from a mile now for the mid cap 150 and the BSE 500 also. Let's quickly pull that up because a lot of individual movers today, Alex, again. In terms of when we see a lot of movers, essentially the percentage has come down starting from Monday to Friday. So something like a Jindal is up 12.7%, Sammaan Capital on news flow. On the losing side, we have something like Vardhaman Textile, but that seems to be the flavor of the market for now.
Certainly, and this overarching conversation on trade. But on that note, let's listen into what Prime Minister Narendra Modi said when he spoke about opening defense and space sectors for private players. S&P Global also upgraded India's ratings after 2 decades, as you know, in the recent past, and that reflects the growing global confidence of India's role in the global landscape and its potential. Let's listen into what he had to say.
S&P ग्लोबल ने 2 दशक बाद भारत के क्रेडिट रेटिंग अपग्रेड किए हैं. The world is not just watching India. It is counting on India. पिछले 2 वर्षों में $13 बिलियन का प्राइवेट इन्वेस्टमेंट हुआ है. JBIC कहता है कि भारत सबसे प्रॉमिसिंग डेस्टिनेशन है. जेट्रो बताता है कि 80% कंपनियां भारत में एक्सपांड करना चाहती है और 75% ऑलरेडी मुनाफे में है. यानी इन इंडिया कैपिटल डज नॉट जस्ट ग्रो, इट multiplies.
So the Prime Minister going out onto the global stage and telling global investors, come to India, make in India and make for the world. We'll get you more pieces of that in just a bit. But for now, let's turn back to the markets and get you the derivative picture. At the start of a new series, and we got Vansh to take you through the key talking points today. Vansh, over to you.
Well, yes, so we have seen some pause on Nifty after a decline of about 450 points in the last two trading sessions. Now, what we are seeing is Nifty trading with about gains of about almost remain flat. But with the open interest rise, we can clearly see long positions being building up in terms of Nifty. Moving on, let's also look at the Bank Nifty. We can see increase in the open interest, also indicating a long build-up in terms of Bank Nifty as well. Now, moving on with this, let's also look at the long-short ratio of FIs. Now, we can clearly see the long-short ratio at 0.09 now. This is, in fact, lowest in the last 1.5 years. We are trading in the bottom range of the long-short ratio in terms of FIs, and they continue to remain bearish in terms of our markets. Now, moving on, let's also look at the Nifty open interest distribution. Now, what we can clearly see is the 24,500 mark acting as strong support, followed by 24,400 mark. So clearly a strong support building out in the range of 24,400 to 24,500, and a strong resistance in terms of 25,000 mark acting as a strong resistance followed by strong call writing. So clearly what we can see is a range of about 24,500 to 25,000 is what we are seeing on Nifty. Now let's also look at the stock specific action. We can clearly see long positions being built for RBL Bank, Britannia, CG Power and MCX, and short positions being built for Godrej Consumers. Now let's also look at the open interest losers front. We can clearly see short positions being closed for Colgate, LIC Housing Finance, Hindustan Zinc, KPIT Tech, and longs unwinding for NCC as well. So this is what the overall picture is looking like for the markets right now.
Thanks, Vansh, for getting us those details and a few individual stocks to focus on as well. But Gaurang Shah joining us now, Senior Vice President at Geojit Investments. Gaurang, so good to speak to you again, and thanks so much for taking the time. Let me ask you about some of these two-wheeler players, because between yesterday and today, I think some of the talking point has been about that. While this global context of trade takes place, the domestic focus, of course, is the implications of the GST and the festive season and all of that. Would you go out and buy some of these names, or would you say that they're a little too expensive at this point?
Well, Alice, thanks so much for having me on the show. It's good talking to you after a long time. A small disclosure before I give any stock specific. All recommendations that I'll be giving on the show are a part of our research team's recommendation. Our company, Geojit or I, we do not have any personal investments, nor do we have any financial interest. There is no conflict of interest either, but we give recommendations to our clients on similar lines. They might hold the position. So coming to your question, well, is it too expensive, or is it fairly valued, or it is cheap? This question arises, Alex, when you have to speak about in terms of what is the time horizon for investment. If you ask us from a long-term point of view, we remain extremely positive on the auto pack, whether it is two-wheeler, three-wheeler, four-wheeler, commercial vehicle making companies, or tractor agri equipment, or pure electric vehicle play. Yes, the new structure or the new avatar of GST 2.0 is likely to favor entry-level two-wheelers as well as passenger vehicles. Demand is also growing. Export market looks extremely good. Just a couple of days back, we saw Prime Minister Modi flagging off the EV passenger vehicle of Maruti Suzuki in the Sanand plant, Gujarat. Good monsoon is also a big trigger, Alex, for semi-urban and rural India to pick up. So from the two-wheeler space, our research team has positive coverage on Bajaj Auto, TVS Motors and Hero MotoCorp. If you want to have a mix of high-end motorcycles and a commercial vehicle pair, then Eicher Motor is the preferred stock. Earth-moving equipments and construction equipments, we have coverage on Escorts, Kubota, along with tractors also. And in the passenger vehicle, we are positive on M&M, Tata Motors and Maruti. So these are the investment ideas. In terms of earnings visibility and demand, I think you will see a lot of positive traction from third quarter onwards in terms of green shoots of demand picking up, both from metros as well as tier 1, tier 2 cities, and of course semi-urban and rural India.
Got that, Gaurang. But the other one stock that's also been in focus today is something like a Kotak Bank. Now, we did see an early positive up move on this particular stock. UBS has actually upgraded stock to a buy from a neutral rating earlier. Stock target price now is what they see as 2,450 from 2,300 earlier. There are three key points they're making this particular note. The first one is that, it seems to be well placed essentially in terms of growth going forward, as well as in the fastest growth segments. Healthy growth outlook, margin as well as credit card pressure seem to be easing gradually is what UBS feels about Kotak Bank. And finally, they expect that the faster growth prospects as well as a superior return on asset ratio should also support the re-rating trigger essentially for this one as well. But Gaurang, let me come back to you on this. Very good afternoon to you. Thank you for joining in. In terms of Kotak Bank, we did see, a lot of positive momentum going into quarter one, and then the results were slightly disappointing, based on street estimates. How do you view this particular stock?
Well, thank you so much, Puneet, and good afternoon to you as well. So, as a brokerage house and the recommendation from our research team, we are extremely positive on the entire BFSI segment, whether it is public sector bank, private sector banks, or strong NBFCs. The reason for that being, Puneet, of course, I'll come to Kotak Bank in a while. Lower interest cost, healthy asset quality in terms of gross net NPA, provisionings coming back with respect to recoveries that are happening, and the outlook in terms of future rate cuts coming through. So if I have to put all this, and of course, if the aspirations for India is to become the next $1 trillion economy or become a large manufacturing hub, I think line of credit is something that will be in the spotlight for a pretty long period of time, and that will have the loan book growth. Coming to Kotak Mahindra Bank, yes, we also have a positive coverage on Kotak Mahindra Bank, and if I'm not mistaken, if I'm right, and if my memory serves me right, 2200 or thereabouts approximately is the target from a long-term point of view. First quarter, like you rightly said, Puneet, was a little bit disturbing, but I think we can take it as one-off.
Fair point. All right, and of course, watch out for a NIM compression or compression of net interest margins going forward. This was a key talking point for Kotak Mahindra Bank in the quarter gone by as well. But let's talk about Poly Medicure. This is a stock that we were focused on this morning, and lower GST is set to help the healthcare sector. And that is a word from Himanshu Baid, who's the managing director of Poly Medicure. Here's what he had to say about the GST rate rationalization and the impact on the business.
I think GST, we have 3 slabs. We have 5% for life-saving products. We have around 12% generally for consumables and other devices, and 18% on equipments. So I think that 18% slab is going to stay for equipments, but I think that 12%, my senses, will collapse to that 5% number. So I think in general, it will help the patients and the hospitals because their cost will come down, because GST in case of hospital is nil rated basically. So any GST which is charged on the products is currently absorbed as a cost by the hospitals. So I think a lower GST rate will help the hospitals actually. Their cost of products will come down. And also for a lot of home care products, where today GST is 12%, if it comes to 5%, I think that will also benefit today consumers at large, in terms of lowering the pricing.
Okay, all right. And by the way, that is only a part of the overall conversation we had with him this morning, and you can find that on YouTube in case you're curious. Gaurang, I'll come to you in the healthcare space, and it's pretty broad, right? If you're talking about pharmaceutical companies as well, you have to distill it further, you have to splice it further. You're talking about CDMO on the one hand, you're talking about generic manufacturers on the other hand. How do you look at the overall space? And you throw hospitals into the list, you throw diagnostic companies into the list. It's a pretty broad space to choose from. What, according to you, in the relatively shorter time frame of the next year perhaps, shows the most promise in terms of earnings potential?
Well, Alex, so I'll slice it further. So you have generics, you have APIs, you have CDMO, and you have biosimilars. Along with that, according to us, and we've always recommended this, Alex, that when you look at a pharma as a sector, don't look at just manufacturing companies, that is pharma manufacturing companies, drug manufacturing companies. You should also look at healthcare, and along with that, you should also look at diagnostic sector. So slicing it further, to answer your question, the last question first, which verticals out of these 3 that we've sliced for you looks more promising? I think surely healthcare, that is hospitals. Then, of course, you have the diagnostics, and then you have different plays in terms of APIs, generics, CDMOs, and biosimilars. So in the hospitals, healthcare, we have a positive coverage on Apollo Hospital, Fortis Healthcare, and Max Healthcare. In the diagnostic universe, we are positive on Dr. Lal Path Labs. To break it further in the pharma manufacturing, we have coverage on Cipla, We have coverage on Aurobindo Pharma. We have coverage on Glenmark. We have coverage on Cipla. Coverage on Gland Pharma. Mankind Pharma is one of the stocks, small to mid cap, which has done extremely well over the last couple of years. So we remain positive, and my advice to your viewers or investors would be that have a mix of all these three sectors and make a decent portfolio in the pharma.
Gaurang, on that note, thank you so much for joining in. Absolute pleasure as always speaking with you, and look forward to our next chat.
Thank you so much, Alex. All the best.
All right, now we started with a small conversation on IT. Let's delve a little deeper into this because, Puneet, really, amidst all of this tariff chaos, it's interesting and it's a bit of a bright spot or a silver lining. The services space has been left out of the conversation and Donald Trump hasn't mentioned that just yet. So the IT pack as a whole, therefore, in focus, particularly those that are focused on the United States. But the real question is, does the earnings growth pick up in the rest of the year?
Well, definitely. And I think, the just yet that you mentioned on Donald Trump, I think that remains a key. And I think apart from that as well, the larger trigger seems to be valuations, right? It seems to be at that level when you compare to the historicals. And even if there's a slight inch up of growth, I think a lot of that positive momentum could reflect in prices, but that is, as mentioned on earnings growth and the just yet is what it stays on.
In fact, there's a very interesting note that has come through on the IT sector. It's had a bit of a roller coaster ride, and even running up to today, the last several weeks and months, we've been talking about it playing tic-tac-toe. Brokerages are split down the middle, but Anand Rathi actually warns of short-term storms while forecasting powerful tailwinds on the horizon. And we're going to be joined and we'll speak to Sushovan Naik, who's the author of that report. But first, let's talk about the key talking points from that report. Jasmeet joining in to bring you the cliff notes. Jasmeet?
Right, yes, thank you for that. Here's what Anand Rathi says on the large caps. Then we'll obviously speak about the mid caps as well. So on large cap, they see slight headwinds when it comes to the near term, but there have been tailwinds in the long term. What they see is the Q1 for top 6 companies has been of a strong deal wins across the top 6 companies, but the revenue remained muted. So the conversion was on the lower side. That's something. While other thing they see is the company highlights there have been trends in the industry in terms of AI and cost optimization, as well as the cost leading to saving up for the clients and vendor consolidation as well. Further, they see the Infosys and LTIMindtree are something that has shown growth in the revenue in the CC terms, while it also sees the global IT trend is showing towards more momentum in BFSI, while that's signaling for Indian IT that how BFSI might be positive for the Indian IT. While lastly, they believe that the IT in the long run has multiple benefits, but in the short term, it can see certain headwinds. Benefits in the sense there will be AI-led deals that will be positive. Secondly, there will be cost optimization based on the AI-led deals, like the lesser infra cost, which will again be positive, and saving up on the marginal cost, that's something to look out for. While they pick LTI, the LTIM remains their top pick, then followed by the other large cap IT funds. Well, they also have a note on mid cap. So what they see on mid cap is mid caps have outperformed the large caps on a longer run. When it comes to the growth rate, they see from last 8 quarters, mid cap has been outperforming the large caps. Well, that's something to watch out for. While they also see in the sequential growth of IT, there has been a good momentum in BFSI. That's what led the growth in the Q1. Cloud-based data as well as the AI initiatives. While they see a slight softness when it comes to the manufacturing sector, that's something to watch out in the Q2 going ahead. While most of the companies expect the H2 to be better than H1, going ahead, they also pick Mastech and Emphasis as the top picks when it comes to mid-cap IT. Apart from that, they also have couple of two picks, that's Happiest Mindsets and First Sources. So it's something to watch out for.
Well, thank you, Jasmeet, for getting us those perspectives from the report. But let's get into Sushovan Naik now, the research analyst at Anand Rathi Institutional Equities. Sushovan, always pleasure talking to you. Very good afternoon to you. Thank you for joining in. Let me first start off with what's the current thesis essentially, and that's mentioned in your report as well. That and we'll go piece by piece if that's okay. In terms of valuation, you mentioned that IT long run will benefit from multiple tailwinds, but you continue to mention about the short-term headwinds as well. So if you can give us some perspective first on large cap IT, of how do you view that space in terms of of what investors should do now?
So I hope my voice is audible.
Yes. Please go ahead.
Basically, when I'm looking at large cap IT, I think the valuations which have come in for large cap IT, they're more or less close to their 10-year averages as such. It's almost at 20-21 times, right, on an FY27 basis. And within large cap IT, we like the ones which are focusing a lot on the AI initiative. Someone like an Infosys, someone like an LTI Mindtree, which have been very strong as far as their AI initiatives are concerned. If you look at Infosys, for instance, it is one of the preferred vendors for 10 of their largest 20 BFSI customers, right? And their Infosys Topaz is the AI platform which they have launched. If you look at LTI Mindtree, their platform is effectively Blueverse, which they have launched. They have been winning large deals. All of these are positives for us. And they are the only two companies which have basically shown a positive constant currency growth in the first quarter of FY26. Another tailwind for them is if you look at what's happening in the hyperscalers, right? They have been having great results. The capex which they have been deploying, it's almost $375 million, 60 for calendar year 25, which is almost 66% higher than what it was in the last calendar year, which was almost $225 billion. Now, what will end up happening is it'll be like a second order effect which will flow through into Indian IT, because most of the Indian IT folks will end up becoming implementation partners for someone like a Databricks or a Snowflakes, right? So that is where I believe Indian IT is going to benefit over the longer term. Over the short term, obviously because of AI, there'll be some revenue deflationary impact that we'll see, which may reduce the growth. But over the long term, I'm quite confident that it'll do well. That's my limited submission here.
Okay. So, Shravan, would you agree that, and hi, thanks so much for taking the time, Alex here. I'm just wondering if you have factored in the situation in the US, and the jury's out about what happens to growth, what happens to jobs, and what happens to business there. For companies that have significant exposure to the United States, of course, in September, you're anticipating that a rate cut will come through, and eventually towards the end of the year, maybe things get better. But if there was a theme in the first quarter, it was that there were deal wins, but that was not converting to revenue. And there's no reason to suggest that that will change in this quarter or in the rest of the year. Do you agree?
That's a very fair observation, Alex. The only submission here is, if you look at, and that is the reason why we have picked up someone like an Infosys and an LTIM, which are actually showing growth. So effectively, their deal wins are getting converted into revenues. And if you look at the management commentary, for instance, for someone like an LTIM, right, the management has said very clearly that they see the second half of the year where they'll achieve close to double-digit growth, which will be somewhere around high single digits, and retail and manufacturing, which has been a headwind for most of the large cap ITs, where they're continuing to do well. They have won a large deal a couple of months back, and again another one which was basically for PAN 2.0. So all of these things at least give us the confidence that this will get converted to revenues, right? So and their margins also have been improving. They have shown a 50 bips margin improvement. They expect to show another 100 bips over the course of the year, which gives me comfort both from a revenue as well as a margin standpoint, right? So that's the way I was looking at it. I hope it answers your question.
But I do have okay, so I got your point, but on the margin front, you had one of the big headlines in the recent past about Tata Consultancy Services, the decision that it took on its bench strength. And, I'm just wondering whether that will be followed through by certain other players as well. Because it seems, as you pointed out, artificial intelligence is going to have a deflationary impact on some revenues, but it could also aid to certain operational efficiencies down the line, and so margins should improve. Is that something that you're building in for the rest of the year as well?
So there are two ways of looking at it, Alex, here. So there is one thought process which goes that you will not need the bottom of the pyramid will potentially reduce, and that is what we are seeing, right? We are not seeing an increased fresher hiring. So what will potentially happen is that at the middle layer, we'll see more niche programmers who will be there. And as a result of that, what we are seeing, a pyramid structure may end up becoming something like a diamond structure. And since you need lesser number of people, potentially your margins will also improve. So that is the way I would look at it over the long term. But over the short term, obviously, the layoff which TCS had announced, and after that, they have also come up with a separate AI unit with their UK and Ireland head now heading the unit, right? So all of those things, at least they are moving in the right direction, if not anything else. Yeah.
Shashavan, you mentioned in both of your reports essentially that the growth is largely higher in mid caps. They seem to be attracting and addressing these niche areas where the growth seems to be there. But you also had some picks in large cap, some picks in mid cap. If you can give us a pecking order between both these players, because that's been the investor dilemma, right? The growth is higher in mid caps, but so is the valuation. While for the large caps, the valuation is quite stronger, but the growth is largely absent. So how should investors look at both these aspects while stock picking essentially in this space?
On this, I will just divide this into two buckets. Within the large caps, I would focus more on valuations and companies which are focused on execution. And hence, as I discussed, Infosys and LTIM were my top picks. Followed by, it would be TCS, Wipro, HCL, and then TechM. That is the pecking order for me as far as large caps are concerned. And if I look at mid caps, as you correctly pointed out, valuations have been comparatively much higher, because I think what I understand, it's almost 31 times FY27 is what at least the coverage universe is trading at. So here I've focused purely on value plays and the BFSI focused plays. So Mastek for me, Mastek as well as Emphasis, these are the two top picks for me, along with Happiest Minds. If you look at Mastek, it is primarily a value play. It is focused on the UK part of the UK business, is almost 65% of the revenues, right? And it is more or less recurring revenues because it is the NHS where they're basically catering to, along with the Bank of England now, right? So these are going to be recurring revenue streams, which gives me comfort. Valuations, they are almost at 18 times FY27. Coming to Emphasis, it's purely a BFSI focused play now. Whatever issues were there on account of their logistics customer, that we see that subsiding or stabilizing, and it's almost 65% plus, which is focused on BFSI. So that gives me the comfort there. Thirdly, on Happiest Minds, it's primarily a transformation play. Earlier, they were a little more edtech focused. Now they are focusing on BFSI and healthcare, which are doing well. So now that concentration has moved towards BFSI and healthcare. Earlier it was 25, now 40%, and EdTech is basically reducing. So, and also there are some organizational changes which they have brought about, like from a horizontal focus to a vertical focus from a sales and delivery perspective. All of these things are basically transformation plays for Happiest Minds. So that's the way I would bucket it. I hope that clarified.
It does, in fact. And I'm glad that we've delved so deep into so many of these stocks today with you, Sushovan, and always a pleasure speaking with you. We'll look forward to the next report and the next chat.
Sure. Thank you, Alex.
All right. Well, on the subject of IT and artificial intelligence, Infosys chairperson Nandan Nilekani says that India has the potential to be a trailblazer of the AI movement. Listen in as we slip into a very quick break.
I think where India will stand out, in my view, is it will be the source of actually applying AI to real-world useful issues. Because ultimately that's what is going to make the difference. And it's going to be both in three ways, right? It's going to be the fact that at Walmart, you have 30,000 employees here, and they are going to be building the fundamental AI transformation of Walmart the way you described. And I agree with you completely. It's not about point solutions. It's about steady, coherent architecture of simplification that interoperability. So that will be built by firms like you, and that's going to be great. Then at Infosys, we service thousands of clients on their AI journey. So we know exactly what's happening. And then we will use AI to actually make India better, because the digital public infrastructure which we have created is actually a foundation on which we can now deal with. So it's all about how is it going to use to compete.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you
Welcome back. You're watching Profit Buzzers on NDTV Profit, and let's take a look at the benchmark Nifty, because just over the last 5 to 10 minutes or so, you've seen a little bit of a wobble, and we're trading. Of course, we've been trading in a pretty narrow band, but then you're seeing headway towards the close price of yesterday. And the broader markets also, the mid-cap index slipping into the red. You have cuts of about 0.2% at this point for the benchmark mid-cap index, and the small-cap index trading with gains of just about less than 0.1% or so. So broadly, you could say that there's a little bit of a wobble at this point. But the question is, does that continue towards the end of the session? Do we see selling as we saw in trade yesterday, or do we see buying come through? And take a look at the advanced decline ratio as well, because you have had a move towards the gainers, but that gap is now closing and narrowing. And this is something, as I pointed out, that you've seen just over the last 5 to 10 minutes or so, where the gap is now narrowing even further. Individual sectors, of course, in focus. You have the IT pack that is losing about 0.4%, and earlier on in the session where you had the consumption pack that was up and about, and FMCG doing particularly well. That continues to be the case, up about 1% or so. But let's talk about automotive, because this was a stock, a series of stocks that was in focus yesterday. It will be in focus over the weekend as well, and that's because of the likely impact of the implementation of the two-rate GST structure that has been approved by the GOM. Of course, that's going to go through the Council of GST, or the GST Council, at the start of September, and once that takes place, the implementation is likely to take a little while as well. Hopefully, it's going to be implemented before the festive season, but in the interim, it's going to create problems for supply chains, for inventories, for dealers, and ultimately, it's likely going to reflect in the auto sales as well. Let's bring in Puneet to tell you about what is expected in the automotive space. Puneet?
it does seem to be essentially that a very specific, companies that are going to be in focus this time, and there's one definite surprise in the two-wheeler space, to say the least. So let's start off with that, because let me first just divert your attention to the bottom of your screen now. Eicher Motors is expected to have 109,000 vehicles sold in this particular month. That's a 48% jump just in the month of August. Almost 11% of the company's annual sales in the month of August. And that just seems to be essentially not that the company has done something, but the GST, nomenclature essentially, and people presumed, and that's what I was speaking to a few analysts about, that 350cc will attract 40% GST from the current 28%. What people assume that Eicher would essentially get expensive in this particular time frame, but the model is actually getting cheaper because it's 349cc and not 350cc, and hence there was a pre-buy or a rush essentially for the consumers, and hence this stupendous number for Eicher in this particular month. So that is leading the growth and the major surprise there. The other ones, TVS Motors continuing its momentum with scooters as well as exports, but Eicher was the big surprise this month. When you look at the other four-wheeler makers specifically, we are expecting a subdued month across the board, and M&M is also one of them, because we did break the story this morning that from Mahindra they've asked dealers to pull back on some additional inventory purchase. That has impacted the sales in this month, but largely for the rest, it's been a continuation of what's happening in FY25 for Maruti, Hyundai as well as Tata Motors. Truck makers specifically have done well in this particular month, continuing the momentum. So the likes of Ashok Leyland, Tata Motors, CV Space as well as VECV have done 1 to 6% growth. That's a decent performance at a time in the monsoons where we don't see a lot of purchases by fleet operators. So expecting a decent month there. And for the tractor makers, lastly, specifically, seeing a 4 to 6% growth. Again, for M&M, we've seen the export growth in tractors do well as well. But this month, arguably, will be one of the best months for Eicher Motors. The first time they'll cross 1 lakh units in a particular month, 11% of sales. And probably this GST nomenclature has worked in the company's favor this time.
Yeah, important to understand and pay attention to how this works. Of course, the numbers that Puneet was just speaking about are wholesale numbers, and these are the vehicles that are sent from the factory to the dealership. They're not necessarily indicative of final sales. Those are retail sales, and that is reported separately. And so usually before the festive season, you will generally have automotive companies bulk up their inventories, and so therefore you'll see wholesale sales pick up in any given month. But of course, the added confusion and complication of the imposition of the GST, or the change in the GST structure, is going to play out as well. Mahesh Ojha, market expert, and Akshay Bhagwat, Senior Vice President at GM Financial, joining me now. Thanks so much, gentlemen, for taking the time. Mahesh, I'll come to you first on the automotive pack. I know, and we've spoken about this already just in the last half hour. So I'll ask you to very quickly tell me what your top picks are in the automotive space, and maybe 1 or 2 lines on why.
I think Eicher could be top picks, and I think Eicher could be much more benefited from GST rationalization, and also we can see a festive season benefit to Eicher. So I think Eicher can be top pick, and followed by Escort, and I think Hiromoto and Bajaj Auto could be a next one.
So we've given you a comprehensive view. In case you missed it, we also spoke with Gaurang in the last half hour, and we asked him about his automotive picks as well. But on the charts, Akshay, I'm just wondering whether there is expected to be some flagging after the kind of run that it's had, the automotive pack as a whole. It's had a pretty red-hot rally. Would you agree?
Good afternoon. Absolutely agree. Most of the auto names have already had their fair share of rally. Now, if you were to kind of time which stocks did not actually participate, then you can look at Escort's Kabuta, which is around roughly 3593. So this stock has not rallied that much compared to its peers, and I think this is on the verge of a possible breakout. The level to keep a watch on is 3700. So if you have a price scenario where this level breaks through and sustains about 3700, 4100. Potentially 4100, 4200 can be the targets in the making for the month of September. There is a strong support base building up at the levels of 3300, and breakout is what we have to keep a tab on. So this is one stock you can eye. And Maruti is another stock. This, although it has moved on very strong, but I think a slight dip if you get around 14,500 or 450 zone would be a more risk reward suitable bet in this auto major, where on the charts front this is an absolutely strong chart, and I think 15,300 would be in the making in the due course of time.
Okay, Maruti, Suzuki and Escorts, by the way, take a look at the chart. It's seen a pop in the last 5 minutes or so. It's at the high point of the day, 3.5% higher at this point. And it is, in fact, one of the stocks that Mahesh also spoke about. But onto an NDTV Profit exclusive. India's largest SUV company, Mahindra & Mahindra, has advised its dealers to not build inventory on cars that attract a high cess. And Danish Anand has this report.
Sources have told NDTV Profit that Mahindra & Mahindra has informed its dealers to not build on a high inventory of those cars that attract high cess. Well, Mahindra & Mahindra is majority a SUV company, and we have seen that they have popular cars like Thar and Thar-Box, which attract a cess somewhere between 20 to 22%. And on other Mahindra models like the XUV 700, there is a 22% cess, and similarly on other models like Bolero Neo and Scorpion N, these all cars attract 22% cess, and hence, just as a safeguard, since there is no clarity around cess by the GOM or the government per se, hence M&M has advised dealers to not build on the inventory. Rather, they have told the dealerships that you should get only those cars that are already for sale, because we have seen that cars like Thar and XUV 700, they have a very long waiting period, and usually dealerships, they try to build on an inventory of these cars, but in a scenario when there is no clarity whether cess will be applicable or not, and if cess is not applicable, then what will happen with the accumulated money? So they don't want their dealerships to tussle after the GST council decides on GST on high-end vehicles. So all in all, if we see what money, so they don't want their dealerships to tussle after the GST. NDTV Profit has turned to the fact that M&M has advised dealers to not build on the inventory, only get these cars when they feel there is a need to give this to the retail buyers. On the inventory, only get these cars when they feel there is a need to give this to the
All right. So that's the perspective on Mahindra & Mahindra. There's also news in the electric scooter market, and TVS Motor Company has launched its latest electric scooter, the TVS Orbiter, as it is called, with several features that you should pay attention to. In fact, it's priced at an ex-showroom cost of 99,900 rupees, and that's inclusive of the PME drive scheme in Bengaluru. My colleague Puneet caught up with the TVS Motor India two-wheeler business president, Gaurav Gupta, and spoke about the target for the first-time buyers and how they decided to price the product. Listen in.
With this entry that we have gotten in the overall EV landscape, this will target also the first-time user for coming onto the EV segment, number one. Number two, in terms of, you mentioned the IQ being a family scooter, and that's rightfully so, is well poised in that segment. The Orbiter will, of course, be targeting a much younger profile, a much more urban profile. At the same time, the ones who are looking at practicality of zipping around, and therefore for a daily commute, which will be a great solution for them. In terms of the overall price point, we always have believed in value maximization. And in terms of the features we brought in, first time we've got a 158 kilometer, IDC range in this segment, which is going to be a wow. We've got a great combination of a front wheel of being 14 inches, which is again being a first in this segment, loaded with technology as well in terms of whether it is cruise control, hill hold, as well as connected features. Packing all of that in a great design package all put together, we've got the pricing, which we feel has been studied well and should appeal to the customers.
All right, let's talk about some other stocks as well that are in focus in the news. And we got Vansh joining in to tell you what's on his list today. Vansh, what are you picking up?
Well, yes, so let me start off with CG Power. Now, the company's arm has launched its outsourced semiconductor assembly and test facility in Gujarat, that is G1. Now, the company would be investing about 7,500 odd crores over 5 years to develop these two facilities, G1 and G2. Now, this is a JV between CG Power, Renesas Electronics and Stars Microelectronics. And now again, the G1 will have a peak capacity of about 0.5 million units per day. Second on my list is Apollo Microsystem. Now, the stock is up. Now, this is on the back of the news that the company has approved a production agency for multi-influence ground mines by DRDO. Also, the company has entered into an agreement with DRDO for transfer of technology for a type of explosive payload carried by a NASM missile. Third on my list is Samvardhana Motherson. Now bought a lot of acquisitions by the company. The company will buy 81% stake via its arm in Yutaka Gikin, 11% stake in Shinchin, and 100% stake in Yutaka Auto Parts in India. The acquisition will be about 1600 odd crores, and the acquisitions will further strengthen the company's global partnership with Honda and will also enable the company to expand its market share with the OEMs in Japan. Now, company will also buy additional 20% stake in Yangshine Motherson for rupees 6.5 odd crores. Now, these are some of the stocks that remain in focus on the back of the developments that I mentioned.
Okay, Vansh, thanks so much for taking us through that list. Apollo Microsystems and the defense pack as a whole, that's something I want to talk to Mahesh about, and also Akshay. Mahesh, this is a pack that is seen quite a bit of chop and churn, and even as we speak, this particular stock, Apollo Micro, is at 7.5% higher. But then in trade yesterday, it was one of the big losers. I'm talking about the pack as a whole. How would you approach buying in this category? Because the potential is clear, but the valuations are particularly expensive.
Definitely, the valuation are quietly expensive on these levels, but we are, as we have already spoken near 120 level on your channel earlier, that Apollo Micro have much more potential up to 300 level. Now, quite they are getting much more order, much more, I think, much more opportunity in this segment for Apollo Micro. So I think stock has some kind of upside potential is there. And yes, quite P is high, but yes, we are optimistic for some more kind of order, more kind of positive for stocks. So up to 300, I think stock can touch up to 300 level.
Okay, I just want to draw your attention to what you can see on the bottom of the screen. That is where news breaks, of course. And this is word coming in from a Karnataka minister. And what he's essentially saying is that all opposition states have agreed to the GST rate cut. The rationalization, according to that minister, should be supported by a robust revenue protection framework. And this is, of course, the Karnataka revenue minister. But what they're essentially saying, and this is something that is likely to be echoed by a lot of the states, because if there is a move to a lower rate regime with two slabs, there could potentially in some categories be revenue loss for the states. And of course, the compensation cess regime is also set to end. So there's part of what he's speaking about. There should be a guaranteed compensation mechanism for at least 5 years, is a statement that the Karnataka minister has made. The present proposal without compensation will cause damage to state revenues. This is an important statement because the removal of the compensation cess as is envisioned, because ultimately this is something that was extended. It was supposed to expire a couple of years back. It was extended to 2025. And so as things stand, it would expire in 2026. But at the same time, this is important for the states because if you're moving to a lower rate regime, there could be revenue loss. So you have a situation where sin goods are already attracting a higher rate of tax. There could be something on that front as well. All of this and more, remember, is going to be discussed in the GST Council meeting, and quite a bit of this will be hammered out, hopefully, at the start of next month. And we're all waiting for the clarity that hopefully will emerge sooner rather than later. Now, we were talking about the defense pack. And Akshay, I'm just wondering on the charts whether you're seeing any opportunities, because you blink and you miss it. Unfortunately, it is how it is, right? In the sector, if there is a large order win, or if, for example, like in Apollo Microsystems, there's an announcement overnight, the stock moves very, very rapidly and you kind of miss the opportunity in the short term. Do you see any opportunities on the chart?
Well, honestly, for most of the stocks in the defense pack, they are trading in a negative price trend from a short to medium term. Especially if we were to talk about Apollo Micro, which we were just discussing now, that chart has a very strong price structure, and there is a lot of opportunities because clearly the price trend is very strong here, and there is confirmation about 245, 250 being the new short-term base for this stock. In all likelihood, the technical parameters too are suggesting upside targets till around 285 to 290 zone. So yes, this is one stock which you can single out and buy from a short-term trading perspective. Your support is 240 and 285, 290 can be the potential upside targets.
Got it, Akshay. Thanks so much for that. And in fact, thanks so much for joining us today. Mahesh, you as well. Thanks so much for taking the time. Right, now, on to news. And former RBI Governor Urjit Patel has been appointed as the new executive director at the International Monetary Fund. He succeeded KV Subramanian, who was recalled 6 months before his term ended. Let's get Pallavi in to tell you more about how significant this is. Pallavi?
Right, Alex. So, Urjit Patel, like you mentioned, is the former governor at the central bank, and he has been appointed as the executive director at the IMF. This is for a tenure of 3 years. Now, Mr. Patel served as the 24th governor of the RBI. His term was between September 2016 and December 2018, and all of us, of course, do remember his exit from the central bank, which was fairly abrupt, and a few months before his tenure was set to end. He succeeds KV Subramanian as the executive director at the IMF, and Mr. Subramanian was the 17th chief economic advisor to the government of India from 2018 to 2021. Post that, he was appointed to this post, and here he was, his term also ended abruptly, and he was asked to leave about 6 months before his term's tenure.
All right, so thanks so much for giving us the context of what has taken place. Now, India's economic growth is likely to continue to stay resilient in the April to June quarter, despite easing from the previous quarter. The GDP growth numbers will come out soon, and they're estimated to have grown by 6.6% in the first quarter, and that compares with 6.5% in the first quarter of this financial year, and also 7.4% in the preceding quarter, that is in the fourth quarter of last year. Pallavi, what can you tell us about how significant this number is and what specifically you'd be looking for?
Absolutely. So, India's GDP is broadly expected to continue to remain resilient, and this is despite the fact that we're going to see some downtick in this quarter's figures compared to the previous quarter, that is Q4 of the last fiscal year. Now, GDP is estimated to grow by 6.7% for Q1 FY26, and that's according to a median poll of economists on Bloomberg. That's compared to 6.5% that we had seen in the same quarter in the last fiscal year, and that's compared to 7.4% in Q4 of the last fiscal year. GVA, meanwhile, is estimated to grow 6.4%. This means that the divergence between the GDP and GVA figures is expected to continue, but it is expected that this divergence will be narrower than we have been seeing in some of the preceding quarters. Now, what the GDP print has got support from in Q1 is the base effect, which has been supportive, the pickup in indirect tax collections, and also disinflation. The sharp moderation in the WPI as well as the CPI has resulted in the GDP deflator growth slowing down. Now, let's also take a quick look at some of the key industrial and sectoral trends and what we are expecting them to pan out at. So, according to ICRA, the pace of expansion in agriculture is expected to remain strong, but it may be a tad lower than what we had seen in Q4 of the last fiscal year, industrial GVA is likely to have been hit to some extent by the ongoing southwest monsoons. This is likely to weigh especially on mining and electricity, and outside of industrials also on construction. Industrial GVA is estimated to come in roughly at about 4%. That's again according to estimates from ICRA, and that's compared to about 6.5% on an annual basis we had seen in Q4. Let's also quickly look at expenditure-wise trends. We continue to see private capex remain tepid, but government capex has remained strong. We're also going to be watching out for what consumption trends look like.
Got it. All right. Thanks so much, Pallavi, for getting us those details. I do want to point out that while we've been focusing on the capital markets, while we've been focusing on equity, the rupee has been sliding just a tad bit. And in fact, it has fallen 35 paise to a record low of 87.95. That's a considerable slide actually for one trading day. And we'll get on somebody to give you a sense. I believe we are attempting to get in touch with Anindya Banerjee, who's the Senior Vice President of Currency and Commodities Research at Kotak Securities. Anindya, thanks so much for taking the time. Help us understand this. Of course, the slide is in the context of everything that you're seeing on the external front with trade, isn't it?
A very good afternoon, and thank you for having me. Yes, the larger picture is the concern over trade, and plus some outflows from the MSCI, as well as some technical levels per breach, because the moment the market started to trade above 87.60 on the spot and sustain, some strong demand came from the importers who were unhedged, and that pushed the market towards the all-time high on the USD INR. Now, if it breaks 88, then we could see a fresh leg of demand as well.
In the past, there has been intervention to ensure stability, and that is the stated objective of the central bank as well. They do not, according to them, and this is on numerous occasions they've clarified this, defend a specific level. Do you anticipate that there will be intervention and that a cap will be found?
Right. See, yes, the RBI has been quite active in the FX market, not now, for a long, long time. But one thing we have to understand, that when you are fighting a trade war, you need the support of the currency as well, at least temporarily, but it will be beneficial if we get a slightly weaker Indian rupee. It's not that it's depreciating in a rapid way, but some weakness would actually be beneficial when we are fighting the trade war. Because the same thing happened, if you remember, in April when China was targeted by America. Then the Chinese currency too depreciated a bit, giving cushion to their exporters.
Yeah, absolutely. From a layperson standpoint, Anindya, that was exactly my question. At a time when exporters are being squeezed on the trade and tariff front, maybe just a small leg up in the way of a currency cushion. But directionally, where do you see this settling towards the end of this year?
Right. See, the best thing about, or I would say the strength about Indian rupee is that it's already one of the weakest currencies for the last 1 year, if I take the 12 months as a period. Now, that's why that is positive, is because internationally, dollar is weak. We are not in a strong dollar environment. So whenever this tariff issue, the extra tariff of 25%, is resolved, because there have been a lot of positive overtures from the US administration. Once it is resolved, we could see a very sharp catch-up on the Indian rupee. So yes, in the short term, it creates a problem for people who have dollar liabilities, or they have to make dollar payments which are unhedged. But over the medium term, I think the market will snap back and the rupee will find a much lower level. In the sense, USD INR will find a lower level.
I understand. It's important to understand which side of the pair we're talking about. Thanks so much, Anindya, for taking the time. Pleasure speaking with you. All right. Well, with that, it's a wrap on this particular edition of Profit Buzzers. It's been an absolute pleasure bringing it to you from the team that put the show together. Thank you so much for watching. Do stay tuned to NDTV Profit.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
That's huge. That is a biggie. It's out there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the
Hello and welcome. You're watching Small Cap Bazaar on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, if you look at the benchmark indices as Nifty 50 and Nifty Bank, we started off on a good note, but at this moment, both the indices seems to have given up most of their gains in trade. But let's go across to Anushi to understand what's been buzzing in the small cap segment.
Right. So as usual, we start off with what's happening with the mid cap and the small cap indices. So what we are looking at is on shaky grounds is what we are seeing currently. The Nifty mid cap 150 flat in red is what we are looking at. While meanwhile for Nifty small cap 250 is what we are seeing is a flattish moves over here as well, just a little bit in green, a little bit of an uptick in the last half an hour or so. But let's talk about some of the stocks which are buzzing in trade today. So in fact, in small cap, if you are seeing some of these stocks, that includes the likes of Granules. Now this is up over 7% in trade today. If you look at the year-to-date chart for this one, it has seen relatively underperformance, down about 17% or also. Godfrey Phillips and Saman Capital, the other two stocks in focus, seeing gains of around 3 to 6% each, while what is also working out is something like a HBL Engineering. In fact, it has been one of the stock gainers of this past month itself, seen gains of over 40%. RBL Bank and Electra Green Tech, other two stocks in focus, seeing gains of over 4%. Now Electra Green Tech did see some of those gains cooling off now, while on the losing end, what we are looking at is something like a Sobha, down about 3%. In fact, if you look at the Nifty Realty Index, that's again in pressure in trade today, down more than 1%, and it's a pattern that we've seen yesterday in trade as well. Aegis Logistics and Vardhaman Textiles, the other two stocks, also seeing cuts of over 3 to 4% as well. So Samit, in terms of the small cap gainers and losers. This is what we are looking at, and these are the top stocks in focus in the space is what we are seeing.
Well, let's also welcome in our market guest for the show today, Prashant Tapse. Prashant, coming to you. Well, at the start of this session, we were sitting on good gains, but as of this moment, it seems like profit booking has started at higher levels. How are you looking at the markets currently?
Obviously, yes, the markets are in the profit booking zone from last 3-4 days. Yesterday was an expiry day that also took away all the gains which we made in the earlier trade. The GST reform news on the 15th of August gave some kind of positive sense for the market. But again, the way how global markets are reacting and the way how the Trump tariff impact is getting into industrial impact for Indian economy. So markets will see some kind of profit booking session for a few more days. But again, the downside is very limited. Technically, if you see 24,350 can be a level to wait and watch. That would be a level where markets can go to oversold zone. So overall, the trend is still negative.
Right, and with that, let's go across to our first stock for the day that has been buzzing on the counter. That's Advanced Enzyme. It's a Thane-based global enzyme leader manufacturing for pharma, nutraceuticals and animal nutrition. The trading volume saw a big spike, in fact 12.4 times its 30-day average. What could be the spike about? Let's get in Varsha with more details on the same.
Yeah, thank you so much for that. The reason that the stock is buzzing is purely on the base of volume, as you rightly said. The volumes are at 12x of its 30-day average. But let's see what this company does and what's the outlook going ahead. This company manufactures enzymes, and they manufacture enzyme-based products for pharmaceutical and nutraceutical segment. They also, make products, enzyme products for animal nutrition or feed additives. So basically, they make enzymes for feed additives when it comes to animal nutrition industry as well. Now, on to the new subsidiary formation that they have done. So basically, the name of that subsidiary is Advanced Nutra Enzyme. Now, the focus of this subsidiary is for B2C segment, because they want to increase their B2C business, and the focus will be on sales of nutrition and wellness products. Onto the EBITDA margin, if I were to talk about, if you see historically, the EBITDA margin for this company have been more than 40%. Now this was because of the change in the product mix, and of course most of the revenue coming from US. But now the EBITDA margin is expected at around 30 to 33%. That was the guidance which has been given by the management. Onto the outlook for this company, if I were to talk about when it comes to for FY26 and of course for midterm, so they're expecting mid double-digit growth when it comes to FY26. But overall, for a long term, if you see for a medium term, that is 3 to 5 years, they're expecting a double-digit growth only beyond FY26. So basically, the stock is buzzing only because of based on the volumes, but overall outlook when it comes to 26 and 27 remains positive with respect to margins as well.
Right, Prashant, coming to you on this counter, Advanced Enzyme, 7% uptake. Would you advise your clients to go ahead and buy this counter or exit?
Buy this business, not the price at this point of time. With respect to the last 2 days rally in the stock, there will be some kind of profit booking attempt seen very soon in the next week. So I am very much comfortable with the company in terms of business model, the way they have created their new subsidiary and focus on the nutrition products and the B2C business model. That is creating a lot of buzz in the business model. But again, if you see, there has been increase in the mutual fund stake also from 5% to almost 8% in last 1 quarter. So that is creating a lot of positivity in the stock. I will be a good buyer if the stock comes down to 320 at 330 levels.
Okay, so that's the view that we are seeing for Advanced Enzymes. But let's talk about Garuda Constructions, which is also in focus now. Now, if you just pull up the stock performance for this one, we are looking at strong gains, up over 9.5% in trade today. So, in fact, in the last month or so, the stock has seen about 15% of gains, and in 6 months, the stock has more than doubled is what we are looking at. Just in terms of how the quarter had fared for the business, we had seen about a 256% of growth in terms of where the revenues were. Margins stood at about 29% as compared to 33%, and net profit in line with what the revenue growth is, had also seen about a 200% plus growth. Just a bit about the company is what we are saying. It provides end-to-end civil construction services, and this pertains to residential, commercial, infrastructure and industrial projects is what we are looking at. If you are looking at the order book, now the order book is roughly around 3,000 crore. This is more than a 13 times of a multiple that we are seeing basis on its book-to-bill ratio, and 60 to 65% of the order book is from the government side is what we are looking at. Now, when the management came to us just a month ago, they did say that they have a net debt-free position of the company, and they continue to they would continue to maintain so by the end of this fiscal year as well. So this is the outlook that we are seeing on Garuda Construction. Prashant, coming to you on this particular stock, what's your view?
Again, strong order book, and again, with respect to their model, asset-light model, very positive to see how they are going into infrastructure growth going forward. The way how they have done their order book from last 2 to 3 months, the order book has already doubled. It was around 1400 crores in January, and now it is almost near 3000 crores. So which is almost like 10x to their last financial year top line. So that is giving me a lot of visibility for long term, but again, not a good aggressive buy at this point of time. The stock has already doubled from last 2 to 3 months. So I will be waiting for some kind of cooling down of the prices and then take it forward. Valuation wise, very comfortable right now, but again, I'm looking for some kind of cool down in the price action.
Right, with that, let's welcome in our first management on the show, Sukrit Bharti, MD of Virtuoso Opto Electronics. So firstly, to start off with, the GST rate cut that is expected to come in specifically for air conditions, how do you see that to be a big positive for the company?
Very good afternoon. Thank you for having me on your show. So I think it will be a big boost to the overall market in terms of sales, because ultimately the benefit passing on to the customer will vary between 2,000 and 4,000 rupees. I think it is a very strong step and will help the further penetration of air conditioners in the market.
Right, and given the fact that Q1 sales were not that great, and there could be some inventory issues because people are holding up their buying decisions given the fact that they're also expecting this GST rate cut to come in, which will lower the prices. So what is the inventory situation with you, and how are you managing that currently?
So inventory situation overall in the market is high because people anticipated a much larger season as compared to last year, but early rains came unplanned, and hence the inventory levels overall are high in the market. In our state, as a manufacturer, our FG inventory levels are of course not high, but RM inventory levels are slightly on the higher side. We did anticipate a flattish season this year in the first 2 quarters. The next 2 quarters seem to be interesting, and but we'll know for sure only by October how the second half of the year looks like.
Mr. Bharti, this is Anushi joining in as well. Just on that note, while for Q3 and Q2, we'll keep a track in terms of how the demand environment is shaping up. Just want to understand, what's your overall guidance for the year? If you can give us an outlook in basis of that.
So the guidance at the start of the year is 1,000 plus minus 100 this year. And we see how it pans out. The first, like I was mentioning, the first 2 quarters are flat, at least in the AC segment. We are seeing growth in other segments like commercial refrigeration. We are of course entering the compressor segment, so we anticipate a lot of growth coming there also in Q3 and Q4. EMS is also doing well, but AC segment, yes, for the first 2 quarters is degrowing. I think it will cover up probably in the third and fourth quarter.
So what is the kind of growth that you're expecting for the full financial year?
As of now, we are maintaining our guidance of about 25 to 35% growth, but we'll be able to give you a more accurate picture by Q3.
In terms of the capacity expansion plans that you discussed, now one interesting area that we are looking at is the compressors in the refrigeration segment. Just want to understand, now the production is expected from the third quarter onwards. What's the kind of outlook that we are building on to that? What's the kind of growth picture that we have in mind for once the ramp up is in place? So just give us an overall timeline in terms of the expected ramp up as well, and the kind of incremental revenues that you wish to generate from the segment.
So compressor, I think, is a large gap in the Indian market. Out of the 22 odd million compressors that are currently being used in India, between 12 and 14 million compressors are currently imported. As I'm talking specifically about the refrigeration compressor. So we see a strong opportunity there for Make in India, and so we've created a capacity of 1.8 million units per annum as of now, and once we are starting to tie up with customers with the short and long term contracts, and once the contracts are in place, we plan to increase our capacity to 5.6 million over the next year. So next year onwards, we hope to see better revenues coming from this segment. Also, it depends on the government's stance on extension or enforcement of BIS. If there is extension of BIS, then only a certain percentage will be sourced locally. But once the BIS enforcement comes in place, probably in April next year, then I think sourcing from India will become mandatory, and that will help us use our capacity to the fullest.
Right, sir. So recently you did do a fundraise from Malabar Investment of around 140 odd crore rupees. Could you help us understand how do you plan to utilize this funds, and where are you going to invest this, and how much of a revenue potential from that investment are you expecting to come in?
So we are investing the funds both in expanding our existing verticals and also in compressor. And the remaining funds are going towards working capital requirements of the company, since we are growing at almost 30-35% year on year. So that is one. We are expecting, so in AC, we have increased our capacity to 1 million units per annum. In compressor, like I mentioned, we've set up new capacity of 2.8 million. In washing machine, we are creating a capacity of 250,000 pieces per annum. And we are also increasing our EMS capacity. Lighting being a subset of the EMS capacity, but we are increasing our EMS capacity substantially next year with this investment.
Right, sir. So this expanded
commercial refrigeration.
Right. You can continue, sir.
Sorry, commercial refrigeration also. We plan to next year go from 250,000 per annum to 400,000 per annum.
So this expanded capacity that you just mentioned for different segments, by when will those get operationalized or commercialized, and what is the kind of revenue potential that one could see from this expanded capacity?
So 3 years, we are looking at a revenue of 2,500 to 3,000 CR as a company over a 3-year timeline.
And will the bottom line...
these expanded capacities.
Right. And will the bottom line still be at the same margin? The net profit margin will remain the same, or could there be some expansion on that front also, given the fact that there will be operating leverage that could come in?
So EBITDA margins, we are anticipating to be to continue to be in the range of 9% plus minus 1%. PAT margin depends on, of course, our split on equity and debt and what is the interest bearing. But we anticipate slight improvement in overall bottom lines. And again, 3% plus minus 1% would be the right guidance for bottom line.
Right. Just on that, also want to understand, whether you have plans to enter the compressor segment for ACs as well. Now, if you're looking at the current mix, you're seeing the mix of ACs going virtually down, but just overall, because, there's a lot of import dependency that we are looking from this particular segment. So are there plans for that as well?
So AC compressor require a larger investment and as compared to refrigeration compressor. Also, I feel that there are already 3 or 4 players who have come in and who are putting in a lot of capacity for AC compressors. Hence, we have right now decided to restrict ourselves to refrigeration compressors. But if things go well, maybe in the future, let's see.
Okay. Thank you so much for joining in and sharing that outlook on the company. So, well, that was the management of Virtue. So, it's what we are seeing. Prashant, coming to you on this counter, what's your view?
Usually we don't track SME as a stock, but again, the segment is very much attractive with respect to EMS as well as the white goods sector in the electronics segment. So any company which is focusing more on the outsourcing model as well as manufacturing ACs and AC equipments, very much bullish for medium term to long term. In the mainstream, I think we are very much bullish on EPAC as well as on the Ember Enterprises. But again, this stock is an SME stock, so we don't track it.
Right. Yet another stock that remains in focus is more. The stock is up over 5% in trade. What could be the reason behind that? Let's get in Jasmeet with more details on what does the company do. In fact, the stock is down, the stock is down around 5%, but let's get in Jasmeet with more details on that.
Well, right, yes, thank you for that. Rightly said, the stock is down today. This has come after the buzz of the stock. When you look at the stock, it's nearly up 77% over last month, and over last 6 months, the stock is nearly 170% up from its trading price. Well, let's quickly understand a bit recent update about the company, then we'll quickly understand what does the company do. While recently, as of August 21st, the company's micro division received an order, like they have invented a new semiconductor packaging device. While this conductor would be semiconductor packaging device, as photonic device, will be used by industry across consumer-based telecom as well as automotive, which is a positive for the company. When we look at the growth market of the semiconductor packaging industry, as of current year, it stands at 2.65 billion, while as of FY30, it's expected to grow up until $9 billion. So there's a huge growth potential for this particular packaging, and that is the reason why the stock was buzzing in the trade. Now let's understand what does the company do. Company is basically operating into interactive marketing solutions. While they have high-tech automotive and e-tailing companies, where the business segment, when you look at business segments, there is segment of Izumo Studio, that's basically interactive media product, which nearly covers 40% of the revenue. Then the other segment is Izumo Cars. While the Izumo Cars is again digital retail platform, which nearly covers 29% of it. Then there is Frog Data, which is AI-based platform for automotive images, nearly covering 27%. And the last one, the smaller, is Izumo Micro, which is the one which saw the invention of the packaging product of semiconductors, and it's currently 4%. So we can expect this to grow going ahead if the company further proceeds under semiconductor packaging. When we look at a geographical split, India basically covers 11% of the entire geography, while the Europe covers 18%. The largest segment of the company stands with North America, nearly 71% of the revenue flowing in from that particular region. The key financial highlight as of FY25, where the revenue stands at 225 odd crores with a margin of 17 odd %. Now let's understand the Q1 highlights of the company, what exactly happened in the Q1. The revenue was down to 5%, currently trading at 56 odd crores. When we look at the EBIT, it was again down by 16 odd % at 5.4 crore. When we look at the key profits, they are down by 11 odd %, trading at 6 odd crores instead of 6.8 crores in the previous quarter. So it is something to watch out for, and this is the reason the stock is buzzing in trade today.
Prashant, any views on this counter, Izumo?
Again, the stock was in burst suddenly 2-3 days back because of the semiconductor news watch the anchor has updated right now. But again, I think that will cool down very soon. I think that expansion plan will take its own time to execute for at least 1 or 2 years. But considering the main business model, I think it's a very risky, high risky and high return category stock. So one should avoid this stock at this point of time.
Okay, so that's the view that we are seeing for this particular counter. But let's talk about a sugar company, and now that has posted some mixed Q1, and this is with cost savings that we are looking at. To talk to us more about this, Vansh joins us with more details.
Well, yes, so let me talk about the details of the company. Now, the company is a fully integrated sugar, ethanol and renewable power-based company in Karnataka. Now, they have scaled their sugar capacity from 1,250 tons of cane per day to 4,750 cans per day. And now they are a manufacturer of ethanol using both sugar and grain-based feedstock. Now, if I talk about the Q1 FY26 performance, the EBITDA was aided by the lower employee and power and fuel costs. The revenue was down due to the fall in the sugar and the distillery segment. And if I talk about the Q1 FY26 results, what really stood out was the margins. The margins stood at 47% versus 20%. If I talk about the segmental results of the company, the sugar segment revenue was down at 4 lakhs versus 11.88 odd crores, and the distillery segment revenue was down 35% at 23 odd crores versus 36 odd crores. If I talk about the future plans for the company aims to surpass the 5 lakh million tons of sugarcane crushing in the coming years, and they are targeting an increase of 15,000 acres of sugarcane cultivation as well. They have also plans to enhance their ethanol capacity from 65 kiloliters per day to 85 kiloliters per day as well. So this is what the overall picture is looking like for this particular counter as well.
Right. Thank you, Vansh, for that extensive link. But another thing interesting about this company is the rights issue. They have a market cap of 500 crore and they're looking to raise close to 140 crore rupees via rights issue. Prashant, have you looked at this counter? Any views on this?
Obviously, yes. Any company which is focusing more on the ethanol as a business is taking some kind of buzz in the markets. Like again, the right issue as well as the expansion plan with respect to their sugar cane capacity, which is creating some kind of buzz in the stock. But again, the stock is a very high risky, high return category stock, and the very small, almost like less than 500 crores market cap. With respect to valuations, very much expensive at this point of time, trading at almost 50 PE forward and even 2 price to book valuation, and even the ratios are not so healthy with respect to ROCs and ROEs. So it's a high risky, high return category stock, and one should avoid this stock at this point of time.
Okay, so that's the view that we are seeing for this company. But let's also talk about defense again, and the company focuses Idea Forge technology. Now, what we are looking at is, if you are looking at the stock, it's up over 7% in trade today, and this is in contrast with what's happening with the relative, 5 months or even the year-to-date performance of the company, wherein it has been relatively flat, or in fact, in this 1 year, it has seen about a 30% of a downtick, and this is on account of the FY25 numbers that had come out along with Q1, which had been more on the muted side. Just a bit about this company. Now, this company is into business of manufacturing drones. It currently has an order book of around 145 crore. Now, this has seen a relatively higher order wins in this particular quarter as compared to FY25, wherein the order book stood at 13.6 crore. FY24 and 23, we had seen an order book of around 124 to 192 crore. The use case for this particular is in civil use as well as mapping applications. In the last 2-3 years, what we've seen is the mix of defense has also gone down relatively to more civil side of business is what we are seeing. Expectation again is government procurement to drive the market size going forward for the business, and this is with an EBITDA margin growth of 20% is what we are looking at. R&D capex for the particular year is fixed at about 77 crore. So overall, if we had seen in last year, drone industry, they had a particular set of headwinds which had now eased off, and the management continues to have a healthier picture in terms of how the order book is going to shape up. So that's the outlook that we are seeing for Idea Forge building up. Prashant, coming to you for Idea Forge, what's your view on this counter?
With respect to its product, very much bullish to see how it will take towards the export market going forward. But again, the way how the stock has performed in the quarter-on-quarter, again, this is the fourth quarter they have underperformed with respect to their losses. Recently, they got some kind of permission from the DGCA for some kind of unmanned product. But again, the order book remains very bullish. Again, the execution is the main factor in this segment. Again, there should be some kind of positive outlook from the management as well as the government support towards the drone segment. So overall time being, again, valuation wise, very expensive, not so aggressive to have a positive outlook on the stock.
Well, that would be all, Prashant. Thank you for joining us and giving us your views on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live.
Very good afternoon. You're watching India Market Close, and what I would say balmy day, sleepy day is another word for it.
Welcome, yeah, bud.
yeah, to the
as long as
afternoon.
we're not correcting.
Afternoon crunch, crunch time. But yeah, it's I think one of those days where nothing much is happening in anticipation of the next week or so. On the one hand, you're going to have maybe some big announcements, and what Prime Minister Modi said this afternoon out of Japan was also very important, where he talked about the capital markets and where we are going as far as India is concerned. But the meeting with Xi Jinping, the meeting with Putin, next week you're going to have GST clarification coming in, and we'll tell you what we are hearing in terms of GST rates as well ahead on this show. So that is where all the action is. Meanwhile, as far as the markets are concerned, completely flat. Some recovery on the Nifty, as you can see. IT stocks are not doing well. The Nifty IT also taking a bit of a dive over there. And you're seeing the broader indices in the advanced decline ratio also in negative territory. Not massively negative, but definitely 24,500 also seems to be a tough one for the Nifty going ahead. There you see it. Very, very volatile kind of a day. Let's see if you have maybe the bears taking control. In terms of key stocks that are moving, I mean, Samman Capital is turning out to be a key buzzer of the day, as is Granules and CG Power. These are some of the big buzzers that we'll talk about through the day as well. The other big story this afternoon, of course, has been RIL. The 40th AGM is underway right now. So Amit Sarkar joining in first up to tell us what's being expected from here.
Yes, the AGM has already started, and what is the street that would want to hear is firstly anything on value unlocking that is expected to come in will be the key trigger for Reliance Industries. Now the street is anticipating value unlocking for the retail arm and the Jio platform. Jio platform is valued at close to 11.9 lakh crore, while the retail arm is valued by analysts at close to 9.4 lakh crore rupees. Now in 2019, AGM chairman had mentioned that they will look to do an IPO for the retail and the Jio arm, but nothing has been announced since then. So that is the key trigger that could for the share prices of Reliance Industries. When it comes to the retail segment, any updates coming in for the quick commerce business and the fast fashion business would be important to track, and any updates on the consumer business, which was recently demerged and has been made a direct subsidiary of Reliance Industries, that is the FMCG business. Any expansion plans regarding that will be announced in the AGM will be important to track. When it comes to telecom, updates on consumer, enterprise digital, how has been the response to Jio Fiber, and how they are looking to export the locally developed 5G stack is important to track. When it comes to the new energy business, disclosures around timelines and commissioning of the new energy projects would be something important to track. Along with this, Street would want to also hear updates related to its fully integrated polysilicon plant. Also, RIL had target to operationalize this new energy platform over the next 4 to 6 quarters. So what has been the progress on that front is also something that we need to track. Apart from these key segments, other things that we need to focus out is updates on the petrochemical expansion, updates on the performance of Jio Hotstar, how has been the response from customers, and how they plan to reduce their power cost by 25% by using their captive green power is something that is important to track when it comes to Reliance Industries. And given the fact that Reliance Industries is one of the major importer of Russian crude, any update that comes on the crude sourcing strategy going forward is also something that the Street would want to know in the AGM speech from 2025. Now, if you look at the share price performance in the last 4 AGMs, post the announcements had come in, the performance was quite weak, the stock was quite muted. This time around, if 2025, if you look at the first 10 days pre-AGM, the stock has been muted. There's no large expectation that is coming in from the AGM, so it would be important to track how the share prices move, because the valuations, if you look at for Reliance Industries, they had a discount of nearly 12.5% compared to what their 5-year average is. And also, analyst community continue to remain bullish on this counter. 92% of them have a buy rating. Consensus target price stands at close to 1,630 rupees, which suggests a return potential of over 16%. Highest target price is 1,950. Upside of 41%, while the downside is limited at 6%, as the lowest target price on the Street is just 1,300 rupees.
Okay, certainly watch out for this one, the big boy, and keep an eye out for that for sure. That aside, Soumit, thank you so much for that. That aside, I think there is some serious traction today in granules, and at some point of time in the show, we'll talk about Granules India as well. And all of this whole GST piece is bringing about traction in a lot of very sleepy stocks. Relaxo Footwear, for example, for the longest time has done virtually nothing and is up about 6.5–7% on very decent volumes as well, I must tell you. Well, Ruchit Jain, Vice President Equity Technical Research Wealth at Motilal Oswal Financial Services, Johnson right now on the show. Ruchit, good having you. Thanks for taking the time out. Is there a trade on the index at all, Ruchit? Because it seems like it's consolidating, maybe a bit of a downward bias, but holding on to that. I mean, we were talking to Chandan Taparia and he had mentioned that 24442 was that line in the sand. So it's kind of holding on to that.
Yes, hi, very good afternoon, Neeraj. So definitely, I think markets have already seen a price-wise correction in last 1.5 months, and we are quite close to the overall support level of 24,440, and followed by the 200 DMA, which is around 24,270. So considering that the lower time frame charts are quite oversold, I think the price-wise downside for now seems to be limited from here on. In case if the support holds on, then some pullback move would be seen. But the worrying factor only is the FIS selling, which is there consistently. If you look at the rollover figures as well, most of the short positions have been rolled over. Firstly, the overall rollover is higher than the last 3 months average. Their long short ratio is around only 8%, means 92% of the positions on the short side. Look at the cash segment figures. I think they have around 38,000 crores of selling in this month itself. So this, and due to this, even we have seen that the USD INR has its new all-time low. So I think these are all factors which are worrying the market participants, and hence we are not witnessing that kind of buying interest which is usually seen on dips in an uptrend. So we think that either from this level of 24,440 or from the level of 24,250, which is the 200-day EMA, we would see some pullback move. But whether that pullback move would be a bottom for a resumption of uptrend, that is too early to take a call. So these are the levels where at least one should not go short on the markets, but wait for some kind of reversal signs from either of these supports for creating fresh bounce.
Okay, so don't go short because the risk reward is not in favor, but maybe wait for a pullback before you initiate longs as well. And maybe that is, Ruchit, I presume that's the advice, and maybe that's the sane advice, right? You don't want to really be a braveheart in a market which is, for now, having a fair degree of, overhead resistances with fundamental reasons supporting those resistances as well. So how do you therefore zero down on ideas, Ruchit? Let's start off first with what are the stocks that you're recommending in the session today?
So Neeraj, one thing that we are just keenly watching is just looking for stocks which are not falling in this market. because generally the relative outperformers which are there, if the market is correcting and if there are any sectors or any stocks which are not correcting, so that is a relative strength itself in the falling market. So look for only such stocks, rather than doing bottom fishing in stocks which are showing very sharp corrective phase. So within such stocks, today we have recommended CG Power as for growing fresh longs. Now, if you look at CG Power, last 3 months the stock was consolidating in a narrow range of 680 to 650 on the lower side. Now today, of course, there was a fundamental development, a positive news flows on this, and but because of these news flows, the stock has already given a breakout from this last 3 months of consolidation. Now, one of the factors which I just told that we are looking for relative outperformance as well. Last 1.5 months when the markets have corrected from its all-time high, this is one stock which has not shown any kind of price-wise correction, but it has been more in a time-wise corrective phase. Now, with this breakout, I think irrespective of markets correction, the stock has potential to go higher. The entire pattern breakout which is there indicates a potential targets around 740, 750 kind of levels. So keeping a stop loss below 670, we recommend to go long on CG Power at current levels for potential targets around 740.
What about a Samman, Ruchit? How are you looking at a Samman Capital that is completely buzzing? I mean, they have a fundraise, but this clearly something has excited the street much more than fundraise.
Yeah, so I think mainly because the stock was already seen some good price-wise correction over the last few months. And after that, what we are witnessing is that 115, 120 was the previous support, swing low supports as well. From this level, we have seen a pullback. And the good thing about today's session is the volumes in the stock. It's not only just price action where the stock is up 7%, but if you look at the volumes and compare it to the recent past daily volumes, then they are much higher than its daily average volumes. So this is a good sign as the risk reward ratio could be favorable for at least a pullback move, if not a big uptrend. And in the pullback move, the stock can see levels of around 138, 140 kind of range. So Samman Capital, because of its support level and good volumes, I think one can expect a pullback towards 140 kind of levels.
Okay, stay on with us, Ruchit. The other set of stocks that are really showing some action today would be in your retail side of things. I want to pull up the Nifty FMCG and its components and see if that action still continues, because there is a lot of hope that there will be some kind of relief as far as GST is concerned. In fact, I'm going to take that question to Prashant Biani. He's Vice President of Institutional Equity Research at Elara. He looks at agri inputs, sugars and hotels. So a lot of consumption basket there that you cover. But let me ask you, Prashant, that how much of an impact do you see these GST rates cutting down to actual consumption boost?
So hotel rates which are below 7,500 have some potential to see GST reduction. So that way, I think the upscale and mid-scale hotels should see some more benefit out of this, and occupancy expansion should be there because of further GST cuts.
Okay. Prashant, the question that could come for some of the themes that you might be tracking is only whether, is one of the key questions that could be, is there a meaningful change in demand that could come in? And again, right now we can only hypothesize what the rates would be, but lay out your hypothesis and then tell us if there is a meaningful change in demand that could be anticipated into your coverage universe.
See, for hotels, demand is mainly driven by two segments. One is business travel, one is leisure. Right. Business travel demand will depend on the economic activity. So if the economic activity improves with the reduction in GST, if there is some a bump up in GDP growth or economic growth because of GST reduction, to that extent we can see increase in business travel and hence increase in the demand for business hotels. On leisure side, I think definitely there will be some benefit of lower GST rate, and that way on the leisure travel in particular, I see more benefit coming in directly. On the business side, it will be more of an indirect demand, which will be hinged upon any improved economic activity from here on.
Okay. So GST is one factor. What about per se the fact that I mean, whatever the economic factors might be, and now that we are hitting the festive season, could there be a bump up in demand, or if not in demand, in the overall top line because of maybe higher ARRs coupled with higher rentals?
Yeah, see, so organic demand is quite good for hotels right now across both business and leisure. But July, we had seen some impact on occupancy front because of the wide body aircraft flight cancellations from Air India. But if we talk about the hotel ARRs, I think ARRs are going pretty strong for July because of the lower travel. We saw around, as per our estimates, 3% average ADR growth for India as a whole. But it recovered very sharply in August with around 8 to 9% ADR growth. September also, the initial indications that we are getting is that the ARR growth should be again in high single digits, and primarily it is driven by business locations, although leisure locations are also seeing good lower mid-single digit kind of ADR growth. So within RevPAR, I think ARR is the one which will drive the RevPAR growth more than the occupancy.
And what are your favorites here if I talk about specifically hotels right now?
Right. So we recently initiated on Slosh Bangalore, which is a hotel Leela. So that I think we are most positive upon right now. If one has a horizon of more than 3 to 4 years or 3 years, I think the stock has potential to at least double from here. Other than that, we also like Chalet Hotel structurally, and IHCL is also the one which we are positive on.
Thank you so much for speaking with us, Prashant Biyani there from Elara, talking about the consumption impact that we'll have from hotels. Well, we're waiting for those details to come out. And, so here's the thing, Neeraj, that I think media is reporting some bits of it, but we have to understand that what the GST Council has right now is a set of proposals from all the states. They have to now be ratified. And one of the things that is being reported is that rooms which are above 7,500 may get more expensive and below might get cheaper. There is also a report about clothes. Now, I do not know if the GST Council is going to do it on the basis of 2,500 and 1,500. It doesn't quite make sense, to be honest. You'll just create so much confusion coming in there. And that's why you saw Trent coming up today in the day as well. I'm talking about Trent as far as, that consumption boost has gone. You had a spike in the morning and then come off because there is such a lack of clarity. So we are going to be putting out what we know is going to be discussed as part of the agenda. What finally happens could be a different story, and that's what we should keep in mind.
We should certainly keep in mind. And a lot of these, I think the other thing is with most of these things and most of the big events, there is a smattering of 6 or 8 versions of what will happen that might get released. So please be very careful if you are trading with that in mind, because what eventually comes out might be materially different. Having said that, Ruchit, there is excitement in some of these consumption names today, right? Colgate is up, Trent is up, HUL is up. They may all cool off on Monday or Tuesday, but I wonder if the chart suggests some strength into any of these which might prompt you for advising a trade.
Yeah, so there has been a good relative outperformance compared to market's correction in these stocks. But if I look at the entire consumption basket, I think a couple of names which stand out over here, which is Britannia is there, HUL is there, especially from the FMCG basket. I think these are the names where we have not seen any kind of selling coming on. Even when there were corrections, small bit of corrections during this month, the corrections were not led by any kind of volume-based selling. So usually whenever we see that when the stock prices go up, volumes are good, on corrections, volumes are low. So I think these are good signs where some strength could be seen. So we'll stick to some of these names such as HUL and Britannia itself, where we can see a continuation of the rally over the next couple of weeks as well.
Okay. And Ruchit, the other aspect is the kind of gains that specific stocks in the large cap banking space have made, right? So we're going to talk about Kotak Bank fundamentally a bit later on. But today, it's up about 1.5%. There is a positive brokerage note out there. Maybe that is aiding a bit of sentiment. After a while, you see some zing in Kotak relative to some of the other banking stocks. Any thoughts here?
So Neeraj, I think one should not read much into one day's move, but the follow-up move would be very important. Of late, we have seen that within the private sector banks, Kotak has shown a bit of underperformance. In April, the stock made a high of around 2300. From there, it has corrected to 1960 and 1950, 1960 kind of range. But 2050 is an immediate short-term resistance for the stock. So we may see some consolidation, but there are no signs of trend reversal as of now of the entire corrective phase that we have seen in last couple of months. So I think too early to say that the stock would make a bottom or have made a bottom over here, but rather I think one should wait for a follow-up move in case if the trend continues in the coming week.
Okay. Just looking at Ease My Trip very quickly. There's a management change between the brothers though. So Ease My Trip has appointed Nishant Pitti as chairman cum managing director, while Prashant Pitti has resigned as managing director. Not too much on the stock at this point that we're seeing happening one way or the other. Ruchit, just want to take a look at what you're seeing in terms of some of the IT names coming off quite sharply today. Do you see anything that you find with a potential to improve if we have good news on tariffs, etc., in the next few days?
So I think selective stocks from the IT basket looks where the downside would be very limited. Stocks such as Infosys is there, or even Mphasis is there. Specifically, if you look at stocks such as Mphasis in the last 2.5 months, when the entire sector has seen a correction, this stock has not broken its 200-day moving average, and the relative correction was much lesser. Even Infosys, from this oversold recently have shown signs of initial pullback move, which it coincides with the previous swing low supports as well. So IT as a basket, I think it's not a phase where the stocks would show any huge kind of trended up moves, but relatively because compared to the markets, they have already corrected in last few months. So I think here the price-wise downside could be limited. But if one has to pick stocks within the sector, it should not be that many of the stocks would go up. But relatively, I think Infosys and Mphasis, these are two where technical structures are comparatively better placed.
Okay, well, we would want Ruchit's opinion on what we are calling the stock of the day today. CG Power has to be, and there are many, but we've chosen this because the company's arm has launched a semiconductor assembly unit in Gujarat. How big is this investment and what could it mean for the company? Anushi Johnson to explain this thing. Anushi, good afternoon.
Good afternoon, Neeraj. Thanks for that. So it's a big update that we are seeing for CG Power, and this is on the launch of it, as you mentioned about the first assembly unit in the semiconductor space that we are looking at. So this is going to be in two phases is what we are seeing, and a huge capex plan is assigned for this. Now what we are looking at is an investment of over 7,600 crore, and this is in a period of 5 years that we are looking to develop these two facilities which are called G1 and G2. So if you are talking about G1 firstly, now that is with an expectation of 0.5 million units. This is the kind of peak capacity that we are looking at per day is what we are seeing. And again, this is a JV between three companies that we are looking at. That's CG Power along with Renesas Electronics Corp and something like a Stars Microelectronics as well. Under construction, G2 is expected to be completed by 2026 period itself, and with this, the potential kind of scale up that we are looking at is around 14.5 million units per day. So that's the kind of size investment is what we are seeing once G1 and G2 both are on stream. Now, in terms of how the company has done so far, now this is the update because of which the stock is buzzing in trade today. But let's also take an overall outlook in terms of how the company is faring up. So in terms of the first quarter performance, now we did see about a revenue growth of 29% in the quarter, and this is with an EBITDA margin of 13% is what we are looking at as compared to 14.7% last year. In terms of net profit also, we saw about a 12% of an increase in terms of how the net profit shaped up. It was the order book which was in particular focus this quarter. If you just look at the order intake, that's about a 56% of an uptick, and this is with an overall order book size of 11,971 crore that we are looking at. So strong revenue visibility. In fact, with this, the management has given an outlook of seeing revenue visibility for the next 5-year period itself, and this is with the expectation that they'll see about a 14 to 15% of profit before tax margins going forward. This would be driven by the improvement in power segment as what we are looking at. So this would be a driver between that margin improvement growth also is what we are looking at. So this is the overall picture that we are building up in terms of where the big update is concerned in terms of this new facility coming on stream for the business. Along with that, how the order book is expected to shape up and provide revenue visibility going forward.
Okay. All right, some news coming in from the Reliance AGM. Jio will list by first half of 2026 is what we're hearing. So that's going to be interesting. You're seeing that little spike up in the stock. Keep an eye on the RIL stock. Meanwhile, just going across live to a conversation my colleague Mahima is having at the Walmart Converge event. She's in conversation with Hari Vasudev, the EVP and CTO at Walmart USA, and Jerry Geisler, the Global CISO. Listen in.
Is to create these seamless experiences for our customers in a way that's not only very intuitive and easy to use, but also is safe and trusted and is consistently available across the board. And that's possible because underneath that layer of super agents, what we have done is we have built a very strong and resilient middleware layer that takes care of all the nuts and bolts of deploying these agents, orchestrating across them, making sure that the long-term, short-term memory and context is maintained, but also do that in a very secure and responsible way.
Right. My question to you, Jerry, is that how is InfoSec teaming up with different tech teams, and how are you viewing that as a big digital transformation, and what's in store next?
For information security, it's a partnership. So Hari's team and our other peers, we work together to enable our business and to deliver the products. So where AI has become a new tool that we use for our customers or internally at Walmart, while it changes the way that we work to some extent, it doesn't fundamentally change what our mission or what our purpose is, and our approach remains very much the same as it always has been, and that is to partner with our peer technologists sooner in our development cycles rather than later.
And considering that, a huge development in the entire IT space that the retail space is adopting, there is, of course, cybersecurity threat that comes into picture, right? How are you, planning to keep that aside and maybe, plan the best way of keeping your data privacy intact?
It actually doesn't change fundamentally our approach. We've always been committed to safeguarding our customer and our associates' data and the data that is entrusted with our business, and maintaining that privacy that would be expected of a company like Walmart. So while AI introduces a new variable, it doesn't change our commitment or our fundamental approach to safeguarding data and privacy.
Correct. And Hari, my question to you is, how do you manage your third-party vendors when it comes to this digital transformation that you're adopting? How does their role be in this entire transformation in terms of supply chain? And then how does data privacy, it's made sure that data privacy is of the utmost importance?
Yeah. So I think I want to go back to what Jerry said in that regard, right? The way we've engaged with our third-party vendors and our partners hasn't changed. Even in the past, when we were consuming microservices or other forms of other products and services from our third-party vendors, we always had to put security front and center. And typically what we do is very early on in the process, as we onboard a vendor, as we're engaging with them, as we're starting to build joint plans, we pull in our InfoSec team into the conversation. They help us work with our vendors to essentially ensure that the way we are exchanging data, the way we are using services and consuming the services from our vendors have the appropriate guardrails built in from the get-go. So rather than think of security and data privacy and governance as an artifact, we actually engineer it into our systems from very early on. So you must have heard earlier today, one of the panelists talk about Element, our data infrastructure platform, which we are now building AI into as well. And we've always believed in very strong data governance, strong data privacy guardrails as we have engineered and built Element. And so it's the same philosophy that we apply in the way we engage with our partners as well.
That's, of course, with their comments. Of course, the bigger news remains what's coming out of the geopolitical situation. But take a moment to thank Ruchit Jain for being with us today. Ruchit, I understand we have to let you go. Really appreciate your time this afternoon and have a great weekend.
Thank you, Meeran.
And as we hit that break, like I said, what comes out from the geopolitical side or from the political side is important. Prime Minister Modi highlights today, early morning our time, afternoon Japan time, that Japanese companies have invested over $40 billion in India with more than 13 billion in the private sector alone. He emphasizes India's strong investment climate where capital just doesn't grow, but it multiplies. Listen in as we hit that break, back with more news and updates.
पिछले 2 वर्षों में $13 बिलियन का प्राइवेट इन्वेस्टमेंट हुआ है। जेबीआईसी कहता है कि भारत सबसे प्रॉमिसिंग डेस्टिनेशन है। जेट्रो बताता है कि 80% कंपनियां भारत में एक्सपांड करना चाहती है और 75% ऑलरेडी मुनाफे में है। यानी इन इंडिया कैपिटल डज नॉट जस्ट ग्रो, इट मल्टीप्लाइज।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Welcome back. Just going to quickly pull up the RIL stock, and that's really the story of the moment. They've announced in the AGM, Chairman Mukesh Ambani has announced that there will be an IPO for Jio, which will list in the second half of first half of calendar year 2020 or 2026. All right. So the process has happened and listing will happen in H1 calendar year 2026. Let's pull up the stock and just talk for a second about why it's not reacted too well. Well, if it was a demerger, it might have been better. Perhaps that's one of the reasons, Samir?
Yes, because the fact is that if it's an IPO, the existing shareholders of Reliance Industry, they do not get anything. They have to apply
Unlike a demerger.
Right, exactly. And moreover, there will be a holding company discount that comes in for Reliance Industries. If it would have been a demerger, then that would have been low on the lower side. Hence, that's the reason we are seeing this kind of a negative reaction for Reliance Industries. Now, if you look at Jio platform, it's valued at around 11.9 lakh crore rupees by analysts. It gets around 30 to 35% of the total SOTP valuation of Reliance Industries, and that now moves out, plus a holding company discount comes in. So the valuation of Reliance Industries share prices goes down accordingly. Hence, there's a reason this negative reaction.
How much would be the dilution? Ideally, you're talking about when the IPO takes place. Obviously, you would assume that it's 25 or less than 25, right? So in that sense, there is a considerable component that will continue to receive the proceeds from the Jio business. Wouldn't you say?
So no, so they have more than 50%. So it will be still a subsidiary. Around 63% they own in Jio platform. So it will continue to remain as a subsidiary despite the fact that they raise fund of around 2.5% or 5% depending on what they want to do and depending on SEBI rules right now. But yeah, it will continue to remain as a subsidiary and they will get it will be consolidated in the books. But then again, there will be a holding company discount and that could vary anywhere between 30 to 40%. In some cases, we are also seeing northwards of 50%.
Interesting.
Okay, so we'll come back with a little more on that Jio IPO and what it means for existing shareholders of RIL, because I think that's the story at this point. But Samit Sarkar with us for a very different reason, because we're talking about what's heard on the street.
Yes, multiple stocks. In fact, not much people are investing today in markets given the fact that it has been quite volatile. Even today, from day's highest point, we are now trading largely flat. So not much of money is being made in the market. But some cash stock is what dealers are indicating. One company called Synthesis Tech, that there are buy flows on large HNI desk at lower levels, and there is some buzz of a potential order win that could come in and some positive developments. That is what is expected over the next 3 to 4 months. Hence, some accumulation being happening at a lower level. So keep an eye out for this counter. Second on the list is Asian Energy, buy flows on the PMS desk, some positive corporate announcement expected. Even on this counter, that stock is up 1.5%. BSE, now that counter is down 3%. A lot of short positions have been taken up by multiple HNIs and PMS when it comes to BSE as a counter, and the biggest reason that dealers are worried about at this moment is that the weekly expiry could get terminated, and weekly expiry contributes most to the bottom line of BSE, and if that goes away, then the entire business model of BSE comes to a big is a big question mark, and hence that's the reason we are seeing such kind of short build up when it comes to BSE. And then there are then there is a buy flows on Suzlon and Inox Wind is what dealers are indicating. Both these counters are seeing buy flows on DI desk in trade today. And lastly, in the start of the trading hour, we had seen some strong buy flows when it comes to bank and NBFC names. Some banks like some NBFCs like Shriram Finance, it's still Shriram Finance, Bajaj Finance, SBI. There were buy flows. Right now, it's at right now the stocks have come down. But what the street is telling here is that the valuations have become now cheap for these counters and they are in the oversold territory. So keep an eye out for bank and NBFC names in trade. There could be a bounce back is what dealers are indicating here.
Specifically also, okay, we'll talk about some of those names, but Granules India has been a stock.
Right, Granules was one of the counters that we indicated yesterday that there are strong buy flows on institutional desk and one should keep that stock on the radar given the fact that it was moving out of FNO as well.
Yes.
Last was the FNO, yesterday was the last, in fact, August was the last series for Granules and that stock was up at least 9% at one point of time. Right now it's up
the high point of the day. Yeah. I wonder what.
Why is Samman buzzing to this extent? I mean, a fundraise doesn't seem to be reason enough. Is that what
that fundraise is anyways via debt, so that is definitely not the reason. There's a buzz that we had indicated earlier as well when it comes to Samman Capital. Some kind of management rejig is expected here, so that would be important to track.
Okay. So Samman also there, and we're telling you why some of those stocks are buzzing and what is the dealer news coming in and the view coming in. Kunal Shah joining in of Mirai Asset Share Khan. We're also joined by Neerav Asher this afternoon of Latin Manharlal Securities. Welcome to both of you and thank you so much for speaking with us. Kunal, let's just start with your take on RIL.
Yeah, I think Reliance, if you look at the chart structure, the swing low what Reliance had made recently, that is on technicals, was at 1359 levels, and we are trading currently at 1365. It's very important for Reliance to hold this. If this is breached on the downside, then we are heading toward the 200 DMA, which is placed at 13,030 on the downside. So the short-term view again continues to remain sideways to negative for Reliance. There is rejection at the 20 DMA. We are not able to surpass that, which is placed at 1392. So till the time the stock is trading below this mark, expect weakness. The stock can go towards 1330 levels on the downside.
Okay. Neerav, you want to weigh in on what we've heard so far from the chairman of Reliance Industries about the demerger and listing of Jio. And so therefore, the question mark about what existing shareholders will receive. Do you have an opinion on that?
Well, I think this would continue to remain a kind of a subsidiary of Reliance Industries, but the shareholders would be entitled to a specific quota where they would be allotted the shares of Jio platforms. That's what I believe.
Okay, but between the other option, which is so between IPO and listing and demerger and listing, for the existing shareholders, which is a better deal?
I believe the IPO and listing would be the second option would be the better option.
Can you describe why that is?
Because I think that would be a simplistic approach to this, to the entire process, rather than going through the demerger where you have to derive a certain ratio where you have to allot shares to the existing shareholders, which could be a bit complex.
That negative for the existing shareholders? If it was a demerger, they would be allotted shares. From their point of view, because right now we're seeing the stock from the point of view of the existing shareholders.
Yes, that is exactly the reason why I think there's been some disappointment, initial disappointment, which we have seen in the stock. That's why the stock has corrected as a part of the initial reaction.
Okay, so which is why you're seeing that pain as part of the initial reaction.
And now down close to 2%.
Yeah, so that's something that we're keeping an eye on as well. What would be the size of the IPO, something that will bring you also in some detail. Just taking a look at some of the other heavyweights that are dragging down the index today, and M&M comes to mind. Now, Nirav, just wanted your view on M&M. Now, things will become clearer after the GST meet. So, mid next week is when you really need to look at it more carefully. But do you think that in M&M, with a big focus on electric vehicles and lack of clarity on where higher end electric vehicles will sit on the GST tax chart, is what is causing some concern?
Definitely, because I think each and every sector is vying for relief as far as the GST reform is concerned. And now we've been seeing sector rotation happening everywhere. And I think turn by turn we have the FMCG sector. Today we have the footwear space which has joined the space. So I think each and every sector is vying for this relief. And practically speaking, it's not possible to appease each and every sector. So I think definitely as far as M&M is concerned, I think the higher end electric vehicles, definitely they are likely to be taxed at the higher rate. And I think I'm inclined to believe that there is definitely going to be a lot of disappointment also when the final rates come in, because not everything is going to be rosy, because the government also has to look at its own finances.
That's an important point. In fact, this is something that was spoken about earlier today as well. We brought those details to you. The Karnataka Revenue Minister speaking about the fact that there will have to be consensus on some kind of compensation to the states if there is to be an agreement on the two-rate structure going forward, because ultimately that compensation cess does go away. But on the subject of Mahindra and the automotive pack as a whole, on account of this shift to the two-rate structure, you could see a bit of a painful period before this is implemented, and that has to do with an exclusive story that my colleague Danish Anand has picked up, and it's about the inventory levels for Mahindra at the dealership level. I'll let him tell you about it. Danish?
Sources have told NDTV Profit that Mahindra has informed its dealers to not build on a high inventory of those cars that attract high sales. When Mahindra is majority a SUV company, and we have seen that they have popular cars like Thar and Thar Box, which attract a cess somewhere between 20 to 22%, and on other Mahindra models like the XUV 700, there is a 22% cess, and similarly on other models like Bolero Neo and Scorpion N, these all cars attract 22% cess, and hence, just as a safeguard, since there is no clarity around cess by the GOM or the government per se, Hence, M&M has advised its dealers to not build on the inventory. Rather, they have told the dealerships that you should get only those cars that are already for sale, because we have seen that cars like Thar and XT700, they have a very long waiting period, and usually dealerships, they try to build on an inventory of these cars, but in a scenario when there is no clarity whether cess will be applicable or not, and if cess is not applicable, then what will happen with the accumulated money? So they don't want their dealerships to tussle after the GST council decides on GST on high-end vehicles. So all in all, if we see what NDTV Profit has learned is the fact that M&M has advised dealers to not build on the inventory, only get these cars when they feel there is a need to give this to the retail buyers.
Thanks so much for getting us those details, Danish. And ultimately, this is going to play out either positively or negatively. By the way, Eicher Motors, you might see the wholesale numbers spike quite dramatically in the month gone by, or in the current month, I should say. And you'll find those numbers over the weekend that come through. And this is on account of inventory management, because there was an expectation that rates might actually go up, but then the opposite might have happened. We'll tell you about that in just a bit. For now, let's go back to Kunal Shah to find out what his picks are today. Kunal, specifically, what stocks are you focused on?
I think two calls here. One will be on the buy side, one will be on the sell side. First, I'll discuss the buy side, and the stock is Cipla. I think in this volatile market, this has been one stock on the technicals which has been resilient, where the structure is still intact on the bullish front, where high top, high bottoms are there. Today, we have also seen fresh buying interest from the lower levels. So this is a buy for me at the current levels, on the verge of a breakout again. 1590 is where it is trading. One can keep a stop loss of 1560 on the downside. And on the higher levels, I'm looking targets for 1640 to 1660 for Cipla. So that's the first call on the buy side. Second is Bharat Forge is on the sell side. Again, Bharat Forge has been trading below the short-term moving averages. It has been forming low top, low bottom formation, and it is on the verge of a swing low break. And that will aggregate the selling pressure on the downside. So that's the sell, keeping a stop loss of 1130, looking for targets of 1080 to 1060 on the downside.
Okay, stay on with us. Just taking you through the big story that we're tracking at this point about the Jio IPOs. Now, Reliance Industries Chairman Mukesh Ambani has said Jio will come out with its IPO in the first half of 2026. He was speaking at the company's annual general meeting. Listen in.
Today, it is my proud privilege to announce that Jio is making all arrangements to file for its IPO. We are aiming to list Jio by the first half of 2026, subject to all necessary approvals.
Okay, let's pull up that stock. Over 2% down now on the Reliance stocks. The two things that have been announced. One is the timeline for the Jio IPO. Second is the announcement to take Jio global as a service. Both have not been received too well by the street. Parag Thakkar joining us now. He's of course head fund manager at Fort Capital. Parag bhai, very good afternoon to you. Why has this not been seen as very positive? Parag bhai, can you hear me? Okay, something's wrong with that line. We'll try and get him back in just a second on that. But this second kind of a piece on this, on the international expansion also doesn't seem to have been taken very well. I want to pull up the Bharti Airtel stock just for a second and see what's happening there, because that is, of course, a large telecom player that has a substantial global presence as well. So let's pull up the Bharti Airtel stock if we can and look at how that is reacting even while we get the details. So that's, see the spike there. I don't know if you can put those two charts together, but it'll be almost simultaneously where you would have seen a dip in the RIL stock and the spike in the Bharti Airtel stock around Jio, because now they're talking about expanding outside India, and that's something Bharti Airtel has been doing. Is there the space for it? Does it make sense? I suppose those are some questions that will be asked.
Certainly. And in fact, the telecom space as a whole, at a time when in India there is this entire conversation about pricing, about improving of average revenue per user, the ARPUs, and the inability perhaps to increase prices. This is something that remains to be seen. So before we get to Parag bhai, let's get Nirav on to just talk about the potential for the telecom business and whether the ability to price higher exists. Because ultimately we've seen a round of price increases, we've seen ARPUs go up, but then how much further? Because they're far from the targets that these individual companies have for themselves, isn't it, Neera?
Yes, I think the ARPUs as far as Bharti Airtel is concerned is close to around 250 and in the case of Reliance it's around 207. What we are talking about is just the average revenue per user at this point of time, but it's also important to understand that the base is quite high. So as Shri Mukesh Ambani spoke about the fact that Reliance Jio has already hit around 500 million subscribers. So with 500 million subscribers and an ARPU of 207, I think this business is not that capex heavy at this point of time, and you tend to have very thick EBITDA margins. In the case of Reliance, this Jio platforms has reported EBITDA margins of more than 50%. So I think this just shows that it's a cash generating business. It's a cash machine. And I think there is definitely scope for value added services also, like fiber to the home or the data centers, moving forward in the data center business. So there is no dearth of opportunities. And I think one has to look at their telecom business in a different way because born out of your telecom or the digital revolution is the financial services business, the media and the entertainment business, which tend to rely very heavily on the digital services. So in a way, you have to look at this business as a backbone infrastructure, which is definitely going to give you rich returns over a period of time. And already at this point of time, I think I would be inclined to believe that the margins are quite thick, with EBITDA margins being above 50%.
But at the same time, you're talking about a resource-heavy business, and if you have to expand into markets that you have not yet penetrated, I guess that would pose additional challenges, right? So that's something to think about. But let's talk about autos, and we've spent a little time telling you about Mahindra & Mahindra, and we've spoken a little bit about what could be the picture for the month of August amidst this state of flux, one might argue. But it might bode well for a few counters. And let me bring Puneet in to tell you about what is expected in the month of August for the volumes that go out from the factories to the dealerships, and that is what is reported by these automotive companies. Puneet?
It does seem to be essentially that a very specific, companies that are going to be in focus this time, and there's one definite surprise in the two-wheeler space, to say the least. So let's start off with that, because let me first just divert your attention to the bottom of your screen now. Eicher Motors is expected to have 109,000 vehicles sold in this particular month. That's a 48% jump just in the month of August. Almost 11% of the company's annual sales in the month of August. And that just seems to be essentially not that the company has done something, but the GST, nomenclature essentially, and people presumed, and that's what I was speaking to a few analysts about, the 350cc will attract 40% GST from the current 28%. What people assume that Eicher would essentially get expensive in this particular time frame, but the model is actually getting cheaper because it's 349cc and not 350cc, and hence there was a pre-buy or a rush essentially for the consumers, and hence this stupendous number for Eicher in this particular month. So that is leading the growth and the major surprise there. The other ones, TVS Motors continuing its momentum with scooters as well as exports, but Eicher was the big surprise this month. When you look at the other four-wheeler makers specifically, we are expecting a subdued month across the board, and M&M is also one of them, because we did break the story this morning that from Mahindra they've asked dealers to pull back on some additional inventory purchase. That has impacted the sales in this month, but largely for the rest, it's been a continuation of what's happening in FY25 for Maruti, Hyundai as well as Tata Motors. Truck makers specifically have done well in this particular month, continuing the momentum. So the likes of Ashok Leyland, Tata Motors, CV Space as well as VECV have done 1 to 6% growth. That's a decent performance at a time in the monsoons where we don't see a lot of purchases by fleet operators. So expecting a decent month there. And for the tractor makers, lastly, specifically, seeing a 4 to 6% growth. Again, for M&M, we've seen the export growth in tractors do well as well. But this month, arguably, will be one of the best months for Eicher Motors. The first time they'll cross 1 lakh units in a particular month, 11% of sales. And probably this GST nomenclature has worked in the company's favor this time.
Okay, now of course you need to remember that these are wholesale sales, which means, as I pointed out before I sent it to Puneet, that this is vehicles that are pushed from the factory to the dealership. Does not necessarily mean that these are sold. It then gets sold after it goes to the dealership to the retail buyers, and that is reported separately. So bear that in mind when you look at these numbers when they come out over the weekend. Kunal, I want to come to you very quickly on some of these automotive companies, and the two-wheelers were buzzing earlier in the week. They gave up a bit of that ground. I'm just wondering whether or not you would buy into some of these, because they've run up quite substantially in the recent past.
Yeah, I think definitely they have run up quite a bit, and Nifty Auto Index is what was already gaining strength when the market was volatile. So I think I'll be a buyer here on dips, not at the current levels. Already, if somebody has purchased at the lower levels, continue to trail their stop losses. On the lower end, the Nifty Auto Index, the support for the index is placed at 24,200, 300 zone. Currently, it is trading at 25,000. So you can see some more downside into the index towards the mark of 24,500. So not a correct time to buy or go long into it. But I think dips should be a better opportunity to go on the long side. Out here, I think Maruti is what my focus would be on any dips what you get. Relative strength is clearly visible, and you can expect the stock to go towards 16,000 mark in the very short term.
A bit of a pop just in the last 5 to 10 minutes on Maruti Suzuki as well. Keep that on your radar. We'll talk about a lot of stocks. In fact, we've got lots to talk about. So do stay tuned. We'll get you your top buy today, sell on Monday strategies. Do stay tuned.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
Okay, all the buzz and anything that is buzzing today is because of hopes of GST cuts. GST cuts or GST increases, as the case may be. Now, with these much anticipated reforms, we've put together a list of the proposed taxes which will be taken up at the upcoming GST Council meet on September 3rd and 4th, with the caveat that these are proposals. Is this actually going to happen or not is something that we have to wait and see. Having said that, Charu, over to you.
So the GST Council meet, as we already told you, is going to be taking place on September 3rd and 4th. And before that, there are some major reliefs and rationalizations that could be discussed. So one of the first things that one needs to look at is that there is a huge relief for the common man, as a lot of products are going to be brought under the umbrella of zero GST. Now, these include loose paneer, pizza, bread, khakra, chapati, roti, paratha, maps, globes, exercise books, graph books, and and lab notebooks. Now these are stationery products and a lot of edibles that are there. Now these are currently under the bracket of about 5 to 18%, and if the proposals go through, they are going to be attracting a GST of 0%. Now coming ahead, there are a lot of reliefs that are being proposed for household items as well. So for butter, condensed milk, the current rate is about 12%, and they are proposing about 5% GST on these. Jams and namkeens could see a GST reduction from 12% to 5%. Coming on to mushrooms, they could see a reduction of about the same level from 12% to 5%, and for dates and nuts again from 12% to 5%. Now again, for confectioneries and ice creams, for chocolates that have cocoa in them, pastries, ice cream, cereal flakes, all of these currently attract a GST rate of about 18%. The rate could be reduced to 5% on these products as well. Coming ahead now, automobiles. Now there is some sort of a different slab here. So for small cars that are below 1200 cc for CNG, petrol, diesel, they are currently attracting a GST of about 28%. They could see a GST rate reduction to about 18%. Then three-wheelers, motorbikes, auto parts, seats and accessories also could see a rate reduction from 28% to about 18%, and then luxury cars could see a flat structure of about 40%. Now coming on to hotels. So if you are spending a night in a hotel where the rate is up to 7,500 rupees per night, you could see a reduction from 12% to 5% without input tax credit. And cinema tickets above the rate of rupees 100 could see a reduction from 12% to 5%. And finally, air travel for only business and premium could see a slight increase from 12% to 18%.
Wow. Exciting updates. Charu, thanks so much for that.
Yeah.
What stood out to you guys?
You guys missed the cheer from these two on chocolates, on dry fruits, desserts, on ice cream,
on khakra.
On khakra. Neeraj was dancing on the idea of khakra being cheaper. No, I'm kidding. No. I was excited on mushrooms.
Mushrooms, yeah. Mushrooms. It's an interesting line item there.
Yeah, it was interesting to see the hotel room rate though. Is the interesting one. 7,500. Uske upar 18% varna niche. I mean, I don't know if.
I think maybe you think hotels will reconfigure the way that they're doing their basic billing and then add on other stuff.
I'm just trying to think that the 8,200 room rate is now out of the window.
What is the concept?
8,200 पे अगर 10% extra GST लगता है, so why would you have that rate only?
Like
I think the rates will be like 7,499 or then above 9,000.
Correct. Acha, the midway is gone. Yeah,
the midway is gone. That's interesting. So, all right, a lot to unpack as far as this is concerned. In fact, let's get a view from Rajat Bose, partner indirect tax at Shardul Amarchand Mangaldas. Rajat, thank you so much for joining in, and like we said that caveats that these are proposed, etc. What do you think is the most important clarity you would look at after the GST meeting really takes place between the 3rd and 4th?
I think one of the most important clarity which is being anticipated is the date of the rollout of these rates, because what we've seen is that right now in anticipation of rate cuts, the demand has somewhat dropped, and that is causing a bit of a concern. Also, because there's an inventory buildup, that needs to be liquidated as well. So the first and foremost clarity would be that when do they intend to roll these revised rates, so that the companies have, they have some time to plan their inventory managements, and they have the time to sort of plan how they want to sort of liquidate their input tax credits.
Rajat, so another point, of course, is the lack of clarity on compensation cess, right? And you heard, I don't know if you heard the comment, but we certainly spoke about it earlier in the day, where the Karnataka Revenue Minister was speaking about the need for some sort of compensation for the states, and he was saying that this might need to be done for a period of 5 years. So would you watch out for that as well, and certain clarity on that? Because ultimately it might be too early to celebrate then in that case, because a lot of these rates would have that additional compensation on them.
Yes, and I hope that that's not the case, because then it's going to dilute all the good work which is being proposed. So in the, if you look at it in the true spirit, then compensation says should go away, because the center says that they've already compensated the states to the extent that was required, and now the compensation says is no longer required to be imposed. So to counterbalance, in any case, they are sort of increasing the GST rates on the luxury vehicles to 40%. That is what we've heard. So I think that somewhere, if there's a proposal to continue the compensation cess in whatever form and manner, that's going to be very disappointing.
Thanks so much for joining us as always, and that clarity is important to have. All right, now onto a stock that we have already spoken to you about. In fact, Somit referred to it just after his Heard on the Street segment, and Granules India. It's off the high point of the day. It's still up about 5% or so. But the question is, why is it buzzing? And the volumes are quite significant on this particular counter, and we thought, why not feature it on our Bulls versus Bears segment? And today, to talk about everything to do with the growth prospects and everything else, we got Varsha joining it. Varsha, what do you focus on first?
Well, thank you so much for that. Is market expecting Gagillapur facility to be cleared? Well, we need to wait and watch for that. But onto the bull side, when it comes to granules, the FDA clearance for the new Genome Valley facility is an advantage for the company. This clears the FDA approval. But the Gagillapur facility is still under warning letter. Now, why this is important and why so much of stress is given to Gagillapur facility? Because it used to contribute 60 to 65% of revenue and was an important facility when it comes to granules, and this under warning letter creates short-term uncertainty when it comes to granules. But let's see what is the advantage that the company has, what's the bull case that the company has. One is they've entered into GLP peptide market, that is anti-diabetic and anti-obesity, which is expected to have $130 billion of market size by 2030, and granules will have a positive impact on that. But now this GLP they've entered through acquisition of Sen Chemicals, but this acquisition is actually weighing on when it comes to their return ratios and margins, and this is expected to have pressure on their ratios for next 12 to 18 months. But on the bull side, if you see company, the Europe pipeline that the company has, and of course the robust North American demand will actually lead to sustainable growth for next few years. But the margin pressure will actually hit on the financials because of the increased expenses when it comes to the Gagillapur facilities remediation cost that the company is going through will have an impact on margin. But moving on, let's see what the other bull case that the company has. They are expecting FY27 to be strong growth year. Now this will be backed by GLP products, that is peptide products, clearance of the Gagillapur facility, which they are expecting to be, and of course their new FDA clearance of genome facility. But shifting to this new segments, shifting to GLP products will have an impact, short-term impact on the numbers for the company, because of they've also lowered their Europe sales guidance. So all of this will have an impact when it comes to short term. But overall, the Gagillapur facility clearance is an important part when it comes to granules, because 60 to 65% revenue stick to that facility is what is concerned when it comes to street.
I just want to ask you one quick question, and of course Neeraj might have more questions as well, but as somebody that does not understand as much about these pharmaceutical products, GLP-1, what you're talking about, is something that is used for treatment of diabetes, is that right?
Weight loss, those are the weight loss.
Yeah.
Yes,
Okay.
Monjaro,
Got it.
and all those.
So, and this is a fast growing segment,
Yes.
essentially.
Every pharmaceutical company is actually betting on these products.
Fantastic.
Okay, so just as someone who out of only sheer interest has read up a lot about it, these are GLP-1 inhibitors which actually stop a hormone in your body called ghrelin,
right,
which is the hormone that makes you hungry.
Right.
These come in and they inhibit it. What it basically does is kill your appetite.
Okay. and so, but the primarily it's used for diabetes and insulin treatment, right?
The impact is that you eat less,
Right.
which helps you if you're a diabetic or obese or in 100 other ways.
The other thing is that obesity drugs, at least in the US, the prices are now coming off, and a lot of them are now trying to do the direct to consumer model as well, which helps them bring down the prices, which is the desire of the current US administration. So pretty interesting things happening there. Okay, Varsha, thanks so much for getting us that entire set of updates. Pretty good. Gagillapur, viewers keep that in mind. Nirav Asher, do you track the Gagillapur facility of granules? I'm kidding. I'm just asking, do you track granules? You don't, okay. Kunal, any thoughts here on granules? Has had a pretty strong move today. Is there more upside here?
I think for granules, if you look at the kind of volume-based buying what we have seen in today's trading session, we need further confirmation. 500, 510 has been the supply zone for the stock, and we are not being able to close above it, and we have faced multiple rejection at those levels. So I think let us wait for it. Close above probably 500, 510 could give us more upside into the stock. The next level then on the high levels would be 545 to 560.
Okay, while we're on the subject of pharmaceutical companies, let's also look at Supriya Life Sciences. It's set to achieve 1,000 crore revenue by FY27. The question is, what's in store for the company's capex, and how are they going to reach that target? Chairman Satish Wagh has all of the details. Listen in.
Capex this year almost 65 to 70 crores with revamping our old blocks, and the next 3 years will definitely do about 200 crores with our new site. This is going to be at Patalganga.
Okay, so Supriya Life Sciences, 681 crore or rather 696 crore is the revenue that they achieved in the previous financial year, and so they're expecting to ramp it up quite dramatically. I wonder, Nirav, do you track the company?
Well, I'd seen the company at the time of IPO, but after that I've not tracked it. But they seem to have some very attractive margins as far as the API business is concerned, and it's very heartening to see what kind of margins they've been reporting. Margins above 20-25% on the EBITDA front, whereas the norm is around 12 to 13%. So I think whether they continue to maintain these margins or not is something which needs to be seen.
Okay, let's also, so it's been a chop and churn journey for them over the course of the last 3 months. I wonder on the charts how it looks. What's the view, Kunal?
For Supriya, what I can see on the chart is it has been consolidating in a very broad range, where you are finding the demand zone around 600 and there is supply which is clearly visible around the mark of 700, 710. So this is a 100-point range in which the stock is stuck, and I think this consolidation could continue for the next, again, 1 to 2 weeks. Probably if you get the stock around that support zone of 600, 620, that would be a good time to add on to your portfolio.
Got it. Okay, so one of the stocks that was buzzing at the start of trade, but it has in fact given a little bit of ground. It's down in fact just over the last 5 to 10 minutes, now up about 0.7%. Kotak Mahindra Bank. It was an interesting note that came through. UBS upgrading it to a buy with a target price of 2,450. It has in fact hiked its target from 2,300, and the reasons why it sees potential in this stock. It says that it's well placed in fast growing segments. It says that there is healthy growth outlook and the margin and credit cost pressure is expected to ease. Remember, margins did contract in the first quarter more than anticipated. They also say that the faster growth prospects and superior return on assets are set to support a re-rating on the stock, and they have upgraded to buy given the superior positioning in multiple sectors. So Nirav, do you buy into this argument, and would you say that Kotak Mahindra Bank, compared with the past, certainly it is not trading at those very high valuations? Would you nibble in right now?
Not at the moment, but I think we have seen, if one were to go by the historical side, we have seen traditionally Kotak Mahindra Bank, which enjoys superior quality NIMs, and better quality margins, better returns on their assets. And I think in the past few quarters, they have faltered a bit on that front, and that has led to the underperformance as far as the stock price is concerned. So I think I would wait for a couple of quarters and then take a call whether to enter the stock or not. Not at the moment.
Okay. Okay. But you know, I mean, just pulling off from the highs of the day, Kotak, not that the highs were also very high. I mean, it was just about okay. But still, it's an interesting brokerage note just has come off. Okay. On to, if Kotak is not the top 3 stock of the day, what is? And let's talk about these. And Samvardhana Motherson, of course, is the first amongst them. But there are others in store as well. So keep them in mind. In fact, let's get in Vansh to talk about some of these. Vansh, why have you chosen the 3 stocks which have made to your list?
So let me start off with Apollo Microsystem. Now the company has been approved as a production agency for multi-influence ground mines by DRDO. Now the company has also entered into an agreement with DRDO for transfer of technology for a type of explosive payload carried by an NISM missile. Second on my list is Samvardhana Motherson, a lot of acquisitions for the particular counter. Now the company will buy 81% stake via its arm in Yutaka Giken, 11% stake in Shinchini and 100% stake in Yutaka Auto Parts of India. Now acquisition would be about 1600 odd crores, and the acquisition will further strengthen the company's global partnership with Honda, and they will also enable the company to expand its market share with the OEMs in Japan as well. The company will also buy additional 20% stake in Yongshin Motherson for 6.5 odd crores. Third on my list is Sanman Capital. Now the company has raised $300 million, and the funds have been raised through senior secured bonds which are due in 2028. Now the bonds are expected to be listed on Indian International Exchange Limited. And if I talk about the guidance, now the company is focusing on the yield improvement via Samman FinServ products, and the cost to income ratio is expected to fall on the back of digitization that is expected to reduce the operating cost, especially in the affordable segment. If I talk about some key investors, Plutus Wealth Management holds 7.94% stake in the company as of June 2025 quarter. So these are some of the stocks that are in focus today.
Okay, and interesting ones to say the very least. Samman Capital up about 5.4%. There's quite a bit buzzing. In fact, as I think we've discussed this on Heard on the Street, if I'm not mistaken, about a potential move of the top management and everything that entails. But Nirav, specific comments on Samman Capital, did you have coverage on this?
No, we've not covered.
Okay. Kunal, do you have enough information on Samman Capital, enough data to tell us about whether or not the uptick that we're seeing today could be sustainable?
I think yes, I have enough data here. So what I can see that the stock has been in a corrective mode where the stock is in the last stage of correction. So probably 115, 116 has been the strong demand zone for the stock. So on dips, I think it could be a buy. And today's move has seen some buying interest. Now follow-up move is important. If that kicks in tomorrow's trading session, the stock can go towards the mark of 134, 135 on the higher end.
Okay, all right. Now let's turn to the story that we were talking about just a short while. Despite the official announcement that Jio Platforms' IPO process has begun, the response from investors and market watchers has been just a tad bit subdued. I'm not the one saying this. Take a look at the stock price. It's down 2%. Somit is joining in to tell you why this is important. Of course, we've talked about some aspects of this. Somit, what are you focusing on?
Well, yes, if you look at the key announcement that has come in so far from the Reliance Industries AGM, 40th AGM, is the fact that Jio Platform listing will happen in the first half of 2026. Now, the chairman said that Jio Platform has started its IPO process and the listing will happen in the first half of next calendar year, that is 2026. That is by June 2026, we're expecting this to list. So why are we seeing this kind of a negative reaction? Well, on the other hand, when this should have been a positive news, it is because the chairman has said that it will be an IPO process and not a demerger. Now, what happens in an IPO process is that the existing shareholders of Reliance Industries, they do not get any shares. They have to apply for Jio Platforms IPO separately, though there could be a shareholders quota and there could be some discount that he could give. But despite that, they will have to put in money separately for Jio Platforms IPO. Apart from that, for Reliance Industries share prices currently, there will be a holding company discount that will come in, which would not have been the case had it been a demerger. Demerger would have been truly a value unlocking and a value creation for the shareholders, but IPO process will not be in that case. Now, this holding company discount, how much will that remove the or by how much will this reduce the value of Reliance Industries? Now, as per our calculation, a 20% discount could shave off the value by around 100 rupees for Reliance Industries, and a 30% discount could lower Reliance Industries value by around 150 rupees. Now, here's the calculation for that. Now, if you look at the current market price of, or the opening price of Reliance Industries, it stood at close to 1,384, and this is the consensus target price on the street, 1,634 rupees. Now, as per the consensus estimate, 34% of the SOTP value has been given to Jio platform. So 34% of 1,384 comes to 471, and on consensus target price it comes to 556 rupees, which means that the remaining segments of Reliance Industries is valued at 913 or 1,078 in case of consensus target price. So if you apply a 20% discount to 471, then the value of Jio platform comes down to 376. That is a clear downtake of around 100 rupees. And if you apply a 30% discount, holding company discount, then that would further reduce the value to around 300, around 329 rupees. So clear downtake of 150 rupees. So that goes out of Reliance Industries. Now it will completely depend on shareholders and market what kind of holding company discount they want to give to Reliance Industries at post listing. But a 20% discount lowers Reliance Industries value by around 100 rupees, and a 30% discount lowers Reliance Industries value by around 150 rupees.
Very interesting, and those numbers certainly are very interesting to track. I wonder if that is already happening with the stock. So you're seeing a downtick of over 2%, and some part of that adjustment seems to be already taking place. Nirav, I hope that you listened to some of those numbers, and I know that we already asked you about Reliance Industries, but do you think that the math is reasonable, is logical?
Perfectly logical, and I think there has been disappointment, especially on the first look. But I think yes, there is still scope as far as the new age businesses are concerned. So I think shareholders would like to take heart from that, and the rest of the announcements as the AGM goes.
Okay. Let's take a look. So, I mean, Reliance, they're definitely looking like it's seeing some weakness going in. I just want to take a look at what is on your screens, and let's pull up the Nifty while we're talking about it, because this is really what India is planning to do. And even as you see that weakness in the Nifty weighed down, I'm sure, by Reliance, the heavyweight, an Australia trade deal could get fast-tracked. You have a lot of Middle Eastern countries that want to ink a deal with India. That's going to get fast-tracked. So even as we are seeing some pain coming in on tariffs, you might see alternative export locations spring up for Indian businesses, and that's something that we need to look at very, very carefully. Now, meanwhile, what's working and what's not? Well, very little things are working actually at this point, as we are less than 10 minutes from market close. Just pull up the advanced decline ratio. Reliance, Infosys, both weighing down on markets. ITC is looking much better at this point, but you also have realty stocks hurting. You have the capital markets index hurting. Let's pull up the BSE. The BSE also showing a lot of pain in trade towards close. And the Bombay Stock Exchange script is what I mean. That is also showing a lot of pain in close as we go into the last bit of trade. A bit of a plunge over there, nearly 4% down. Meanwhile, Kunal, what are the BTST strategies that you would have, if any? I mean, it's a tricky one to really commit to anything before Monday, but what in your view is looking like something you'd want to buy?
Yeah, I think again I'll go with your Cipla. I think looks perfectly set up for a BTST for Monday's trading session. Again, on the technicals, there is heart of high bottom formations, volume-based buying from the lower levels, and you can expect this momentum to continue on the higher end. So Cipla would be a buy for me. Targets would be 1605 to 1615, and stop loss on the downside would be 1570.
Something's happened to Coffee Day today. It's 18% higher. There is strength in Jindal Films, up about 14% higher. And, Granules isn't the only one. Panacea Biotech is up and about. So that stock is doing okay for itself. So keep that in mind. I also saw Shelly Engineering up 6%. Now at 2239. I think this is life highs for Shelly. If I'm not wrong, if I just bring up the last 5-year chart for Shelly Engineering, it's been, and the last 2 years have just been very, very good for this business. Yes, I think it's close to life highs or at life highs. It is at life highs. and what a run it has been from 700 all the way to 2231 for Shelly. Nirav Asher, do you track this one fundamentally?
No, I don't.
You don't
track a Shelly.
Okay, fair call. I'm coming back to you on Relaxo and Bata and some of the others, but before that, Kunal, Shelly Engineering, with the fact that it's now trading at life highs, is there more in store? There has just been a very sharp spike in the last few minutes of trade.
I think, yeah, definitely. I think once it surpassed this resistance of 2,100, that has acted as a strong support for the stock. And now probably it is heading towards 2,320, 2,400 mark as well. So again, it's a buy on dip stock. 2,100 is a very strong support. If anybody is holding long from the lower levels, 2,100 should be a trailing stop loss. Even if you are initiating fresh, keep 2,100 as a stop loss. The stock can go to 2,400.
Okay. And Nirav, okay, thank you for that, Kunal. Nirav, what about the Relaxos and the Batas of the world? Would you believe, or Campus, for example, are you a buyer on them because of the GST cuts?
Not exactly because of the GST cuts. Most of these stocks, footwear stocks, have disappointed. But I think Relaxo is one which stands out, and because of strong fundamentals, it's got a small equity base, a very disciplined balance sheet, and good numbers, good amount of money which they spend on marketing, sales promotion, and overall a strong performance, return on capital employed, return on equity. So I think Relaxo remains one good pick in this particular space.
Okay. Okay, the footwear companies are certainly one. Shelly took my eye, but some of the others. The other one which is actually corrected is yesterday's IPO, Gem Aromatics. I think we had Vinit Bolunchka this morning talking about maybe liking it, or somebody else talking about liking it. But Gem somehow, yet another day of a downtake after not having a very good start in trade yesterday. So this is one new kid on the block which is not having a good run, unfortunately, for itself. Reliance Infra too has corrected 3.5%. So that stock is down in trade. Arvind Smart Space is down in trade. So a lot of individual names are correcting off. In the recent past, Nirav Asher, within the clutch of IPOs that have come in, there are a few which might be underperforming. Anything which is underperforming but fundamentally strong and you guys like it?
No, we not underperforming exactly, but I think we like a company called Oswald Pumps. We feel it has strong prospects as far as the pumps business is concerned. And it can be a strong competition to Shakti Pumps also going forward.
But why so? Why Oswald Pumps? As in, what are the earnings? What are the valuations?
Valuations are reasonable, and there are good growth prospects. The company has guided for a strong, reasonable growth over the next couple of years. And I think with the Kusum Yojana back on its track, I think should augur well for the company.
Okay, just not really related to markets and this last bit of close that we're talking about, but in case you guys have just seen what has happened in Thailand, where the entire cabinet and the Prime Minister has been dismissed by the court there. So Prime Minister Shinawatra has been removed from office and her entire cabinet has been dismissed on a scandal of a leaked phone call with Cambodia's former leader. Breaching ethical rules. And it's quite, I mean, she became the Prime Minister in August last year and the country's youngest Prime Minister. So the Constitutional Court has completely, just chucked out that entire cabinet. Just in terms of interest, because a lot of people from India travel to Thailand. Not that it's going to make a difference, but keep in mind that there is some political unrest happening there right now.
Yeah, if you're traveling especially.
Yeah.
When was the last time you went to Thailand?
Last year.
Yeah, I think I went last year as well. In fact, I think I went around the time of the election.
Koankar also went last year.
Not too long ago.
All of us have done that too.
Yeah, so everyone does. But the one thing is that no matter what happens, they keep the tourism part of it pretty steady. But all right, there's some global news coming in as we're closing off markets which are looking very, very weak. I mean, Kunal, is there anything that you would pick right now? Would you lean in on an ITC kind of a story? Because Monday onwards, your GST push is going to get even stronger.
Yeah, I think definitely at these levels, I think on the long side, you will hardly find any trades. But ITC is one stock that is looking, the setup is looking bullish, where we have seen volume-based buying and the stock has been sustaining above the 20 DMA. So I think it's a good trade. What you can get, the stock can go towards the mark of 415 to 418 on the higher end.
Okay, 415, 418. And Kunal, I wonder if you have a short idea as we go into the weekend, is there something that is looking so weak that you'd be comfortable shorting it?
Stock which looks weaker even at these level is NHPC on the futures. I think already there is a structural breakdown. Again, the stock has witnessed that rebound towards 79.80, which is a strong resistance zone, currently trading at 77. And I can expect this correction to go towards the mark of 72, 71 on the downside. So the risk to reward ratio is quite favorable. One can keep a stop loss of 80 and look for targets of 71 on the downside.
Got it. Kunal, as well as Neerav, thanks so much for joining us on today's show. Always a pleasure speaking with you. Now, we're winding down to what has been an interesting trading week. There have been a lot of headlines, and it has been a curtailed week as well. But it's not the best week, of course, for the benchmark Nifty 50, losing close to 1.9, 1.8% or thereabouts. So it's a worst performance for the benchmark in quite a few weeks. The broader market's also ending near the low point of the day. So pull up those two indices as well, the mid-cap index as well as the small-cap index, both losing ground quite considerably. And so barring one session of gains at the start of the week, you've had declines for a large part of the trading week. Now, pull up, in fact, if we can, the Nifty heat map just towards the end of the session, because early on in the session, you actually saw more green on the screen than red. That picture has changed a bit. ITC remains on the top of the screen and Shriram Finance finding a little bit of buying, but you have the losers that become the subject of conversation. And right on the bottom, M&M has languished through the session. It continues to stay there, but the new addition is Reliance Industries, which is likely going to end at the low point of the day. And the big slide that it took through the session is after the announcement that there would be an IPO for Jio. In fact, that is not going to be very beneficial for the shareholders of Reliance Industries as things stand right now. We took you through the map of how that is going to work out. Infosys seeing a little bit of pressure, and so is Apollo Hospitals. Just to give you a sense of how chop and churn this session has been, if we can pull up the advanced decline map, and that will show you that it's been quite a volatile session where at one point there was a wide gulf between advances and declines favored towards advances, but then towards the end of the session we're ending with a very different perspective and picture. Of course, bear in mind there's a lot that could happen on geopolitics over the weekend. You have the Prime Minister that is in Japan. You heard his statement on Make in India, Make for the World. He's also going to be meeting President Xi Jinping of China. And what emerges from that is likely going to have a bearing on the stock market next week. Of course, you're going to have on the global stage jobs data and PCE from the US, and that could set the tone and tenor for the week going forward as well. But we have what we do normally towards the end of the week, which is the latest in the world of entertainment. And Shreyansi joining me.
Well, absolutely, let's quickly take a look at some of the releases. In fact, there's only one big ticket release, at least when it comes to Bollywood. Let's try and get that up on the screen as well. It's Param Sundari that you're looking at. There you have it. So this is a big budget movie in some sense of the word, because 60 crores is what you're looking at. You have two A-listers coming in with this one. So you have Janhvi Kapoor as well as Siddharth Malhotra coming in. With this one, expected to garner about 8 to 9 crores just on its opening weekend. So that is what is being penciled in. Cross-cultural love story, maybe similar to a Chennai Express if you watched that one. So this is the one to watch out for if you're in the mood for a rom-com. But let's also take a look at some of the OTT releases. And some of these, before we do that, of course, there's Coolie the Powerhouse. That is the one that was made with a budget of 350 crores. Managed to get in about 250 crores. That figure is likely to not go up all that much, and that's why we're talking about this one. But let's also talk about some of the other big ticket releases when it comes to Rajnikant's Kitty, in terms of his highest grossing films, so there's 414 crores that was raked in by 2.0. Jailer managed to make about 345 crores, and you did have Coolie ranking around 250 crores with that on that particular list. But let's also take a look at the OTT list that you have, and it's With Love Megan Season 2 that you should be watching out for. This one is said to be a little less controversial, but that doesn't mean that there's room for disappointment. This one is premiering on Netflix, and this is after the couple really managed to have that deal coming in with Netflix, which is a multi-month deal. So that's why this is important, and this is going to be a fun one to watch out for, and it has already released. The reviews are mixed, but some of them are quite positive about how much of a fun watch it is. But let's also take a look at the next one. And the last one on my list, in fact, is Songs of Paradise. This is about the melody queen of Kashmir, who's the first singer when it comes to Radio Kashmir. She was awarded the Padma Shri as well, and you have Sabah Azad in this and Soni Razlan. So, couple of good actors there. August 29th, of course, is the release date, releasing on Amazon Prime. So this is the one that you should be watching out for. And that's the entire list. Couple of OTT releases and one big ticket release is what you should be looking at. But thank you so much for tuning in.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
Welcome viewers, you're watching Market Express and I'm your host Himakshi Bahugna. Now let's dive straight into the show. So viewers, market continue to face pressure amid geopolitical uncertainty, with benchmark indices seeing a sharp drop on account of RIL's dip. The share of Reliance Industries plunged after the company announced plans to list geo platforms. Now, broader markets have moved in tandem with benchmarks as overall sentiment in the Indian markets remain cautious. Nifty FMCG was the only bright spark in an otherwise difficult day for markets, with the index ending with the gains of almost 1%. So Nifty Realty and Nifty IT saw the highest selling pressure, ending with cuts of more than 1%. IPO activity also surged in July and August with 33 new listings hitting the market. While some stocks like Raymond Realty and IndiCube Spaces are trading below the issue price, others have delivered standout gains. Aditya Infotech soared 85%, NSDL rose 56%, and Sambhav Steel Tubes posted nearly 50% of returns. So mid-tier performers like Anthem Biosciences and G&G Electronics also impressed with strong growth guidance. Several IPOs delivered modest 10 to 25% gains, including SmartWorks and Chembon Chemicals. Analysts also remain bullish on top names, citing strong revenue growth, margin expansion, and also the scalable business models as key drivers for the future performance. Lemon Tree Hotels has signed deals for 208 new rooms this week, expanding its footprint across Dehradun, Pench, and Nashik. So the company has inked a 98-room property in Dehradun, followed by a 60-room hotel in Pench, Maharashtra, and a 50-room facility in Nashik. So under its Lemon Tree 2.0 strategy, the group is targeting 20,000 rooms by FY28, including its development pipeline. So management is also confident of reaching this milestone ahead of schedule and has set its sights on a longer-term expansion to 30,000 to 40,000 rooms across India. CG Power subsidiary CG Semi has launched India's first outsourced semiconductor assembly and test, that is OSAT facility in Sanand, Gujarat, marking a major milestone for the Indian semiconductor ecosystem. The 7,600 crore investment spread over 5 years, while Fund 2 state-of-the-art plants G1, which is now operational, and G2, which is under construction as a JV with Renesas Electronics and Stars Microelectronics. So G1 boasts a peak capacity of 0.5 million units per day and features advanced automation and in-house labs. So G2 is set for completion in 2026, which will boost the total capacity to 14.5 million units daily. Now, this initiative is expected to generate over 5,000 jobs and drive India's chip-making self-reliance. GE Power India sought an injunction in Delhi High Court against Jaiprakash Power Ventures to block the invocation of bank guarantees worth 77.5 crore rupees. Now, this is stemming from prior contracts for the Naigri, super thermal power plant and Bina thermal power plant, valued at 775 crore rupees in 2024. So the court has initially granted the injunction in August 2025, but later permitted Jaiprakash to deposit equivalent funds, potentially allowing access to the guarantees. Now, this development highlights the ongoing tensions in the power sector amid project execution and also the payment disputes. So GE Power is reviewing additional legal options to protect its interests. In a significant boost for India's fintech space, the Securities and Exchange Board of India, or SEBI, has given the green signal for Grow's much anticipated initial public offering. Now, this approval sets the stage for one of the largest fintech listings in the country, with Grow expected to raise close to $1 billion. The Bengaluru-based wealth tech firm, known for its online discount broking and direct mutual fund investments. Now, this aims for a valuation between $7 to $8 billion. Now, this milestone is not only underscoring Grow's growth trajectory, but also marks a pivotal moment in India's financial services ecosystem. Now, even as the market faces volatility and muted retail participation, Apollo Microsystems has signed a key agreement with the Defense Research and Development Organization, that is the DRDO. This is becoming the approved production agency for multi-influence ground mines. Now, the pact also includes the transfer of technology for multi-EFP, that is explosively formed penetrator warheads, enhancing the Apollo's role in advanced defense manufacturing. Now, this move strengthens its strategic partnership with DRDO and also aligns with India's Make in India push for indigenous defense capabilities. The deal marks a significant expansion of Apollo's defense tech portfolio, positioning it for future growth in high-impact military solutions. Samvardhana Motherson International is acquiring an 81% stake in Japan-based auto component manufacturer Yutaka Gaikin for 1,615 crore rupees through its wholly owned subsidiary Motherson Global Investments BV. So the purchase from Honda Motors, which will retain a 19% stake, is set to further strengthen the partnership between Motherson and Honda. The deal also includes an 11% stake in Shin-Nichi Kogyo Company and a 100% takeover of Yutaka Auto Parts India. Also, Motherson will acquire a 20% stake in Yangshin Motherson for 6.5 crore rupees. Yutaka Gaikin's 13 global manufacturing sites enhance Motherson's reach and cross-selling capability with Japanese OEMs. The Chinkarpur Family Trust tied to Indigo co-founder Rakesh Gangwal sold a 1.3% stake in Interglobe Aviation for 2,933.4 crore rupees on August 28. Now, through NSE bulk deals, the trust offloaded 25.2 lakh shares at 5,814.7 and another 25.2 lakh at 5,825 per share, reducing the Gangwal family stake to 4.7% now, which is from 7.8%. So this follows a 5.72% stake sale in May 2025, which is part of a phased exit after Gangwal's 2022 fallout with Rahul Bhatia. So Indigo shares have dropped 5.34% to 5,727 despite a 33.6% yearly gain. Jefferies maintains a positive outlook on select NBFCs despite subdued loan demand in Q1 of FY26, where growth slowed to 18% year-on-year from 19% in the prior quarter, broadly across segments except the gold loans. So brokerage highlights Bajaj Finance, Cholamandalam Investment and Finance and Shriram Finances as top picks with up to 22% upside potential, citing expected NIM expansion of 10 to 15 basis points in FY26 and also sequential margin improvements. So Muthoot Finance is viewed as a defensive bet, which is supported by strong gold loan momentum. August 2025 auto sales in India are expected to show signs of a slowdown as buyers await the imminent GST rate cuts. So two-wheeler sales are mixed, with Eicher Motors poised to cross the 1 lakh sales mark, while TVS, Hero MotoCorp and Bajaj Auto show varied month-on-month and year-on-year changes. Passenger vehicle sales are forecast to grow modestly or remain flat, with key players like Maruti Suzuki and Tata Motors seeing minor declines or marginal growth. So commercial vehicle growth is also expected in the second half of FY26. Tractor sales are also anticipated to sustain the momentum with moderate growth. So overall, the market braces for subdued sales until tax benefits materialize. Poly Medicure, a leader in Indian medtech, will see its US exports face steep Trump tariffs, with duties now at 26 to 50% on medical devices. Now, these tariffs are said to be a significant headwind, prompting the company to cut its international revenue guidance to 5 to 10% for FY26. Now, despite this, Poly Medicure remains confident of a rebound in the coming quarters. Now, this is driven by growth avenues in renal care, infusion therapy, and digital health and AI. So its domestic revenue guidance stays strong at 30%. Sammaan Capital has raised $300 million through 8.95% senior secured social bonds maturing in 2028. So the bonds are expected to be listed on the India International Exchange, that is the IFSC. In its Q1 of FY26 earnings con call, the company outlined the plans to grow its loan book with moderate gearing up 2 to 2.5 times. Now, it also aims to improve yields by launching new Sammaan FinServe products. Digitalization is expected to lower operating costs, particularly in the affordable finance segment, helping reduce the cost-to-income ratio. So the fundraise supports Sammaan's strategy for scalable, profitable growth. Advanced Enzyme Technologies reported a robust Q1, with revenue rising 27.9%, which is nearly 28% year-on-year, and PAT also soaring 110%. So the stock has seen 2.4% uptick as trading volume spiked to 12.39 times its 30-day average. So the Thane-based enzyme maker also launched a new subsidiary, Advanced Nutrazyme, which is aimed at expanding into the B2C nutrition and wellness space in India and globally. EBITDA margins, once above 40% during COVID, have now stabilized between 30 to 33%. So the company has guided for the mid double-digit growth in FY26 and also expects sustained double-digit expansion over the next 3 to 5 years. After weeks of sideways movement, Idea Ford shares surged over 6% today, snapping out of their recent lull. Despite this bounce, the stock remains down 22% year to date and 30% over the past 12 months. So the company posted a net loss of 23.5 crore rupees in Q1 with revenue plunging 85%. So a sharp setback for India's leading unmanned aerial systems manufacturer. But the real headline lies in its order book, which has ballooned to 1,448 crore rupees, marking a staggering 964% year-on-year jump. Now, this surge is largely driven by robust government procurement and defense sector demand. At Reliance Industries' 48th annual general meeting, Chairman Mukesh Ambani confirmed that Jio is preparing to file for its IPO with plans to list by the first half of 2026, which is subject to regulatory approvals. So Ambani stated that the listing will showcase Jio's ability to create value on par with global telecom giants. So with over 500 million subscribers and strong financials, 1.28 lakh crore rupees in FY25 revenue and 64,170 crore EBITDA, Jio's IPO is expected to be a major draw for investors. The move marks a significant milestone in Reliance's digital growth strategy. In an NDTV Profit exclusive, Mahindra & Mahindra has advised its dealerships not to build inventory of high-cess SUVs ahead of the upcoming GST Council meeting. The advisory covers popular models like Thar, Thar Rocks, XUV 700, Scorpio Classic, Scorpio N and Bolero. So all attracting a 20 to 22% cess on top of 28% of GST. So pushing the total tax outflow to nearly 50%. So the GOM has proposed a special 40% rate on high-end cars with an additional levy possibly replacing the cess. So M&M has recommended stocking only for retail purposes while dealers await the clarity on tax changes. NALCO has unveiled a major expansion plan involving 30,000 crores of capital expenditure over the next 4 to 5 years, focusing on mining, alumina refining, aluminium smelting and power generation. A new bauxite mine is also slated for commissioning by June 2026 to boost the mining capacity by 3.5 million tons annually. Alumina refining capacity will also expand to over 3.1 million tons, while aluminium smelting capacity is also set to more than double to 960,000 tons per year. Adani Power Limited has secured a letter of award from Bihar State Power Generation Company for a 25-year contract to supply electricity from a 2400 megawatt ultra supercritical thermal power plant in Pirpenti, Bhagalpur district, Bihar. So the 3 billion greenfield project will supply power to North and South Bihar power distribution companies at a tariff of 6.075 per kilowatt hour, the lowest bid in a competitive auction. So the project is expected to generate 10,000 to 12,000 jobs during construction and about 3,000 permanent jobs when operational, contributing substantially to power availability and local economic growth. Head Digital Works operator of the popular Rummy platform A23 has filed the first legal challenge against India's new Promotion and Regulation of Online Gaming Act 2025. The petition in Karnataka High Court argues the law's blanket ban on real money online games, including skill games like Rummy and poker, violates constitutional rights, business freedom, free speech and equality. So the filing claims disproportional penalties, lack of due process and unconstitutional delegation of power. It also wants the law threatens hundreds of thousands of jobs, legitimate businesses and India's $5 trillion economic goal by pushing players to offshore the illegal operators. The hearing is scheduled for August 30, 2025. India and China have agreed to resume direct flights for the first time since 2020. Now, this is marking a significant step in restoring the bilateral ties. The resumption is expected to boost tourism, trade, and investment between the two nations. Airlines including Air India, Indigo, and leading Chinese carriers have applied for flight slots pending regulatory approvals expected in time for the winter 2025 schedule. Alongside direct flights, both countries are reopening border trade at 3 points and easing visa processes. Shapurji Mistry has resigned as chairman of Afcon's Infrastructure, the flagship company of the Shapurji Pallonji Group, after serving as chairman for 13 years and on the board for over 25 years. He will assume the honorary role of chairman emeritus, providing guidance and mentorship is needed. The Mumbai bench of India's bankruptcy court has admitted payment solutions provider AGS Transact Technologies into insolvency proceedings following a plea by Operational Creditor Securities India Private over unpaid dues of rupees 2.4 crore rupees. The court has appointed Brijendra Kumar Mishra as the interim resolution professional who will now manage the company's operations. A moratorium has been imposed restricting legal actions and asset transfers until the insolvency process concludes or a resolution plan is approved. Biocon Executive Chairperson Kiran Mazumdar-Shaw has raised urgent concerns over Bengaluru's deteriorating infrastructure. So in a social media post on platform X, she praised the city's talent and also the climate, but lamented its poor infrastructure, highlighting issues like garbage, debris and damaged roads. Shaw called on civic authorities and political leaders, including Karnataka Deputy Chief Minister D.K. Shivkumar and the BBMP, to take decisive action. She emphasized Bengaluru's potential, urging collective effort to transform the city into one of the best globally. A devastating cloudburst struck Uttarakhand's Rudraprayag and Chamoli districts, trapping several families under debris and leaving many injured. Rudraprayag reports 6 missing as the Alaknanda and Mandakini rivers surge, flooding homes. Chief Minister Pushkar Singh Dhami says that rescue operations are underway on a war footing with NDRF and SDRF teams deployed. In a significant move, former Reserve Bank of India Governor Urjit Patel has been appointed Executive Director at the International Monetary Fund for a 3-year term. Patel, who served as RBI Governor from 2016 to 2018, succeeds KV Subramaniam and will represent India, Bangladesh, Bhutan and Sri Lanka on the IMF's Executive Board. Speaking at the India-Japan Joint Economic Forum in Tokyo, Prime Minister Narendra Modi issues an invitation to come to Make in India and make for the world. So the PM is in Japan on a 2-day visit, during which he will hold summit talks with his counterpart Shigeru Ishiba. Ahmad al-Rahawi, the Prime Minister of the Iran-backed Houthi rebels, was killed in an Israeli airstrike on an apartment in Sanaa's Bed Boz neighborhood, according to Yemeni media. Several companions were also reported dead in the precision strike, separate from another that targeted 10 senior Houthi officials, including the defense minister and also the chief of staff, gathered outside Sanaa for Abdul Malik al-Houthi's speech. So the attacks, confirmed by the IDF as hits on military sites, occurred amid escalating Houthi missile and drone assaults on Israel in solidarity with Gaza. Houthi officials denied the losses among leaders, vowing retaliation, while Israel described the operation as responses to the repeated threats. Thailand's Constitutional Court has ousted former Prime Minister for ethical breaches in a leaked phone call with Cambodia's former leader Hun Sen. The call, addressing a deadly border dispute, sparked outrage for her deferential tone and criticism of a Thai military commander. 4-time Tour de France champion Chris Froome has been airlifted to hospital following a serious crash during training. The incident occurred earlier today, with reports indicating the 40-year-old British cyclist sustained injuries requiring immediate medical attention. Details on his condition remain limited from Froome's teams, as has confirmed that he is receiving treatment. The cycling community is also rallying in support, awaiting further updates. We'll bring you more as the story develops. In athletics, India's Neeraj Chopra secured second place at the 2025 Diamond League final in Zurich with the best throw of 85.01 meters. The two-time Olympic medalist struggled with consistency, managing only 3 legal throws, but also climbed from third with a final effort to edge out Kishon Valcourt. Germany's Julian Weber dominated, claiming his maiden title with a stunning 91.57 meters throw, a personal best. Chopra, the 2022 champion, now sets his sights on defending his world title in Tokyo next month. Former US Open champion Daniil Medvedev has been fined $42,500 for unsportsmanlike conduct and also racket abuse during his first round loss to Benjamin Bonzi. The incident occurred when a photographer disrupted Bonzi's serve, prompting umpire to grant another first serve. Medvedev's heated outburst, including insults and inciting the crowd, led to a 6-minute delay. The fine, nearly 40% of his $110,000 prize money, includes $30,000 for unsportsmanlike conduct and $12,500 for smashing his racket. Bonzi won the chaotic match in 5 sets. Well, with that, viewers, it's a wrap on this edition of Market Express. But please stay tuned, as there's a lot of action for you all on the other side of the break.
Love makes you go the distance. Unlimited Love. The B6 Pack 2 starts at 21.9 lakh.
भाई बिजनेस रजिस्टर हो गया?
यस, सिर्फ करंट अकाउंट बाकी है।
करंट अकाउंट के लिए तो SBI बेस्ट है। यूएस मशीन मिलेगा और QR कोड भी। बेस्ट कैश डिपॉजिट लिमिट, ईस्ट और वेस्ट इंडस्ट्री में बेस्ट।
सबको पता है।
SBI करंट अकाउंट बेस्ट है, सबको पता है।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello, Moto.
The markets fall for the third consecutive session, with the Nifty tumbling 1.7% for the week. M&M and Reliance Industries are the biggest drags in the Nifty. Mid-caps corrected for the sixth session in a row, with the Nifty Mid-Cap 150 down 0.5%. The rupee tumbles past 88 to an all-time low as 50% US tariffs hit home hard. The rupee has fallen 3% so far this year, and the RBI intervenes to stem the fall. Speaking at the India-Japan Joint Economic Forum in Tokyo, Prime Minister Narendra Modi issues an invitation to come make in India and make for the world. The Prime Minister is in Japan on a 2-day visit, during which he will hold summit talks with his counterpart Shigeru Ishiba. It's a major reset in relations between India and China, as the Prime Minister will head to China tomorrow to attend the SCO summit. He will also meet Russian President Putin in Tianjin. A group of 8 opposition-run states demand support against revenue loss to states as the GST Council mulls reforms. States want an additional levy on sin and luxury goods and guaranteed compensation mechanism for at least 5 years. Reliance Industries Chairman Mukesh Ambani says Jio will come out with its IPO in the first half of 26. He spoke at the company's AGM held earlier today. Commuters in Mumbai are stranded for hours as Maratha leader Jarange Patil's protest march demanding reservation chokes the city's arterial roads. Central Railways asked Mumbaikars to avoid taking trains from CST, one of the key routes for lakhs of people. India's GDP grows at a fast rate of 7.8% in the first quarter of the fiscal, despite global uncertainties and tariff headwinds. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's take a look at how the markets fared today. We saw equities remaining on edge today as geopolitical tensions weighed heavily on investor sentiment. Benchmark indices saw a sharp decline, largely driven by weakness in Reliance Industries ahead of its AGM. The broader markets mirrored the downtrend, with mid-cap and small-cap stocks also slipping into the red. In a largely somber trading session, the Nifty FMCG index stood out as the lone gainer, buoyed by strong performances from names like ITC, Britannia and Mari. Now let's bring in Anushi for a deeper dive into what's driving this volatility and what investors should watch out for next.
So today's trade, what we are looking at is, Nifty, the benchmark indices slightly better off than the broader markets, but still that weakness we had seen throughout the day. While in terms of sectoral indices, what has happened is Nifty, FMCG and media were the only sectors in green, while others all traded in red. But it's the weekly action also which is more important to keep a hold of. Now, in terms of the broader markets, they underperformed benchmark indices for this 1 week period. Nifty, in fact, falling over 1.7% for the week that we are looking at. With this, it has also snapped its 2-week gaining streak that we are seeing. Nifty declined in 8 of the 9 sessions now that we have looked at. In fact, if you talk about the broader markets, Nifty mid-cap 150 fell over 3% for the week, snapping its 2-week gaining streak, while Nifty small-cap 250 fell over 3% for the week, dragged by stocks like Angel One, CDSL and Deepak Fertilizers as well. In terms of sectoral indices, all the sectoral indices lose in trade. This is barring the Nifty FMCG for the week. In fact, Nifty Realty, one of the top losers over here, losing about 4% and as the worst performing sector of the week that we are looking at. Nifty Media, Metals, Autos, they have now snapped their 3-week gaining streak as well. Nifty Pharma, IT, Oil and Gas, Realty have snapped their 2-week gaining streak that we are looking at. So this is the overall picture in terms of how the benchmark, the broader markets and the sectoral indices have performed over the week and through the day as well.
Thanks for that, Anushi. Meanwhile, the rupee also plunged to a historic low today, breaching the 88 per dollar threshold for the first time ever as markets reel from the impact of Trump's 50% tariffs on Indian exports. The rupee briefly touched 88.20, marking its weakest level on record before staging a modest rebound thanks to timely intervention by the RBI. The currency has already slipped 3% this year, making it the worst performing currency in Asia, a reflection of mounting trade tensions and unease. For a deeper look into what's driving this volatility and how it could ripple through the economy, Shubhana Sheikh now joining us with all of the details. Shubhana, over to you.
Sure. So yes, as you've rightly said, the Indian rupee has hit a record closing low of 88.21 against the US dollar. Now this was down 58 paise from its closing on Thursday, which was 87.63. Now overall, during the trade today, the rupee actually fell as much as 68 paise. Now it had recouped a little because of the Reserve Bank of India's intervention, but largely the trigger has been the US slapping additional 25% tariffs on Indian goods, taking it to a total of 50% tariffs, which has actually dampened investor demand. What economists are also saying that they're expecting this impact to actually trim India's GDP by 60 to 80 basis points, and this has also come at a time when FPI outflows are actually about $9.7 billion. Now, all of this has actually led to an impact, has weighed on the Indian rupee, which is also, it's largely India's worst performing currency right now, Asia's worst performing currency, and also rupee also sank to a low, against the Chinese offshore yuan. That is also another factor which is leading to export competitiveness for goods, which are bound for US markets. Now what experts are telling us, traders are telling us, that rupee could actually hit $89 per mark in the coming future, in the near term. That is what is the expectation.
Right, Shobhana, thank you so much for that. This is as the rupee has slipped below the 88 per dollar mark. And sources to NDTV Profit are saying that India's export promotion mission will soon go to cabinet for approval, aiming to boost new markets like Australia, China and the Middle East. But before I get into that further, let me quickly go across to my colleague Pallavi, who's standing by. Pallavi, we understand the GDP data for FY26 has actually been released. The GDP, we understand, has grown by 7.8% in the first quarter, and this is the highest in 5 quarters.
Absolutely. This is a big positive surprise that we're getting on the economy front. And let's remember that this is, in a week of immense volatility and economic uncertainty. So economist estimates had in fact pegged headline GDP growth at about 6.5 to 6.7%. The figure is significantly higher than that. Let's also take a very quick look at some of the key internals. Now, first up, the primary sector, which comprises agriculture and mining, has grown by 2.8%, with agri growing at 3.7% and mining having seen a contraction of minus 3.1%, not entirely unexpected given the trajectory of the southwest monsoons we have seen so far affecting mining. Importantly, the manufacturing sector has shown fairly robust growth at 7.7%, might have been aided on the back of lower commodity prices. Electricity and utilities grew by just about 0.5%, while construction grew by 7.6% on an annual basis. Moving to the services sector, trade, hotels and transport grew by 8.6%, while financial, real estate and professional services grew by 9.5%. Now coming to the quarterly estimates of expenditure components, private consumption expenditure importantly grew by 7% on an annual basis, while government consumption expenditure grew by 7.4% and gross fixed capital formation grew by 7.8%. For his first views on today's figures, let's quickly go across to Kaushik Das, Chief Economist at Deutsche Bank. So thank you so very much for joining us. Quite a bit of a positive surprise here.
Yeah, hi Pallavi. I think nobody was expecting this kind of a number, and if you saw the highest estimate in Bloomberg, this is even higher than that. So obviously this has come as a big surprise, and we have to see the internals. You mentioned some of these numbers, and if you see private consumption, it's grown at 7% year on year. Investment, is growing at close to 8%. Government consumption also has grown at a very, robust rate of 7.5%. So all these numbers look strong, but couple of nuances that you have to keep in mind. One is that this is against a base which was, already, low from last year. Growth had started slowing down last year in April, June. And then July, September, it had already come down quite a lot. So we had a favorable base. So that's one thing which has helped, because these are all year-on-year numbers. The second thing is we have to look at the nominal GDP number. But my guess is that the GDP deflator, which you calculate using CPI and WPI, that's fallen quite a lot. So nominal GDP growth minus that deflator, you could have had real GDP growth coming higher because of the low deflator. So that has happened. And the third point is that subsidy payments in April, June was lower by 7-8% compared to the previous year, April, June. So that would have pushed up the real GDP growth higher than real GVA. But if I'm not mistaken, real GVA growth has also come at 7.6%. That's also very high compared to the 6.5% that people were expecting. But this is just April, June, and this is the backward-looking number. The forward-looking number for October, December, January, March will show what kind of impact we are going to have from this 50% tariff if it were to stay. So those issues will come up in the future. But the April-June number definitely a surprise to the upside, and that's good to start with the fiscal year number being higher than 7%.
Okay, so just a little bit more on the deflator and the impact of the deflator on today's numbers. Just help us understand, we have seen fairly low CPI as well as WPI, and that's a trend that is expected to persist at least in the ongoing quarter and probably the one after that as well, though the RBI does expect inflation to see some sort of an uptick in Q4. So can we continue to see some of the benefit from the deflator effect passing on in the upcoming quarters as well?
Yeah, that's possible. I mean, if you remember FY24, we ended up getting a 9% real GDP growth. The economist community had started forecasting that particular FY24 year at 6.5 or 6%. And then we went up to 8.2 in the initial number. And then finally, we got a 9% number on real GDP because the deflator was very low, and that pushed up the real GDP growth number. So this time around, I've been saying for some time that India probably, you could get an upside surprise despite all these noises of tariff and this, that, which is happening. You probably could end up getting close to 7% growth, purely from the point of view of the low deflator. April, June, WPI inflation averages 0.3%. And WPI inflation is given about 65-70% weight in the GDP deflator when they calculate. And CPI inflation had also come down to 2.7% average in April, June. So I'm guessing the deflator would have been quite low, below 2%. So even if you get, say, the nominal GDP at 9.5, you could end up getting 7.5% on real GDP because of the low deflator, even if nominal GDP comes down. So yes, it can happen in July, September as well. And remember, July, September last year, we had a real GDP growth of 5.6%. So the base is very positive. On top of that, the inflation number for July, September for CPI is looking like to be 2% or 2.1%. WPI will remain, similar 0.2, 0.3. So you could again end up with a low deflator and a high real GDP, and therefore, for the year as a whole, despite the tariff risk, you could end up getting GDP growth closer to 7%. And, you could question whether that is the true reflection of momentum in the economy or not, but as far as numbers go, India probably could get close to 7% growth this year.
Okay, all right. So 7% is again on the higher side of what was being estimated so far. Post today's numbers, would it be safe to say that we can expect some revisions, or do you think, given the amount of uncertainty and volatility, given the whole host of factors, including tariffs that you spoke about, it's too early, do you think, to start raising the full year's forecast? Also, what are you making of the current high-frequency indicators and economic momentum in the ongoing quarter?
So yeah, July, September, our growth forecast was 6.7 as of now. We'll obviously adjust based on new numbers that we get for the whole quarter. quarter is not over yet, obviously, but we had 6.7. And as I told you, that July-September quarter is a very positive, supportive base from last year. So April to September, anyway, we thought growth would be on the comfortable side. We don't need to worry. The real challenge will start from October, December, when this 50% tariff, if it were to continue, the front loading that had happened in April to July or August, that runs its course on exports. You see exports slowing down. What could help at that point of time is the GST rationalization, which probably would kick in from October. So November, December, that could support consumption as an offset to the tariff, of 50%, which would bring down consumption and exports to some extent. But overall, I think India should be okay to get a growth which is closer to 7% this year. I would kind of wait for kind of numbers to come out and see the nuances, the revisions. We have also seen that in the past, a lot of revisions have taken place, very sizable revisions, which can change the kind of view about the growth outlook. But let me put it, if I cut through all this number kind of jargon and noise, what I would say is that April, June has surprised to the upside. July, September probably would also hold up well. The real challenge will be second half of the fiscal year, for which a lot of policy actions have already been taken from the RBI side, cutting rates 100 basis points. Liquidity has been kept flush and will continue to be so. CRR cut is coming from September to November, so that will also help. GST rationalization is already in motion and will happen by October. So I think India should be okay, and we also believe that this 50% tariff will be brought down as negotiations happen. So overall, I think India would kind of emerge as one of the relatively better countries on the growth outlook, despite all this tariff fiasco that is going on. And the outlook for 2020 FY27 will also look like growth would be holding up between 6.5% to 7%.
Right. Thank you so much, sir, for taking time out to speak to us. And we will circle back to you eventually once you do have some time to delve deeper into today's numbers. But, Sanjana, there's no two ways about it. Today's numbers are a massive positive surprise, and especially just given the amount of economic uncertainty and volatility that we've been operating in. These numbers do provide a fairly large boost to sentiment as well as bode well for the outlook ahead.
Absolutely, Pallavi. I think we were just talking about markets. We were talking about the rupee and its closing, and then came the news, and very positive one at that, about the GDP. So definitely welcome, and hoping that that trend of positive sentiment actually continues. Let's take a look at the Prime Minister and where he is in his Japan and China trip. Remember, he is in Japan on a 2-day visit to attend the India-Japan Annual Summit in Tokyo. Prime Minister Modi and Japanese Prime Minister Shigeru Ishiba will review the entire spectrum of bilateral ties and discuss ways to take forward the next phase of the special strategic and global partnership. The Prime Minister received an enthusiastic welcome, and in fact, these are the visuals that are coming in live as we speak from the Indian diaspora in Japan. Kathak and classical music performances were held as well. The focus of this visit will be on expanding cooperation in defense and security, trade and economy, technology and innovation. And India will also look to advance cooperation in new and emerging technologies, including AI and semiconductors. Prime Minister Modi will travel to China on Saturday to attend the Shanghai Cooperation Organization Summit in Tianjin at the invitation of President Xi Jinping, after which he will hold bilateral meetings with the Chinese President on Sunday and Russian President Vladimir Putin on Monday. And speaking earlier today, the Prime Minister said India will open up semiconductors for private investment, just as it did with defense and space, and highlighted the recent S&P rating upgrade as global recognition of India's potential. Let's listen in.
S&P ग्लोबल ने 2 दशक बाद भारत के क्रेडिट रेटिंग अपग्रेड किए हैं. The world is not just watching India. It is counting on India.
And India and Japan have had a cultural and trade connect historically, with the country owning Maruti Suzuki is a prime example of a successful Indo-Japan partnership. Let's go across live to former Japan Ambassador Deepa Gopalan Vadva, now joining us live. Good evening, Ambassador. Welcome to NDTV Profit, and thanks so much for taking the time. I just wanted to ask you and start off, looking at India and the way it is strategically at this point of time carrying out these different diplomatic routes. How are you actually viewing this trip to Japan, especially in light of the kind of geopolitical volatility that we're seeing at the moment?
Well, without doubt, I mean, everybody's looking at the Prime Minister's trip to Asia, both Japan and China, in the context of the big geopolitical and geoeconomic changes that we are seeing, the flux that there is. But I must say that in the context of Japan, that we do have an institution of annual summits between our prime ministers. And this is really the 15th summit, and Prime Minister Modi himself has been there on several occasions for these summits. So in a way, it is a continuum. But I'm sure what is going to happen is that the changes in the world are going to be discussed there, and particularly how both countries, in the case of Japan and India, have been affected by the decisions coming out of the United States.
Okay. And how do you think this relationship and the role that it will play in shaping the future of a very strong Asia, and both in economic integration and security cooperation?
There's already a history, actually, of both, of security cooperation as well as economic integration. And this goes back a long way, in fact, almost 2 decades back, when we set up a very special relationship, and we call it a special global and strategic partnership. And I think these are 2 very important pillars of the relationship, that is security as well as economy. But what has happened is, I think what we do need to is reinvigorate it and, kind of reboot it, given the fact that there have been so many changes in the world in terms of technology. There are all kinds of new technologies there. In terms of defense cooperation, I think we moved a lot from the time when we began. There have been a lot of agreements over the past years. So I think what we're trying to do is to relook at the relationship and to deepen it, which is what we've always done in the context of Japan.
All right. Okay. And if I were to, ask you what the future sectors between India and Japan, what sectors would you say hold the most potential?
Well, today, very interestingly, and I think you just mentioned it, because the first official program that the Prime Minister had was what is called the Business Leaders Forum, or I think you're calling it the Joint Economic Forum. And I think that gave an opportunity for both him and Prime Minister Ishiba to talk about the priorities that they see in the economic relationship. At the Business Leaders Forum, as the name indicates, you have business representatives at the highest companies, the heads of the corporates from both countries, who meet every time there is a summit between the 2 prime ministers. And in looking at the sectors that they want to focus on, Prime Minister talked about manufacturing, of course, which is something that we know about. But he was talking about really the experience that we've had in the auto sector. That is with the Suzuki story everybody in India knows. How do we replicate it in other sectors? So, the whole story of the importance of manufacturing, inviting Japanese companies to come to India, to manufacture here, and interestingly, to manufacture not only for the vast Indian market, but also for exports. So I think one element of what he said was very interesting, because he said, let this be sort of the gateway to the BRICS countries, to the gateway to Africa, that you manufacture in India. And of course, again, the very obvious thing that, both prime ministers talked about was the technological strengths of Japan and the talent strengths of India, and if they were to combine, how the difference that they would make to the world. So I think both of them have talked about it. And then you are looking at high tech, and when you're looking at high tech, looking at the whole works, you're looking at semiconductors, you're looking at AI, you're looking at critical minerals, you're looking at critical technologies. So, I just saw at the backdrop as you started this program that there've been exchange of a lot of agreements. And I think these agreements are going to cover a lot of these areas that we're talking about.
Thank you so much for that, Ambassador Deepa Gopalan Vadva. We'll continue tracking the Prime Minister's trip, a very, very significant one at that, and bring you all of the key developments.
Thank you.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or, all of these other things?
As a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
सबसे पहले मैं प्रधानमंत्री इशिबा का उनके आत्मीयता भरे शब्दों और गर्मजोशी भरे स्वागत के लिए हार्दिक आभार व्यक्त करता हूं। आज हमारी चर्चा प्रोडक्टिव भी थी और पर्पजफुल भी थी। हम दोनों एकमत है कि विश्व की दो बड़ी अर्थव्यवस्थाओं और जीवंत लोकतंत्रों के रूप में हमारी साझेदारी केवल दोनों देशों के लिए ही नहीं बल्कि वैश्विक शांति और स्थिरता के लिए भी अत्यंत महत्वपूर्ण है। स्ट्रांग डेमोक्रेसीज आर नेचुरल पार्टनर्स इन शेपिंग अ बेटर वर्ल्ड। फ्रेंड्स, आज हमने अपनी स्पेशल स्ट्रेटेजिक एंड ग्लोबल पार्टनरशिप में एक नए और सुनहरे अध्याय की मजबूत नींव रखी है। हमने अगले दशक के लिए एक रोड मैप बनाया है। हमारे विजन के केंद्र में इन्वेस्टमेंट, इनोवेशन, इकोनॉमिक सिक्योरिटी, एनवायरमेंट, टेक्नोलॉजी, हेल्थ, मोबिलिटी, पीपल टू पीपल एक्सचेंजेस एंड स्टेट प्रीफेक्चर पार्टनरशिप, ये प्रमुख बातें हैं। हमने अगले 10 वर्षों में जापान से भारत में 10 ट्रिलियन येन निवेश का लक्ष्य निर्धारित किया है। भारत और जापान के स्मॉल एंड मीडियम एंटरप्राइजेस और स्टार्टअप्स को जोड़ने पर विशेष बल दिया जाएगा। भारत और जापान बिजनेस फोरम में भी मैंने जापानी कंपनियों को कहा, मेक इन इंडिया, मेक फॉर द वर्ल्ड। फ्रेंड्स, हमारा ज्वाइंट क्रेडिट मैकेनिज्म ऊर्जा के लिए एक बड़ी जीत है। इट शोज दैट आवर ग्रीन पार्टनरशिप is as strong as our economic partnership. इसी दिशा में हम सस्टेनेबल फ्यूल्स इनिशिएटिव्स और बैटरी सप्लाई चेन पार्टनरशिप भी शुरू कर रहे हैं। हम इकोनॉमिक सिक्योरिटी कोऑपरेशन इनिशिएटिव लॉन्च कर रहे हैं। इसके तहत क्रिटिकल और स्ट्रेटेजिक क्षेत्रों में एक व्यापक अप्रोच के साथ आगे बढ़ा जाएगा। हाई टेक्नोलॉजी के क्षेत्र में सहयोग हम दोनों की प्राथमिकता है। इस संदर्भ में डिजिटल पार्टनरशिप 2.0 और एआई कोऑपरेशन इनिशिएटिव लिया जा रहा है। सेमीकंडक्टर्स और रेयर अर्थ मिनरल्स हमारे एजेंडे में सबसे ऊपर रहेंगे। फ्रेंड्स, हम मानते हैं कि जापानी टेक्नोलॉजी एंड इंडियन टैलेंट आर अ विनिंग कॉम्बिनेशन। जहां हम हाई स्पीड रेल पर काम कर रहे हैं, वहीं नेक्स्ट जनरेशन मोबिलिटी पार्टनरशिप के अंतर्गत पोर्ट्स, एविएशन और शिप बिल्डिंग जैसे क्षेत्रों में भी तेजी से प्रगति करेंगे। चंद्रयान 5 मिशन में सहयोग के लिए इसरो और जाक्सा में बनी सहमति का हम स्वागत करते हैं। हमारी सक्रिय भागीदारी पृथ्वी की सीमाओं को पार कर अंतरिक्ष में भी मानवता की प्रगति का प्रतीक बनेगी। फ्रेंड्स, ह्यूमन रिसोर्स एक्सचेंज इसके एक्शन प्लान के तहत अगले 5 वर्षों में अलग अलग क्षेत्रों में दोनों तरफ से 5 लाख लोगों के आदान प्रदान को प्रोत्साहन दिया जाएगा। इसमें 50,000 स्किल्ड भारतीय जापान के अर्थव्यवस्था में सक्रिय योगदान देंगे। भारत और जापान की भागीदारी दिल्ली और टोक्यो तक ही सीमित नहीं रहेगी। अब भारतीय स्टेट्स और जापानी प्रीफेक्चर्स इसके बीच संस्थागत सहयोग के माध्यम से जुड़ाव और गहरा होगा। इससे ट्रेड, टूरिज्म, एजुकेशन एंड कल्चरल एक्सचेंजेस के नए द्वार खुलेंगे। फ्रेंड्स, भारत और जापान एक फ्री, ओपन, पीसफुल, प्रॉस्परस एंड रूल्स बेस्ड इंडो पैसिफिक के प्रति पूरी तरह से प्रतिबद्ध है। आतंकवाद और साइबर सिक्योरिटी को लेकर हमारी चिंताएं समान है। डिफेंस और मैरीटाइम सिक्योरिटी से हमारे साझे हित जुड़े हुए हैं। हमने निर्णय किया है कि डिफेंस इंडस्ट्री और इनोवेशन के क्षेत्र में आपसी सहयोग को और सशक्त किया जाएगा। फ्रेंड्स, India and Japan partnership is rooted in mutual trust, reflects our national priorities, and is shaped by our shared values.